selling it to the open market for big profits. He goes on to say they don't care how many people in Ukraine are being killed by the Russian war machine. Because of this, I will be substantially raising the tariff paid by India to the USA. So now there's a whole different level of aggression which has come in what Trump has been saying. But this time, India has not been silent. Just a short while after the statement from US President Donald Trump, I think less than an hour later, there was a statement from the Ministry of External Affairs where India has very clearly called out the hypocrisy of what Trump is saying. He says India is facing criticism from the US and EU for importing Russian oil. India started importing as if traditional supplies were redirected to Europe. US initially supported India's imports to stabilize global energy markets. We go on to say India's imports aim to keep energy costs affordable for its citizens. Same nations criticizing India also trade with Russia. Here is where India hits back. We talk about how in 2024, EU's trade with Russia reached 67.5 billion euros in goods. In 2023, US trade with Russia reached 17.2 billion euros in services. EU LNG imports from Russia hit record 16.5 million tons in 2024. It's not just the EU, by the way, it's US as well. So EU-Russia trade includes energy, fertilizers, chemicals and machinery. But it's the US that is also importing from Russia while preaching to the world. US imports Russian uranium, palladium, fertilizers, chemicals. So what about that? Criticizing India is unjustified and unreasonable. As we have seen, measured response coming in from India in the face of what is completely not making sense anymore in terms of a tirade. But this increased tariff threat, is that going to weigh on markets is what we're going to talk about today. Let's just take you quickly through what has happened overnight as well. It was a winning day on Wall Street as markets surged in trade after poor jobs data came in. You had the S&P 500, Nasdaq and Dow Jones all up in the green. In US markets as well. Bond yields remain pretty much steady. The 10-year is at 4.2%. Remember, this is a market that was shaken up by the jobs data on Friday, so you're seeing a bit of recovery in Monday trade. Prices of crude did dip after OPEC Plus has announced an increase in production, so about $68 a barrel for Brent. Asian markets, though, have opened in the green largely, but let me just pull up the implied open for India, and that's showing flat kind of a position. So, guys, India, I don't think Indian markets are going to take these threats very seriously. But the good thing is that India has called out the hypocrisy that, hey, you're also importing from Russia.
Yeah, I think that's the bigger thing. For the longest time, there has been this conversation around how the response from India, when is it coming, Alex, when is it not, etc. There is a very matter-of-facted, factual, diplomatic response that India has given. There is no post on social media, no untoward comment by any minister, etc. It's an official statement that this is what our stance is because of these reasons, and long-standing relationships being respected. So tackling all sides or all corners of the square with one single statement. India also realizes that they do want a relationship with the US. I mean, this is one president trying to do what he's doing, but India wants the relationship with the US because it's also a relationship that has blossomed over the number of years.
No, and you make a very important point in the realm of diplomacy. I think a lot of people on social media, armchair experts, so to speak, are saying, why does the Prime Minister not make a statement? Or why does whoever else, the oil minister, not go out in front of the cameras and speak? But then why should they? Why should you devolve into a certain realm of name calling and politics that you don't want to get into at the global stage?
To my mind, this was a perfect statement made in the best diplomatic way,
with
tackling
facts.
all with facts and attack, or rather responding to every particular thing that has been going out there.
But will there be an impact? Let's go across to Arvind Sanga, who's joining us for more on this. He's managing partner at Geosphere Capital. Gaurav Sansanwal, fellow at CSIS, also joining in this morning. So we're trying to understand all angles of this. Arvind, let me start with your take of what's been happening. The last tariff rate we know is 25% plus penalties. Now, the penalties bit is what is going to be looking like maybe increasing from the rhetoric that we've heard from US President Trump overnight.
I suspect as bark is worse than his bite. There is absolutely very little interest on the part of President Trump to have oil prices go up dramatically. If India's 2 million barrels that it's buying from Russia were to stop, and if Russia were able to maybe divert even 500,000 somewhere else, that would still be 1 million barrels plus disappearing off the market. Oil prices would be up $15 in a heartbeat. I don't think President Trump wants that while he's trying to get Fed to lower rates. So this is a sideshow. If he were really interested, he would be going after all the buyers, China, India, China, everybody. But I think this is more President Trump's pet peeve that India will not agree to his clearly ludicrous claim that he was single-handedly brought about that ceasefire between India and Pakistan. So I think the Indian government has done the right thing. I think calling his bluff is the right way, because I don't think Trump wants oil prices to go up the way they would if he were to follow through.
Point that you make, Arvind. Hi, morning. Gaurav, I'm just coming to you on this one. Do as I say, not as I do. This seems to be the issue, because ultimately you have US trade, you have major heavy metals that are being pulled, palladium, uranium, and they have much more nuclear power generation than practically anybody else, the US. And so therefore this is an important resource. So how could they possibly say don't buy oil from a country that we're importing from as well?
No, absolutely. I think, and we must remember that the Biden administration acknowledged the fact that India buying oil from Russia was critical to maintaining global price stability. And because of the fact that commodity prices of almost about everything are linked to energy and oil, that was the idea, to have a price cap and to continue buying. So I think, given the fact that this has just come out now in the relationship, I think tells us that this is in the context of the negotiations that are ongoing between the two countries. And I agree that it should not be seen as a knee-jerk, as something that deserves a knee-jerk reaction, because these things are structural, and maintaining global price stability is important. So given the fact that even if India tries to reduce its dependence on Russian oil, the beneficiaries are likely to be the Middle Eastern powers and not the US so much. Because price matters in this market. And so market and price decides this. And so taking that into account, this is surely in the context of the negotiation that's going on. And I think while we are likely to hear a little bit more on this until the two sides can sit down and do a handshake, it is not going to critically alter what has been going on, because it's market driven.
Arvind, good evening. And Neeraj here, and just trying to understand how does an investor think about all of these things, because it seems that the pitch, which is already shrill, could get even louder before an eventual handshake, as Gaurav said, does get in. So does the investor become nervous, or does the investor use this nervousness, if any, as an investing opportunity? Because frankly, India is not a tiny toon penny change economy. It's amongst the top 5. You antagonize relationships with India as well at your own peril.
Well, the problem with President Trump is he has taken a bullying approach to a lot of countries, whether it is Brazil, or it's the EU, and now it's India's turn. And so my assumption is that eventually there will be a deal. Hopefully, the deal will be much more reasonable than where we are today. But I think I think that there would be an opportunity. But am I dying to buy companies which are export dependent? No, unless they sell off a lot more. I'm more interested in more the domestic facing sectors, which are kind of not impacted by this. And assuming that things will settle down, there's still substantial new tariffs coming on things like pharmaceuticals, which have nothing to do with India. So that's going to hurt the Indian pharma industry. Let's take as an example. The Indian IT industry has its own challenges with AI. So I think that we have to, separate the signal from the noise. And the signal is that there are challenges for certain subsectors which are independent of the India-US situation. And there are sectors that are not as impacted. So that's the distinction that we are trying to do.
So that's
very well put, by the way.
It's very well put. And Arvind, I guess for now, that's the final word on what this is all about. And I guess, as Gaurav has said, once the handshake gets done, a lot of this might just dissipate. Thanks so much for joining us this morning, gentlemen, and for that perspective. Now, in the realm of trade, in the realm of business, and particularly in the realm of sport, if there's one thing that you know about India, it's that you can't count us out. And of course, practically everybody knows what I'm talking about. I have two words for you, the both of you, Mohammad Siraj.
Well, okay, let's put it this way. The showstopper was Mohammad Siraj, what he did. Let's not forget that after a really long time in the series, Prasidh Krishna came in and took 4 wickets, right, including the lovely Yorker. Let's also not forget that Washington Sundar's blistering knock in the second innings really gave us the total so that we could have that extra ammo of those 6 runs. 6 small margin, right? 6 runs by which we won. But broadly, if you just take your mind back to the series, right? There's a series without Virat Kohli, without Rohit Sharma, with an injured Rishabh Pant, without Bumrah for a couple of matches. And yet, it was the narrowest of series. The loss that we had was compensated by an equally large win. The narrow win that we had was compensated by almost equally narrow loss. And the 5th match was just draw. So it was quite historic in more ways than one.
And who says test match cricket is dead, right? Yeah. Crores of people tuned in online watching
when my mom and my dad, both 75, come in and hug me and say, hey, hum jeet gaye. That's something, right?
Oh, wow. That excitement.
I heard the cheers and the crackers all around, and I'm basking in all the enjoyment that I'm seeing. Not that I've followed it very closely, but then that's great. What an evening of news, though, and so much that we have to capture today. And so before Alex comes in with his, trade recap from yesterday, that trade recap is feeling like it was 100 years ago.
100%.
Because
and that's been the case recently as well, right?
in the interim, and Financial has exited its entire stake in 197. You've had IndusInd Bank finally got its new boss in Rajiv Anand, name that was doing the rounds. You've had Tata Capital's IPO details out. And so much more. And of course, Anil Ambani will be going to the Enforcement Directorate today, and we don't know what happens after that.
Unless he asks for an extension, which he can do apparently 2 hours before the meeting.
Yeah, he can, even up to an hour is what, our Bureau Chief Shimi Chaudhary says. Even an hour before, he can call and say that, hey, I want an extension. I mean, imagine that.
First, I'm feeling a little bit under the weather.
Those are the Monday morning calls we get.
Not from me, though.
Another note. So, there's so much happening. But nevertheless, the trade recap of how trade was yesterday, because that was exhilarating.
It was. And it was a bit of a break in the selling. Let's talk about the flows data first, because it's more of the same. You have selling to the extent of 2,566 crore from foreign institutions, domestic institutions buying more than that, 4,386. And so, therefore, from an institutional perspective, there was a net positive in trade yesterday. But foreign institutions selling for an 11th straight session. And in fact, if you just look a couple more sessions beyond that, it's 13 in the last 14 or thereabouts, something like that. But what you need to know is, after wobbly start yesterday, if we can pull up the intraday chart for the benchmark Nifty 50, you had a gain in strength through the session. Reliance Industries, Bharti Airtel, TCS, Tata Steel, L&T were the key contributors, and HDFC Bank on the other end was a bit of a drag. It contributed nearly 34 points on the downside, and if not for HDFC Bank, we would have ended higher on the benchmark Nifty 50. Broader markets actually outperformed, gained 1% or more. You had most sectors that gained, led by defense, which has been a little bit of stop and start, but that screen looked incredible. Metal counters gained quite a bit as well, gained about 2.5%, that those two indices. Realty also was a sector that outperformed. More stocks in the news. DLF, for example, posting results. It could be in focus today as well. 1.8% higher for that index as a whole. FMCG and banks underperformed on the other end of the spectrum, and both of those indices ended flat. The market breadth was favored towards the advances in a 3:2 ratio. Earnings reactions continue to dominate, and the big movers, in fact, in trade yesterday, Sarda Energy, you had Trill, you had Delivery, Narayana Healthcare, ABB, all reacting to earnings one way or another, and you could see that in trade today as well, Neeraj.
Yeah, and guys, Vijay Keria's conversation yesterday got me to frame my trade setup in the session today, because, he's sitting on a large
30%,
25-30%, right? But
which he never has in his entire career. That
cash. We're talking about cash because we didn't mention it.
Yeah, cash or liquid stocks, right? So staying on the sidelines, therefore, just trying to think out loud in such periods of uncertainty is actually a very strong strategy. Sometimes inactivity is the best form of activity, right? And in markets like these, maybe you want that because it might not be incorrect to buy 5% higher, but do it only when the trend restarts. Otherwise, why do you want to go out and navigate through choppy waters, which are very, very choppy these times? And also from a trader's perspective, right? Vijay Kedia thinks about it from an investor's perspective. From a trader's perspective, it is so difficult to gauge the risk reward in the current scenario. You do not know that if you go short, there is a very lurking high possibility that US may do a turnaround in its sentiment, talk, etc. at the drop of a coin, and therefore your shorts might be taken to the cleaners. Again, going long is difficult currently because there is heightened uncertainty. So even if the valuations are better than they were at 25,500, there is a point of uncertainty here and you can't quite figure out the risk reward. Just one last thing here, and therefore the point being staying on the sidelines is actually not a bad idea. And then you think of what eventually markets go back to, which is earnings. And when you look back at this earnings season, if there is one space that has stood out, guys, no prices for guessing. Cement. And I have data here, just to mention that data. The results, quantum of results declared thus far, 18 companies. Median sales growth, 11.69%, compared to the current overall market-wide sales growth is 7%. Median operating profit growth, 46%. Median profit after tax growth, 70%. And the median EPS growth, because there has been some share sale and therefore the share base has widened, the EPS growth is 45%. So even if you don't take the PAT growth into account, which is 70%, but only take the EPS growth into account, that's 45.8% for the 18 companies that have delivered numbers thus far. The only exceptions to the growth are Kesoram, Shiva and Sanghi, 3 small companies. Kesoram had an EBITDA degrowth, Shiva had an EBITDA degrowth, and Sanghi had a PAT degrowth. But leave those 3 out. The smallest operating profit growth is 31%. So cement as a space has really stood out, and the commentary is not half bad. So if you want to take about one winner from this earnings season when you want to park money, if not now, then sometime in the future once the dust settles around India, US, a domestic facing, profit showing, good commentary sector, cement.
And this is despite the early monsoon, huh? Yeah. Everyone is saying, oh, it's going to be a terrible quarter.
I would say maybe FMCG as well. Those are very large companies and don't usually move to that extent.
I had it in my mind, but I remembered what Neelkan Mishra told you yesterday.
Yeah, he's saying 3 quarters. He's saying 3 quarters and then, the base effect, etc. Kicks in. But one big factor today, to some extent, will be these threats of additional tariffs. Maybe Trump is not being taken as seriously by the market, but it continues to be an overhang because it stops the market from moving on the momentum we gained yesterday. And that is the pain point. Watch out for crude impacted stocks as global prices are set for a spike. Right now, of course, you've seen OPEC plus increase production, etc. But if India does reduce the amount of crude it's importing from Russia, and so does China, then you have 2 very large buyers then in the pool for limited crude stocks. And you're going to see prices spike. So then in HPCL, BPCL, ONGC, paint stocks, you're going to see an impact on some of these, and Indigo perhaps. So watch out for these buckets of companies. In terms of markets, it's a bit of mixed signals. Previous analysis is suggesting a bearish bias due to FII outflows, technical indicators. Nifty's smart bounce back and strong close at the day's high on Monday introduce a more optimistic tone for a potential pullback rally. That's the one that is perhaps marred by what has happened overnight with Trump. Underlying caution, despite Monday's rally, benchmarks continue to show indecision. US tariffs concern an upcoming RBI MPC decision that's on the 6th will still inject an element of caution. Analysts are advising a buy on dip and sell on rise approach, accumulating near support and booking profits near resistance, acknowledging the range-bound nature of the market. So look at support levels possibly at 24,535. That's a crucial one. 24,600, 24,500. Resistance at 24,900, 24,850, 24,950 zone. As far as the Bank Nifty is concerned, supports are at 55,480, 55,410. Resistance at 55,720, 55,800. But let me go across to Puneet now for all the F&O action.
Well, thank you for that. So really strong session on the Nifty yesterday. We could see some continuation on that, but a lot of individual movers might be in focus for the Nifty itself. New CEOs, announcements for IndusInd, as well as something like Tata Motors, results from Airtel today. So this could be one of the days, and all three are largely, at least positive to having at least some kind of sentimental moving aspect on the Nifty. So watch out for this one. The Nifty Bank largely flat yesterday in a trading session when the bulk of the move was dominated by the Nifty companies and the non-bank companies. So ahead of the policy meet, we're seeing absolutely no movement on the Nifty Bank. When you look at the foreign investor position, largely absolutely flat in the context of what's happening over the last week or so. So the index long position also because of that has largely been in the 8 to 9%, mentioning that there is still a lot of shorts being in the system built up by foreign investors. Net OI PCR largely remains neutral in this aspect. When you look at the calls as well as put open interest distribution, you will see the continuation of 25,000 as one of the key levels for call writing. We've also seen 24,800 as the other level, which has built some key levels at that aspect, indicating that this could be the resistance going forward, at least for the Nifty. But coming from the current levels of subpar 24,500 levels, this could be one of the key positives for the market going forward. When you finally look at for gainers in terms of open interest, both on calls and puts, you can see something like Nuvama saw a really big short build-up yesterday, 83% change in OI for this one, while something like a Suzlon was the other one, and Delivery saw long build-up post its strong Q1 earnings, while valuation has now moved to price to earnings from EV to EBITDA. It's still saw strong results for Q1 in a seasonally weak quarter. Something like Shree Cement before results yesterday saw some kind of short build-up, and while numbers were largely expected in line, that could be some more short build-ups in the system for this one today. In terms of the other open interest losers, we've seen some kind of short coverings on UPL as well as Chola Finance, while long unwindings have been seen in CESC. So it's another big day for individual stock movers and stocks actually in trade today, and that'll be one of the key ones to watch out for.
Okay. Let's take a look at all the stocks that are in news. IndusInd Bank, of course, starts it off simply because IndusInd Bank now has a new boss, and that's what really has helped. A new leader, Rajiv Anand, has been appointed as Managing Director and CEO of IndusInd Bank for a period of 3 years. Bank is currently managed by a committee of 2 senior executives and the board. Rajiv Anand will look to solve 3 key concerns for IndusInd: accounting and risk concerns with regard to derivative accounting, concerns in the microfinance book, and of course, building a strong management team. It's a thumbs up for IndusInd Bank thanks to this. This is what brokerages are saying. Jefferies says they've maintained a buy with a target price of 920 rupees. Because Rajiv Anand taking charge is seen as a key positive for the bank. Reorganization of the top management team may be the key initial steps. They will watch out for joiners from Axis and other banks, improved fee and asset and operating efficiency. Besides credibility, this will be key on expectations. A lot of brokerages have had this overnight flash response, but this part from MK stood out for me. He says, they say new MD and CEO will have a tough task rebuilding the leadership team, reorienting the bank's asset liability mix, reinforcing governance standards, and restoring stakeholders' confidence before setting off a turnaround for the bank once again. So there may be an upside today, but remember the bank's stock, IndusInd stock, has been running up in the hope of Rajiv Anand or a new boss coming, and Rajiv Anand was the name that was doing the round. In fact, if you pull up the 1 week, you've seen that the stock has flared up a fair bit. Today it might again, because Rajiv Anand comes with a pretty decent track record. 197 is the other one that I'm looking at this morning. So Antfin will be exiting Paytm. It's of course an Alibaba company, and it will be selling 5.84% stake in Paytm. As of 30th June, Antfin holds about 5.84%. The stake sale will occur at 1,020 per share and at a 5.4% discount to the current market price. They will be liquidating their stake for 3,800 crores. So now Antfin is of course an affiliate entity of the Alibaba group, and RBI has been cautious about Chinese ownership in fintechs. Antfin will completely exit Paytm now. They have some debt on the books, but no real say on the board. Overhang of Antfin ownership to go, and at its peak, Anfin had held 25%. The question is whether RBI and other regulators now look at the company more positively. They want to get into the insurance business as well. Does this ease their troubles? So watch out for Paytm today as well. Sona BLW is the other one that is on my watch list. It's a thumbs down because of the numbers. Revenue was down 7.6% to 767 crores versus 830 crores. Net profit down 23% to 120 crores versus 154 crores. EBITDA down 20% to 191 crores versus 239 crores. And margins also took a knock from nearly 29% to 25%. Here's what Jeffrey says. They've maintained a buy but cut their target price to 515 from 565. They say weak earnings visibility but good capabilities. Volume decline at a key OEM and rare earth magnet constraints and tariff-led slowdown have impacted the first quarter. Near-term earnings visibility is weak. Entry into China, full benefit of railway business acquisition and alternate motor design to address rare earth constraints provide some cushion. They have, of course, cut their FY26 to 28 estimated EPS by 13 to 19% and kept it lower in the pecking order. CLSA is a little more optimistic on Sona BLW. They've maintained and outperformed, though they've cut their target price. They've said it's a tough quarter as expected. Much of the headwinds were concentrated this quarter. Most of the headwinds would be limited to this quarter and improve gradually in coming quarters. So that's one point of view as well. But on the face of it, with these numbers, it looks like not a great quarter for Sona BLW. Plus the overhang of what's happening with the family and all of that in the backdrop as well.
There's a lot of uncertainty swirling there. I have primarily earnings to talk about today. Siemens Energy is a stock that you should watch out for. Of course, the stock is up as much as 30% after that split. So it's not cheap by any stretch of the imagination, but the numbers look very good. Revenue growth, and this is just the key takeaways. We'll get into the numbers in just a bit. Revenue growth led by a healthy order backlog as well as the power transmission segment. The margin expansion is led by the power transmission segment as well, and that is despite provisions. New orders are up, nearly doubling on a year-on-year basis. 3,290 crore rupees is where it stood at. It has also, by the way, announced a capex of 280 crore rupees in manufacturing capacity of high voltage switchgear products. Now take a look at the numbers. Revenue uptick is as much as 20%. The net profit is up 84%. EBITDA is up 59%, and the margins have expanded quite substantially to 19.1% versus 14.4%. As I said, the stock is not cheap. I don't know how it's going to react, but the numbers are positive. Azad Engineering, this is another good set of numbers. There is maintenance of the revenue growth trajectory. In fact, it is higher than it has reported in the recent past, 36%. I'll come to that in just a bit. But margins have expanded, and that has bolstered the PAT growth as well. The material cost seems to be one of the levers that has benefited them in the quarter gone by. As a percentage of sales, it stood at 12.13% compared with 15.57%. The order book currently over 6,000 crore rupees. Revenue from energy and oil and gas as a segment has grown as much as 42%, and even the defense and aerospace has done reasonably well, but this one was a standout, and they've seen strong export revenue growth at 39%. Now take a look at the numbers. Revenue uptick of 39%. PAT is up as much as 74%, which is quite the jump. EBITDA is up as much as 46%, and the margins coming in at 35.8% compared with 33.5%. So all told, it's a good set of numbers going forward as well. They're going to look to bolster capacity utilization and go through the order backlog that they currently have. The final stock is Godfrey Phillips. Now you saw ITC that reacted positively on the back of cigarette volumes. Seemingly, Godfrey Phillips has also done well on the back of that business. The PAT is not necessarily comparable on a year-on-year basis because of an exceptional loss in the previous quarter. The Q1 of FY25 had a loss on account of closure of its retail business. The cigarette and tobacco revenue is up as much as 33%, and the result or the profit from that business is up about 28%. By the way, the company is also announced a bonus issue, 2:1. The record date for that is the 16th of September. Very quickly, the revenue overall is up as much as 36.5%. I was saying that the PAT is not comparable. It is up 56%, and that's on account of the exceptional loss in the previous quarter. And the EBITDA is up as much as 25%, which looks like a decent number. The margin has eroded a little bit, and this is something that you saw with ITC as well on account of the inventory of higher cost or higher priced tobacco that they had. The leaves were costlier. 22.7% is what you had versus 24.8% in the previous quarter.
Just two or three quick other names, and one of them is Escorts. Now, the results came out, of course, and it was the third consecutive quarter of margin improvement, but CLSA has hiked the target price to 4,000. Some of the other brokerages have been fairly constructive as well, so do keep an eye out for Escorts. That's the first one on my list. We'll talk about this in detail later on, I'm sure, but the likes of Vari, Premier Energy, Suzlon all come in focus because UBS has come out with this mega note wherein they are saying that they believe that FY25 to FY30 profit pool for all of these companies would be about 3.7x the profit pool of FY20 to 25, and the incumbents will probably post about a 45% profit CAGR. Now, they have different target prices for all the other for different companies, and we will talk about it later on. But in case you miss it, keep this in mind. Some of these stocks could be in focus today. And it was well known, but let's see if there is some reaction on PSP projects. Adani Infra bought about 86.5 lakh shares, 21.83% at about 640 rupees per share. So something you want to keep at the back of your mind. So 2 or 3 other names that could be in focus today. All right, let's take a break on that note. We come back and continue with this day of Herculean news flow. We'll do a rapid fire on it.
I like it. Herculean news flow.
It is like that. The next 45
As long as you don't have
minutes.
to go through the trials of Hercules, I'm okay.
Slip into a break. Back with more.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
All right, welcome back. Two big stories from the BFSI space this morning. And the first, of course, is IndusInd Bank. The leadership has now finally been announced. Now, Rajiv Anand will come in from former Axis. He enters with a new era. The seasoned banker will take over as MD and CEO from August 25th for a 3-year term. Now, he has his task cut out for him. I'm going across now to Vishwanath Nair, who's been tracking the IndusInd Bank story right from the start. And, you know, just a second to look back at it, Vishwanath, it went from complete denial that anything was wrong to a whole series of events, can of worms coming out. And now Rajiv Anand is the person who has to come and clean it up and set back confidence in investors and stakeholders.
Yeah, I mean, Rajiv Anand does have his work cut out for him. There's a lot that he has to do once he jumps in to the chair on the 25th of August. But let's take a sort of a broader look at who Rajiv Anand is and what his job is looking like. So Rajiv Anand, of course, he's an asset manager who turned full-time banker a few years ago, and now he's going to lead IndusInd Bank from the 25th of August. His appointment is effective for 3 years, so 2028, after which we'll know whether that appointment is working or not, and the RBI will then extend his appointment at the bank. He also retired early, just this week, actually, the 3rd of August. He retired early from Axis Bank. At that point in time, it was not clear whether this was for this IndusInd role or not, but now we're finding out that is the case. Now, I was looking at his professional journey between 2009 and 2013. He was the CEO of Axis Asset Management. In 2013, then he became the president of the retail banking division at Axis Bank, after which he was elevated to executive director role for the retail business. This is the first time he enters the board at Axis Bank. And then in 2021, he was elevated to the deputy managing director role, which he held till he quit only in August of 2025. His career started at HSBC. At that point in time, he was a currency trader. Since then, he's worked at ANC, Greenlace, IDFC, and Standard Chartered. All of these roles were linked to asset management businesses of these banks. Now, looking at the challenges that face him, right, once he takes over at IndusInd Bank. The bank is currently facing a lot of challenges, and these are on multiple fronts. The first of which is, of course, the derivatives accounting, which is what came out back in March when the then CEO of IndusInd Bank came to the public and said that there was an issue at the bank. After that, more disclosures came in, and then microfinance business also came into the picture. There as well, there were a lot of issues as far as IndusInd Bank is concerned. Governance concerns have been repeatedly happening there because SEBI in its investigation found out that both Sumant Katwalia as well as his deputy CEO Arun Khurana at the time were dumping their stock before disclosing this information to the public. Sumant Katwalia and deputy CEO Arun Khurana both quit in April after these disclosures came out. The bank is currently, SEBI of course found the evidence of insider trading at the bank. Currently the bank is being run by two senior executives who are on the board, and they are running the bank as executing the CEO's role. What are Rajiv Anand's first tasks? Now that is the important bit. Currently, his first task is to ensure that there is a credible and trustworthy management team. Remember, the bank doesn't have a CFO, the bank doesn't have a treasury head, an internal audit head just quit last week. So all of these positions are very, very important for a bank. They need to be appointed. Secondly, he has to rebuild trust in the bank's microfinance business, which is the big sore point for IndusInd Bank. He also has to reorient the growth strategies at IndusInd Bank because those are key to ensure that the bank continues business as usual and becomes a stock favorite again. He has to ensure that commercial vehicles and gems and jewelry lending, which are core businesses of IndusInd Bank, are reinvigorated and those businesses can focus on delivering growth. And finally, he has to ensure that there are new areas of growth that he needs to focus on, which is housing finance, a fairly new business that IndusInd Bank started only about a year and a half ago, and they need to deliver. Rajiv Anand and his team have to deliver growth on that front.
And build a team as well. That's the key part, isn't it? And that's a story that you've broken this morning, Vishwanath, on how that team will be formed going ahead.
Yeah, so what we know at this point in time is from sources within the bank that currently the bank is focused on appointing. The process of appointment has already started. That began a couple of months ago after the CEO and the deputy CEO both quit. The bank is looking at building that strong management team. As I said earlier, the treasury chief, CFO, audit head, all of these positions are currently empty. they need to be filled at the earliest. What the bank also needs to do is build stakeholder confidence. Currently, there is a lot of back and forth with the regulators such as RBI as well as SEBI. So the bank needs to ensure that those stakeholders are put to rest, are back with confidence in the bank and with the new management team. They need to streamline the growth strategy, as I said earlier. That is something that Rajiv Anand and his team will need to do. And the bank will focus on filling any governance and control gaps at IndusInd Bank. That's a key metric that they need to resolve because that is how the stakeholder confidence will come in. And they need to continue engaging with the regulator to address any pending issues that might be there. Remember, there's a case going on by SEBI. Basically, it is investigating Sumant Katpalia and the Deputy CEO Arun Khurana's role in the dumping of the stock. As I said earlier, that investigation is still ongoing, and if information regarding insider trading is found, then that will open up new fronts for investigation for regulators such as SEBI.
Okay, thank you for that, Vishwanath. Sachin Dixit with us this morning. He is a lead internet research analyst on JM Financial Institution, and of course, we've invited him to speak about Paytm. I don't know if you're tracking IndusInd at all, Sachin?
No, I lead the internet practice at JM, so I'm on more on the internet side.
Okay, okay. So on Paytm, you know, how do you look at this exit from AntFin? Is it an entire exit, and does it clear some regulatory hurdles for Vijay Shekhar Sharma and what he wants to do with Paytm going ahead?
Potentially. So basically, this is a clean out trade from AntFin, right? We saw the last block that happened roughly 3 months back, wherein AntFin sold another 4% stake. In this, like post this, basically AntFin reaches zero in terms of share capital on Paytm. While obviously it's not clear how the regulator is looking at these things, but historically we have seen that Chinese invested entities had suffered at the regulator's hand in getting some regulatory approvals or not getting them rather. So this could potentially clear the way for the company getting some of the regulatory licenses which have been due over the course of the past few years. That's certainly a possibility.
Sachin, the question that begets is that, I mean, in all of these businesses, right, which are PE funded or global names funded or held, these exits would happen at some point of time. But the underlying business, has it gotten traction enough and turned the corner enough for you to recommend to your international and institutional clients for either staying invested or buying at dips, etc.? Because I mean, this quarter was that, you know, I remember that when the results came out, we showed the clip of Vijay Shekhar Sharma dancing, right? It was that kind of a number. So I'm just trying to think, do you believe that's the case now for Paytm?
I guess the dance was from a very old...
of course it was. Of course it was.
But nonetheless, the results were good. So what we have seen in a lot of these internet stocks is that most blocks happen when the company's actual operating performance also starts to improve, because that's when these large blocks get absorbed. Right, as I was saying, like roughly 4% of stake of AntFin got sold roughly 3 months back, which again got absorbed well. The stock has actually been higher from where that stock happened, from where that block happened. And even now, because the quarter's results were good, operating performance going ahead also is anticipated to be good, which is why I'm not running the block, but I'm guessing whosoever is running will see decent demand in getting the right traction for this block for incoming investors to come and make value as the stock progresses further. Largely, when you think of that performance, now with the company turning PAT profitable and operating at almost like this mid to high 50s sort of a contribution margin guidance that's provided by the company, there seems to be decent visibility that fixed costs, which are largely growing at, let's say, 10, 11, 12% at best, and revenue growing at 20-25% at least, basically gives you decent visibility on operating profits rising very, very sharply.
Sachin, then last question from my end. I just want to understand whether all of the major headwinds would be out now. And from everybody was talking about this whole convoluted transaction with Ant at some point, and maybe that had slipped under the radar, but now with that heading out of the way, would you say that all of the major headwinds are out? And would you say that it's still a buy at this point with the visibility that you've just pointed out to?
Sure. So I do not see any major headwinds that way, but obviously there are businesses which Paytm used to do, which are not back yet, right? So we have also published a note some time back on this, that there are a bunch of regulatory triggers which can come in this name. So there are no headwinds, but I believe that there could be tailwinds if any of these approvals start to come in favor, or basically there is any sort of monetization that comes on UPI transactions. Right, obviously, they would have seen that news where ICC Bank is looking to charge payment aggregators. There is talk of RBI governor talking about things like that UPI needs to sustain itself. So while I don't know how regulator is thinking of it, how finance ministry is thinking of it, but there needs to be some sustainability that needs to come to UPI transactions, and which could be a very big trigger for Paytm. On top of that, obviously, the licenses that we talk about, the payment aggregator license, there is also a potentiality of Paytm wallet coming in, which has been a big driver in Paytm's monetization as well as profitability in the past. Those could be key triggers, those could be key tailwinds. I do not see any headwinds in the near future. So that's there. The one thing that I'll probably still caveat is that a lot of profitability for Paytm has been coming on the lending side. And wherein Paytm has done brilliantly in terms of scaling, maintaining the quality of book, and now even moving to non-FLDG arrangements, where lenders are comfortable moving to those arrangements and still growing. So I think if you see anything happening wrong on merchant lending side, when the sector slows down, if there is some book erupting and anything, that could be a headwind for sure. But so far, we do not see any signs of that.
What is the target price that you see for Paytm now that this is out of the way, Sachin?
So we have a 1320 rupees of target price. So we still have decent upside on that. And obviously, we do not bake in all the tailwinds that I talked about in the target price because these are all still optionalities.
Okay, and is this a buy at the current price for you? Would you look at a Paytm right now at 1078?
Yeah, it's a buy.
Okay.
We have a buy rate.
Okay, so it's a clear buy at 1078 for Sachin Dixit. Thank you so much. That's the take coming in from JM Financial. So this is definitely one stock that you need to watch out through the day. In fact, Harsh is joining in to take us through the whole saga of Antfin and Paytm and Alibaba, this whole, overhang of a Chinese presence in a large financial sector company. That seems to have now been put to rest.
Or has it? Because you still have Antfin indirectly holding some stake in Paytm, and I'll try and break that down. But at least the direct holding, yes, you're right, is out of the picture. It's gone. So let me first talk about what this means, and let me first take you through what the FIIs and DIs have been doing on something like a Paytm. You look at the way FIIs have been reducing their stake. A large chunk of that, mind you, is Antfin itself. So we've seen FIIs selling. DIs have been silently buying, now on nearly 16%. And you look at the public, they are largely steady state, but the number of shareholders has come down substantially. So there's been a consolidation happening there. Let me talk about who the key FIIs are in terms of the holders. Antfin, of course, this entire stake will go away. SEF Partners holds around 17%. And then you have Resilient Asset Management. You want to keep your eye out on that one. I'm going to explain that a bit. And Amansa holds a sub 2% stake as well in Paytm. Let me talk about the DIIs. Those are the three mutual funds holding stake in Paytm. Let me talk about whether Antfin is truly exiting. And here's the angle. Antfin indirectly continues to hold a stake in Paytm. They sold 10% stake to Resilient Asset Management. And Resilient Asset Management is something where Antfin continues to hold OCD stake. They put in around $638 million through OCDs, which is optionally convertible debentures, and that is something they continue to own today. So they do have economic interest in Paytm to the tune of 10.2%. Let me talk about, let me switch focus and talk about the turnaround that Paytm has seen. And for that, let me start off with the regulatory challenges that Paytm saw. They had RBI restrictions, a slew of them, March 2022, January 2024. Also, in terms of what they did about it, they in fact capitalized on it. They pivoted their business. They said that payments business They were going to partner with other banks instead of doing it through Paytm Payments Bank. They focused on profitability and growth. They monetized the platform through loan syndication. They sold off or divested all of their non-core assets, and they turned PAT positive, very much against the consensus in Q1 FY26. That was really the kicker. Stated goals in terms of going forward, 15 to 20% EBITDA margin from the 3.7% currently, and they are also looking at FY26 EBITDA margin to be substantially better than the Q1 margin. The key triggers, of course, RBI easing any restrictions on Paytm will be a positive trigger, and accelerated margin performance and growth. Mind you, just a 2% upside as per Bloomberg average analyst expectations. Something to keep in mind after this very strong stock run-up that we've seen.
Okay, thank you for that, Harsh. So you've got Paytm in focus today, IndusInd in focus. Let's not forget Tata Motors, because P. Balaji has now become the CEO of Tata Motors, first Indian to do so, though it's been an Indian company for a while. So it's demolished UK in more than a couple of ways yesterday, I think.
Not bad. Not bad.
At least that much cricket connection though I can give. Kunal Rambe of the streets with us this morning. So is Sunny Agarwal of SBI Cap Securities. Very good morning to both of you. Kunal, let's start with what you see on the charts. After yesterday's uptick, do you see that sustaining?
Good morning. Thanks for having me on the show. So as far as Nifty is concerned, again, it's been almost 84 days right from the month of May that it's been in sideways consolidation, and strong support which we have witnessed is 24,500. In fact, yesterday we tested the same level, 7th time in this last 84 days. And on the upside, we can see the resistance right now at 24,900. So I think for time being, this 24,500 to 24,900 seems like a range bound trade. But a buy on dip can be a good strategy if the Nifty holds 24,500. Below that, we might see some kind of trouble. But I think overall, the trend still remains bullish.
Okay, Kunal, good morning. What about your ideas for the morning?
Good morning, Neeraj bhai. So overall, as the view is bullish, I'm picking up the first counter, which is Hero Motors. That counter is looking really strong because yesterday it gave a first breakout. So with the stop of 4,400, one can initiate a buy, and the positional target on that can be 5,000 levels. The second is CDSL. Again, overall trend was positive. We saw a very good bargain buying opportunity yesterday. I consider this trend to remain in favor. So with the stop loss of 1,500, one can go long on CDSL with the target of 1,900 again. And third is Jio Financial Services. Again, sideways consolidating since a couple of days, and yesterday was the first breakout. With the stop of 325, one can go long, and the short-term target can be 350. So all three are basically positional ideas, with Jio Financial being short-term.
So let's head to our regular segment. We're a little late today, and you can understand that perhaps because of the volume of news. But Somit is in studio to take you through the chatter from the dealing room. Somit, morning.
Good morning. Well, the first couple of stocks on the list is NCC and Jindal Stainless, and dealers are indicating that large HNIs are taking a paired trade on both these counters. They are selling NCC and buying Jindal Stainless. For Paytm...
No, hang on. So you're saying there's a pair trade. People are taking both the positions simultaneously, which is selling NCC
and buying Jindal Stainless. And this is ahead of the Q1 numbers that they are doing.
Okay.
For Paytm, obviously the biggest news flow today would be the Antfin's complete exit, but there are positional sell flows also that are being seen at the higher level, because earlier the expectations was that the Paytm might get included in the MSCI index, but right now dealers are not expecting that announcement to come in August. It might happen in November most likely, but not in this announcement that is due on August 8th. For IOL Chemicals, dealers are indicating that smart and prominent investors have started to accumulate this counter in trade at lower levels. And Magellanic Cloud is another counter. We don't talk usually about this counter, but what the buzz on the street is that there might be a big acquisition that the company might do in the US market. So keep an eye out for that as well. And yesterday we did highlight that DLF, there were sell flows, and the Q1 numbers could be a bit on the weaker side, and that's what it has come in. DLF numbers are slightly below than what the street was estimating, both on pre-sales front and on margin front as well. And Paytm was part of our herd on street on August 1st, where we did indicate that there will be a block deal that will happen soon in this counter, and it will be a cleanup trade, and that is what is happening. And Fin will be selling out completely from Paytm, 5.8% stake valued at close to 3,800 crore rupees, and most likely this deal will happen in the block window.
Okay. So, a lot of stocks in focus this morning, but our watch list is long. So much to cover. We'll take a very short break. We're coming right back on what your top trades need to be before we begin the pre-open session and much more. Stay tuned.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशित आई ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो
हेलो,
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Welcome back. You're watching India Market Open. It promises to be an exciting, action-packed session. We've already gotten you views on Paytm and the whole potential clean-out trade by Antfin. But let's talk about a couple more stocks as well. Sunny Agarwal, SBI Cap Securities, joining us this morning. Sunny, the other big stock that we're tracking is IndusInd Bank, of course, and the announcement that Rajiv Anand will take the corner office. Is this the key positive that investors were waiting for, and would you suggest a buy at this point?
Yeah, good morning everyone and thanks for having me on the show. Yeah, definitely a big positive development as far as IndusInd is concerned. The street was waiting for the name on the from the top management side, and I think looking at the pedigree from which the Mr. Anand comes from, I think that will give a lot of lot of confidence to the street in terms of the future growth strategy. As the other key important positions are also filled and we get to hear the growth strategy from here on. I think the confidence will be back. Still on operational front, the bank is struggling with MFI and a vehicle portfolio. So we believe that once the management in place, maybe over the period of next 3-4 quarters, there will be the bank will come out of all the challenges and will start growing at least in line with the industry trend. So again, I would rate this as a positive development.
Okay. Sunny, you spoke about IndusInd Bank. Let's talk about Paytm right now. Is Paytm a buy currently?
Yeah, Tamanna, I think a very strong set of number Paytm has posted during the first quarter, where we have seen that contribution margin is close to 60%, EBITDA margin is 4%, and at the same time, management has guided that going forward, there is a still scope of expansion of EBITDA margin led by very aggressive growth on merchant loan front, seeding of devices, which will lead to an increase in MDR. So I think company is on track for a profitable growth, and post today's block deal, once this selling overhang is over, I believe that the stock is well placed. We believe the fair value of the business is close to 1150 to 1200 rupees with an investment horizon of 6 to 12 months.
Okay. A lot more in the way of earnings news. I want to know whether you have an opinion on Sunny Siemens Energy. And the numbers look particularly good, but it's not a cheap stock. At the very least, it's opening up 12% higher. But I wonder where those rates will settle. It's just the first tick on the screen. So if it does open gap up, would you ride that momentum purely on the back of that solid earnings performance?
Yeah, Alex, I think a pretty strong set of number from Siemens, and the entire, all the companies related to power sector have been reporting good set. But we believe that the valuations are expensive, and the fair value should be in the band of 3400, 3500 rupees. So not really advisable to chase the momentum in case the stock open gaps up. Maybe any price below 3000 will be a decent, will offer a decent safety margin of safety, and that can at least give you a 10 to 15% kind of upside. So would recommend to buy on deep with a price target of 3500.
Okay, Sona BLW, let's take a look at that in early trade. Let's look at Godfrey Phillips on numbers in early trade. Sona BLW, we told you it's a poor set of numbers. That family dispute also weighing about 2% down right now. And look at Godfrey Phillips. I want to look at Sarda Energy. Sarda Energy, second day in a row, completely roaring. IndusInd Bank up 10% in early trade as well. PNB Housing showing some recovery. They don't have a new boss, but maybe they're hoping for one very quickly. So that has, it's a day of appointments because PB Balaji is joining in. He is the new JLR CEO after Adrian Martel stepped down from his role. Puneet is joining in for more.
Well, thank you for that. It's definitely one of the key updates coming in for Tata Motors. It's going to be huge because, the veteran CFO, Mr. PB Balaji, has been associated with the company since November 2017 and actually has also been credited with the turnaround what's happened at JLR in terms of financials. Between FY19 and FY25. So him being promoted an internal candidate, the first Indian CEO of Jaguar and Land Rover business, it's going to be one of the most critical jobs within the Tata Motors basket. Now we have the demerger also this year slated, and within the CV business they already have Girish Wagan. Now with Mr. PV Balaji as well as Shailesh Chandra for the India business, it could be the turnaround and the powerhouse of Tata Motors created with all three verticals firing at the same time. One of the key challenges for JLR has been the rebranding. It's been most controversial, and I think for that key reason, the stability that PB Balaji brings along with his financial acumen over the last few years. Hence, I think this could be a long-term re-rating trigger for Tata Motors. Of course, the results are stated on 8th August, so we'll see more about that and get a lot more perspective from him during the con call. But it's a key update coming for Tata Motors, and as I mentioned, the first Indian CEO with being with Tata Motors already for the last 8 years, it's going to be one of the positive news for Tata Motors shareholders today.
Yeah, and particularly interesting, Puneet, in the context of the transformation that Jaguar is currently undertaking, and we'll have to see whether that bears fruit. I guess that will be under the helm of Mr. Balaji. Sunny, what do you make of this appointment? The first time an Indian is being appointed as the Chief Executive Officer of Jaguar Land Rover, which, as we all know, is the primary contributor to both the top line and the bottom line for the consolidated entity. Big move, historic move.
Yeah, definitely a proud moment. I mean, now JLR is truly an Indian company with an PB Balaji heading going forward. So I think, yes, definitely a proud moment, sentimentally positive. But again, stock prices move basis the earning growth and financial performance. So as of now, we believe that although this development may be sentimentally positive, but ultimately Tata Motors need to deliver on the growth front, which looks slightly, in a current uncertain global business environment, looks slightly, the road ahead looks tough going forward. So I think I would like to remain neutral on Tata Motors at the current juncture.
Okay. All right, let's talk about our big brokerage call. It's 9:05 and a lot of you wait for this. UBS has initiated a coverage on a host of counters, and Harsh is joining in to tell you about the key updates here. Harsh, what are they saying?
Well, it's the power cycle that they are banking on, and they've spoken about how the power cycle could present a huge profit pool for the players within this space, and the upsides range from 20% to nearly 50% on some of those names. So I want to start off with what they are suggesting on the macro side of things. They're saying the FY 25 to 30 profit pool will be 3.7 times what it was between FY 20 and 25, which is extremely large. So they are expecting incumbents to post a 45% PAT growth all through this cycle, and there's enough scope for shareholder value creation is what they are saying. Waaree Energy, they are seeing a 42% upside on this one, target price 4,400. They are saying that backward integration and scale provide the edge for a Waaree, and capacity-led earnings acceleration is well underway for a Waaree. Let me talk about Premier Energy. There's an initiating coverage there as well. 31% upside is what they see on this one. 1,340 being the target price. They are saying that operational robustness in a high-growth sector is something that Premier Energy is good with. They're saying that it's ahead of peers in terms of integrated expansion and operational robustness and execution and capital allocation. So all of those factors play in its favor. Suzlon, they're initiating with a buy, target price 78 rupees a share, 20% upside from here. It's competitively placed to ride this profitable upcycle is what UBS is saying. They're saying that sector tailwinds and competitive edge will lead to a earnings growth which will be extremely strong, and there are multiple growth levers for it. BHEL, 42% upside, 340 being the target price. Thermal is reviving, they're saying. So remunerative growth ahead going forward. They're saying that rising thermal orders and net profit should be aided very, very strongly as a result of that. 8 times profit versus currently is what they are seeing by FY 28. So 8x in terms of PAT. Thermax, they are maintaining a buy. This is something that they cover anyway. They've hiked the target price to 5,100 from 4,100, 45% upside. Slow and steady turnaround and solid growth appetite with stronger competitive edge among peers is what they're seeing on Thermax.
Okay, not much movement on those counters as of this point in the pre-open session. What's really moving is Godfrey Phillips. What's also moving is Tata Investment, the Tata Capital IPO. That's the other big story today that I'll quickly get Sunny's view in. Finally, this upper layer NBFC, after a lot of pushback, has filed its DRHP, will be coming through. The only proxy right now is a Tata Investment. But how do you see the IPO?
So you're talking about IPO of Tata Capital, Tamanna?
Tata Capital, that's right.
Yeah, so again, I think most awaited IPO in the Tata stable, and after Tata Technologies, I think people were keenly waiting for this IPO. I think yes, but to be very honest, to form a view at what is the fair value of Tata Capital at the current juncture, need to deep dive into numbers. So definitely sentimentally positive for Tata Group as such. But what's the view on Tata Capital for that now? And I need to wait and go into deep into the DRHP, RHP.
Okay, fair call. By the way, there's a new listing today, Aditya Infotech. That company was subscribed, that IPO was subscribed some 100 times. So therefore, could be an interesting one to watch out for. But as the pre-open rate settled down absolutely flat, it's very interesting to see some of the reactions. One of them, Sunny, is a stock called Oswal Pumps. Now, normally wouldn't have paid too much of attention to it ordinarily, but the numbers look very solid, almost 35% uptick across line items. Any coverage here?
Yeah, so I think we have covered this company during the IPO. A pretty strong set of number post listing. So this is the first quarter where company is disclosing the number post listing. So I think pretty strong set of number. At the same time, order book also seems to be very robust. So seems that next quarter should also be pretty good for Oswalpam. And one more positive which will play out maybe 6 months down the line is commissioning of their solar panel facility, which will further aid in margin expansion. So I think pretty strong set of number and trading at reasonable valuation. I think we continue to remain constructive on this entire space of solar pump industry.
Godfrey Phillips, by the way, on those numbers is actually amongst the top gainers on the Nifty 500. So that's very interesting. And aside of that, of course, IndusInd Bank is the top gainer. Otherwise, not too many gainers, but a lot of stocks reacting negatively to those numbers, right? Triveni Turbine, Inox India, TBU Tech continuing its fall from yesterday, Sona BLW, Oro Pharma.
Oro Pharma as well, yeah.
A lot of stocks correcting today.
I think all of pharma also, some of it, maybe I think you're a smattering of results. And then Trump is the angry man right now. So I don't think that exception to pharma tariffs is going to stay. Although it's going to be more on branded, not so much generic. So less impact from an Indian point of view. Just on Godfrey Phillips and ITC, Sunny, let me come back to you on those, because some of those themes mirroring of what's happening in the cigarette business. Revenues going up, but margins hit because of input costs more likely. How are you looking at Godfrey Phillips?
Yeah, so coming to Godfrey Phillips, again, a pretty strong set of number by Godfrey and trading at a reasonable valuation. So I think ultimately there was a concern that because of this increase in leaf tobacco prices, there can be a significant dent on margin. We have seen some dip in margin, but going forward, in case the volume is able to sustain in the range of 3 to 4 or 3 to 5% band, and the shift from an unorganized segment to organized is something which will keep on happening. So I think again a pretty strong set of number, and we continue to remain constructive on both the name, whether it is ITC Limited because of this safety on valuation front, trading at a very reasonable valuation, 25 times price to earning multiple. Even Godfrey, after reporting a good set of number and a recent strong up move during the last 6 to 12 months, continue to trade at reasonable valuation.
Kunal, I'm coming to you on a couple of these movers in trade and likely to be in focus on the back of news as well. IndusInd Bank, I think everybody's focused in on this one. How do you trade it? Because I think a lot of people have had patience with it. Is this the trigger that gives it a chance to move up? What's the view?
Morning, Alex. So overall trend on the IndusInd Bank is very, very sideways. In fact, since April, this counter has tested 780 zone multiple times. In fact, yesterday was also the low near to that level itself. Sideways consolidation with positive bias. If any chance the counter gives a closing above 840 levels, then I think the next target can be 960 to 975. If someone is already holding, hold it with the stop loss of 820 right now. 815 right now. And if someone wants to take the new position, I would advise to buy about 840.
Yeah, okay. So you've seen it spiking, not so much a Paytm though. Maybe that's a case of the news having been priced in more than anything else, which is why you're seeing some pain there. On a Sona BLW, there's quite a difference in opinion in what brokerages are putting out today, Sunny, and I want to get your view on it. One view is that rare earth issue, and this was supposed to be a tough quarter. They have one large client who's seen a decline in sales, etc., but the worst is over. That's at least the CLSA view. Jefferies has also reduced its target price. How would you look at a Sona BLW right now?
Yeah, so coming to Sona BLW, I think we would like to remain neutral because, as you rightly pointed out, the company is facing a issue of supply of a rare earth magnet, which is one of the key component which is required for making the heavy duty motors for electric vehicles. So I think that's one of the struggle, and at the same time the recent uncertainty regarding this US tariff is something which can be overhang as far as Sona BLW is concerned. The stock has already corrected 30-35% during the last 6 to 12 months. So I think we believe the fair value is close to 400 rupees at the current junction. Would like to remain neutral, and we'll wait for further clarity on increase in supply of rare earth magnet and further clarity on trade deal between India and US.
Quick view, Kunal, on any one of these. I'll read them out. Azad Engineering, Siemens Energy, Godfrey Phillips, Oswal Pumps, all buzzing in trade. Would you initiate a buy on any one of them?
See, in fact, Siemens Energy and Oswald pumps are extremely strong. In fact, they are showing the new breakout. Also, the trend is very, very positive. I think both of them can be bought into. But Azad Engineering, I really doubt as of now because the overall trend is still sideways. So I'll avoid this counter for now.
Okay, avoid Azad Engineering, but starting off 4.5% higher. Like we said, there are a few numbers which are making their presence felt today, but otherwise it's a very quiet morning. Though the good part is, viewers, that the last 2 days the Indian markets have behaved very maturely. The markets are almost telling you that all of these trades are actually a passing cloud. Let's see if that continues during the course of the day today. But here's how we start off. Absolutely flat, no big gyrations. In fact, the banks too very flat. Bring up the Nifty IT 0.5% lower. You could argue maybe that the IT companies could feel the pressure more because a lot of business in the US. Mid caps flat, small caps flat too. In fact, the bank Nifty just nudges into the green slightly. Let's get the heat map up on the screen. I doubt I'll have too much luck, but IndusInd Bank is certainly starting off well, so let me start with their unexpected lines. Rajiv Anand, pedigree name coming in, a lot of mess to clean, but you got the right cook there. So 1.76%. HCL Tech, interestingly, 2 days now in the last 5 that IT is sulked and HCL Tech has actually done the opposite. So something's cooking there. Ultratech, Bharti, Hindalco are amongst the others on a day when there is even Stevens between the red and the green. By the way, IndusInd is giving up some of the gains too, but it's early days as yet. What's not doing well? The rest of the IT pack, Infy, Techem, TCS, all of them down. Mahindra and Mahindra corrects a little bit today. Axis Bank down. I mean, no big reactions. Actually, we should have thought of this. Was IndusInd's again? And because one of the notes says that will we see some exits from Axis which might get wooed into IndusInd Bank. Let's see. I think it is a Jeffries note. And then there is an iShare which is just pulling back a little bit. But aside of that, no big losers. So I think IT per se sulking a little bit and IndusInd Bank standing out very, very strongly.
You know, what's interesting also and what is happening with your IT pack, because this was the comeback of the day yesterday. That seems to have completely given up gains. But having said that, after that whole overnight tirade saying higher tariffs, etc., not too bad on the Nifty. Nifty holding its own. Let's pull up the broader indices if we can very quickly and see what's happening there. That's also flat to positive. This is how you're seeing market open day on day on day for the last several sessions, and that continues. Nifty small cap to 250 actually slightly better with a 0.25% uptick right as we open for trade. Let's pull up the sectoral heat map if we can and see what's working there. Yeah, there you have it, the small cap 250. So broader markets seeming resilient, holding on. Remember, in the numbers which have come, some are pretty decent in the broader markets as well. PSU banks doing okay today. Nifty Energy is also fine. More red than green, and Nifty Auto over here, Hyundai, Sona BLW, some of these have not done too well. But if you see the range, it's not massive. Less than 0.5% up on the small cap 250, and here about 0.25% and lower in terms of the red tick on the Nifty IT. So let's look at individual stocks instead and look at what's happening there and where the action is. I want to revisit IndusInd Bank and see if it's held up with its gains. It's of course the big story this morning. Rajiv Anand takes charge at the helm. Yeah, it's doing well, about 2.5% up in an otherwise very muted market. Results impact is the other one. Godfrey Phillips, Azad Engineering, Siemens Energy. Some of these were good set of numbers, and Godfrey Phillips holding up there. Azad Engineering also a good set of numbers. So was Siemens Energy, all up in the green. Let's look at Sona BLW, Aurobindo Pharma, DLF, Oswald Pumps. Some of the others which came in, good recovery for Sona BLW. Remember, CLSA has come up and said that this pain in this quarter was expected. Its price trend is not going to be seen going forward. Auro Pharma also a little muted there in the morning. DLF was a robust set of numbers but does not seem to have met expectations of the street. That's why a bit of pain over there. Oswald Pumps is a fairly recent listing. Let's see how it's done this quarter, 3% up in trade. Paytm, 197 communications, as it helped after Anfin has exited. Well, not too great and not too down either. This seems to be news that has been priced in by the street in any case. Tata Capital is coming up with an IPO. What's Tata Investment doing? About 2.5% up. And Anil Ambani will be at the Enforcement Directorate later this morning. Reliance Power, Reliance Infra, some of those stocks that have been languishing at a 5% lower circuit for the last several days. But all in all, I would say not a bad morning for the markets at all. The Nifty barely, 0.1% down.
You said it, Tamanna, and quite a few of these stocks that you've mentioned are moving on account of the news. I'll talk about a few others that are moving that don't seem to have a particular trigger at this point. You have New India Assurance, which is up about 5.2% from the broader markets. New India Assurance, if we can pull up the insurance company, it's up about 6% as we speak right now. Keynes Tech is up about 2.8%. Valor Estate, which is from the Realty Pack, is up and about 2.6% higher. Nuvama perhaps bouncing back now, up about 2.3% or thereabouts. On the losing end, you have a few interesting names that are making that list. MCX losing about 2.5%. Bosch among the losers. And I wonder what's going on there, because I think the volumes is something that we should watch out for on Bosch today, because it was down about 4%, having recovered from that point now, trading with cuts of about 2.5% or so. Triveni Turbine, by far and away the biggest casualty in trade today, losing as much as 8% at the start. And I wonder what you would say about this, Sunny, if you've looked at the numbers and if somebody's holding the stock. Is this a moment for you to exit in Triveni Turbine, and why were the numbers so bad?
Yeah, Alex, I think numbers are bad because of deferment of order booking or revenue booking, which has been shifted to Q2 because of this ongoing geopolitical conflict between India, Pakistan and Israel, Iran. That's what the company has commented. But anyway, the company is sitting on a very robust order book as we speak, and we believe that as in case the order execution and revenue booking picks up over the period of next 1 or 2 quarters, I think company should be able to meet its FY26 guidance. One has to keep in mind that Triveni Turbine has a significant exposure to international markets also, and ongoing global uncertainty can lead to some deferment of revenue booking or execution of an order. So again, we continue to remain constructive, but again, gradual accumulation is the right strategy if you are planning to deploy a fresh capital for Triveni Turbine. In case you are an existing investor, I would recommend to stay put. I think next 2-3 quarters should make up for the loss which we have seen during the.
Some stocks on which brokerages were very constructive. I wonder if Vari, Premier, Suzlon, are they reacting at all on a day when the Nifty is flat on that UBS note? Vari 1.3, Suzlon flattish, really nothing too dramatic. Premier Energies maybe about 1%. They're under a bit of a cloud, Kunal, but are the charts suggesting any kind of supports for any of these three names?
So I think Vari Energy is overall sideways with it's near to the previous high, in fact, which is the 32.75 to 32.90 kind of zone. So I think from the present level, I think 150, 200 points upside is likely, but otherwise this is the level to turn cautious and relook at it once, it enters the all-time high zone, or if it comes down to 2,700, we should think of reinitiating the buy near that zone. But this is the zone to turn cautious. I'm ignoring Suzlon for now because it's still sideways consolidating counter.
Okay, a few other stocks that are showing some action this morning, either up or down. You're seeing quite a bit of pain in MCX as well. MCX has been a bit of a seesaw. Just Sunny, any word on MCX?
I think company reported a very strong set of number just a few days back, and I think we continue to remain constructive. We have seen across the board increase in ADTO, whether it is options, future. So I think we continue to remain constructive on MCX. I think maybe today may be a kind of profit booking day after a significant run-up which we have seen during the last 3 to 6 months. So we believe the fair value of the business is close to 9,000, 9,500. So I think any dip today is an buying opportunity for a medium.
Thank you so much for that take on MCX. Going across now to Jairam Sridharan. He's, of course, former CFO at Axis Bank, leader and a lender, well known in his right, and someone who knows Rajiv Anand well. Thank you so much, sir, for speaking with us this morning. Tell us about what I think all stakeholders can expect at IndusInd Bank with Rajiv Anand at the helm.
Hey, thanks for having me, and
Rajiv, congratulations to you if you're listening to this. See, Rajiv is, I think of him as Captain Cool. He's a very cool guy, meaning he doesn't lose his calm. He stays cheerful, stays connected, and very, very grounded all the time. He's a very smart person, but also a very delegative person. So he's very happy to let somebody else have the limelight and get on with his work in the back. He's built a great reputation for himself over the years as managing businesses, managing completely different areas of banking and capital markets. So very, very experienced and knowledgeable about the industry, but also a great guy to kind of work with and be around, always smiling, very cheerful. And I think he's the kind of steady hand that the bank needs right now, IndusInd, having gone through some of the challenges that they have. I think his experience, his calm demeanor, and his ability to get along with a wide variety of people will stand the bank in great stead.
Some perspective on the challenge that he faces heading into a situation where there is clearly a lot of turbulence, and I think some of the characteristics that you just spoke about will hold him in good stead, but then no one expects him to right the boat immediately. And some perspective as somebody who is an executive in the industry right now, what according to you are likely to be his immediate challenges?
See, this type of situation that he's entering, where there have been questions raised about governance quality, where there have been accounting questions raised in the past. The business itself has had certain challenges. Microfinance as a business has gone through its challenges for the bank and so on. So there are multiple fronts on which there are challenges. And these things, as you rightly said, are not going to get solved in a jiffy. You need patience. You need calmness. But I do think these are not by any means life-threatening challenges. These kinds of things come in business cycles and for various businesses. And Rajiv has the experience to deal with a lot of this, and he has the intellectual capacity to identify right from wrong and the willpower to take the right decision.
Jairam, good morning. Neeraj here. Been a while, but good talking to you.
Hi, Neeraj. Hey, lovely talking to you, man.
Yeah, and I just wonder, Jairam, in some sense, if one looks at it over a 2-year time frame, it's actually a tailor-made situation for somebody who's got the demeanor and the expertise of Rajiv, right? It's a bank which has gotten issues. He knows how to tackle issues, come in, set it right, and over a 2-year cycle, it suddenly looks a much different baby than what it was when he inherited it.
Yeah, so I don't know whether it's 2 years or it's a little bit longer. It is a large bank, and so it could be a tad longer than that. But absolutely, you're right. Like, this is it's a great situation for an institution which has done some really good things in the past and has some great legacy. And and some of that sheen has gone in the last few months, but that can be regained with the right kind of leadership and the team coming together. And one of the things that Rajiv does really well is get the team together. He is not a solo sport guy. He likes to get the team together, and I'm sure he will do a good job of motivating the team and giving them the self-belief that they can come back and win it. So I think the situation is right for a leader to show their leadership stripes and bring the bank kind of back to its path of glory.
A thought. You are, of course, running Piramal Finance for the entire BFSI spaces, and all of you in corner offices. Are you also going to keep one eye on who Rajiv's new team is? There will be a scramble for top-level talent now?
Yeah. Of course. See, a lot of us we're all kind of, it's a small community. We're all fairly friendly with each other. We all know kind of the right talent where it is. And Rajiv and I have been good friends for a while. So a lot of the people we know and a lot of the talent we know is common. So yes, we all know that there is going to be a scramble for talent, as there always should be. Good talent should find good places to go to and places where they can make an impact. So I'm sure he'll be looking for some great people, and and I'm sure he'll reach out to everyone to find the right people. And I have a few ideas for him as well.
That's a very loaded comment, Jairam. Okay, this is a space that we will watch. Pleasure speaking with you this morning, and thank you for joining us for that quick comment for your former colleague and current friend, of course, Rajiv Anand, as he takes on charge. Everyone will be watching very closely what happens with IndusInd Bank. The stock now about 5.5% up. All right, turning attention to MobiKwik. MobiKwik in focus after posting first quarter numbers that saw a slight improvement on a quarterly basis. Before we speak to the management, let me bring in Harsh to give us more context.
Well, more to be desired from a growth perspective, I would reckon from a MobiKwik, because the expectation is they'll probably do 2,200 crore of top line this year, which will be tough to achieve given the way Q1 has panned out for a MobiKwik. So curious to know where that number lies with regard to the top line for FY26 that MobiKwik is targeting. Also, what are the levers for expenses either remaining stable or being brought down, because only that will calibrate profitability. The other piece is, yes, they're growing the user base well, but you have a customer acquisition cost which is saddling on the company of 42 rupees, which is the customer acquisition cost, and it's inched up substantially from the 34 rupee number, which was the case in FY25. So can they control that in a certain sense will also determine profitability going forward. But it's always all going to be about profitability, because that's where the industry as well as the investor sentiment is tilted towards.
Okay, Upasana Thakur joining in, Executive Director and Chairperson and CFO at One MobiKwik Systems. Upasana, always a pleasure to speak with you as always. Let's go through the quarter. It was a bit of a muted quarter. What do you think are the key reasons for this?
So firstly, good morning and thank you for having me on your show. Actually, I would like to say that it is not a muted quarter because see, last couple of quarters, we've already been presenting our numbers and explaining that Q3, Q4 of the last financial year, while we've done amazingly on the core payments business, on the financial services side, given the headwinds in the sector with regard to unsecured lending, we've not been able to distribute enough loans. So therefore, the performance in Q3, Q4 on the financial services side has been weak. Now, the right way to analyze the business is to see that, okay, now are they recovering? And I think that is what I would like to highlight, that Q1 has been an amazing quarter from demonstrating resilience as well as recovery. Payments business has again given amazing growth, very high GMV growth, the best contribution margin of any payments company in India. We are clocking at 15 net basis points in terms of payments margin, which is 4 or 5x of our close competitors. Now, on the financial services side also, if you will see, disbursals have gone up. This quarter, we have done about 31% disbursal growth in the ZIP EMI personal loan product that we have. Last quarter, we had demonstrated 32% disbursal growth. Along with that, gross margin also has improved in financial services, resulting in the fact that overall contribution margin for the company has improved this quarter, and the losses have also come off. Very simply put, last quarter we were at about negative 45 crores in EBITDA, and this quarter we are negative 31 crores. So we have made a big difference and covered almost 15 crores in one quarter. By that logic, if we continue to do similarly for the next 2 quarters, then we should be profitable in 2 quarters. Even if we are not able to do 15 crore every quarter, then we should still be able to recover, in the last quarter of this year. So I think that is the right way to look at it, because we've already informed that last year Q1, Q2 were our best quarters, and the downturn in lending only started in Q3, Q4. So any comparisons to Q1 last year is obviously going to show abysmal results. The right way to look at it is how much have they recovered from previous quarter.
Okay, fair, which is why we want to know your point of view. Just can you focus a bit on the target that you've talked about, the goal you've talked about of turning EBITDA positive in the next 2 quarters. How do you see that happening? Are you seeing the financial services growth that you've talked about improving at this click?
No, absolutely. So financial services, GMV or disbursal is growing.
Yeah.
The margins are growing. And also we have informed in our various quarterly releases that there was also a contractual change that happened last year, due to which currently, we are booking more cost upfront and the revenue is backloaded on these 12-month loans. These are all the reasons due to which post August or post September, we expect to see normalized results in our financial services business. So the business has not still fully recovered. The gross margin of the financial services distribution business is typically 30 to 40%. This quarter also, we have improved it from previous quarter 4 to this quarter 13%. So we are expecting the margin to expand further on financial services, the disbursal and revenue also to grow. In addition, if you will see, this quarter, we have optimized all of our direct costs. In our payments business, the payment gateway costs and the user incentives are the main direct costs. And in financial services, lending related expenses are the direct costs. All of these costs have been optimized 5 to 6% quarter over quarter from Q4 to Q1. In addition, the fixed cost of the company continues to be held stable for the last 5 quarters. This quarter, we are at about 108 crores of fixed costs below contribution margin. And it has been in the same number, 104 to 108 crores in the last 5 quarters. So strong cost control discipline, while at the same time expanding both the payments business, which has of course been a fantastic growth. We have grown 53% year over year and 16% quarter over quarter in our core payments business. So on the back of all of this, we feel confident that in the second half of this year, we should be able to turn profitable.
Okay. I think Harsh, my colleague, was talking about how the customer acquisition costs handling a lot of businesses, including yours maybe, and whether the company has the levers to control that and a guidance on that. Any thoughts there, Upasna?
Yeah, no, absolutely. I think the cost of user acquisition has gone up very slightly, and it has more to do with the fact that we use a mix of platforms to acquire customers. This quarter, we have focused a lot more on the American-owned companies, namely Google, Meta, etc. And given the dollar rupee rate, there is a marginal increase in the CAC, so to speak. We will continuously work on optimizing the cost of user acquisition while maintaining the user growth rate also. Going forward, you will see that the company will diversify in terms of how we are acquiring customers from different channels. So I'm not too worried about it, because even with a 40 rupee customer acquisition cost, this is still perhaps the best CAC across the fintech sector in India.
But can you bring it down, is the question?
Yeah, we intend to keep it. We intend to keep it in that 30 to 40 rupee range itself.
Okay.
That is the sort of the goal.
No. Okay. Fair call, but no definitive timelines about when it can come down substantially, I reckon. Not at this stage, at least, right?
Well, no definitive timeline for CAC per se, but for EBITDA, definitely I'm giving a timeline.
Yeah, perfect. Which was actually going to be the question, right? And you kind of answered it, that the EBITDA break even happens at a particular point of time, which is good to know. The other question that I think people would have in mind is that what about growth, if not going back to the heady levels that you had in the previous 2 quarters, which you said that then you guided that things will change. But I'm not talking about them going back to heady levels, but if I look at the next 2-year or 3-year period, do you believe you can show glimpses of that kind of growth rates anytime in the next 8 to 12 quarters?
No, absolutely. And, if you look at our track record, if I look at the last 8-9 quarters, financial year 24, every quarter we were profitable. Financial year 25, first 2 quarters we were profitable. In all of those timelines, we were growing very nicely, between 40 to 50% growth rate we were delivering in terms of revenue. So this year, unfortunately for us, our first few quarters after listing, given the sentiment hit that unsecured lending took, have not been so amazing in terms of growth, just because of the macro being a problem. But this year will end up being a recovery year for us. And then we expect that we will be able to deliver similar growth rates, going profitable, as well as delivering strong growth year over year. I think for a fast growing company, fintech company, if you don't expect a 30 to 50% growth year over year, then, what are the investors really looking for?
I'm Wondering, Pasna, you talked about financial services, and let me come a bit to that. What is the kind of GMV you see next quarter on? Are you stabilizing at the 16% growth?
So financial services, the GMV has grown about 31% this quarter over last quarter. And last quarter, Q4, it grew about 32% over the previous quarter, Q3. So we are expecting it to grow in a similar nature. We are not providing any guidance in terms of the exact GMV numbers.
Thank you so much for speaking with us. Upasana Taku there, One MobiKwik. She's the Executive Director, Chairperson, and of course CFO as well of One MobiKwik Systems. The stock coming off as we were having that conversation as well. The numbers came out yesterday. Meanwhile, markets also losing a bit of steam, not dramatically, but a bit of drag on the Nifty in the last 10 odd minutes or so. And you can see that pairing out, led by IT stocks. IT stocks, they're feeling the pain once again, and this is a similar pattern to what we saw yesterday. But now time for an NDTV Profit exclusive. In the wake of the Jane Street controversy, SEBI plans to create a specialized division to investigate potential manipulation by high-frequency trading firms. Charu is joining in with more details. Charu, now if you need a division, I mean all of SEBI's job is to surveil what's happening in the markets, but if you need a specialized division for market manipulation, what is that division going to look at?
So, see, we need to understand that the Jane Street order in the particular case is a precedent in itself. So, no such order in the past has come out. And being a high-frequency trading firm, the amount of trades that the entities were, carrying were huge. So, they needed a group of highly, trained individuals to look into such issues. Also, while the regulator is expanding the scope of its investigation into the entire matter, there could be more such instances that are uncovered in future. And that is why the people who were engaged, the core team that was engaged in dealing with the Jane Street entities issues are going to probably be roped into this division. And it is going to be a division that will first deal with the Jane Street matter and any other related parties that might come forward in this issue. And then later on, if there are any multiple market manipulations or major market manipulations by any foreign trading firms or high frequency trading firms or entities in Indian markets, this particular team or group is going to be equipped to deal with those issues as well.
On that note, Charu, we've also learned, right, that the stock exchanges are actually submitting regular data on Jane Street's trading activity across multiple indices to SEBI. I mean, what can you tell us about this one?
So while it was already known that the exchanges have been told to monitor the activity of Jane Street, we have newly learned that they are submitting regular data across indices. So the interim order that came in the Jane Street issue was only for banking Nifty at NSE. However, to expand the scope of investigation, they are now monitoring regular data across indices from Indian stock exchanges. Now, apart from this, we have also learned that SEBI is likely to come out with fresh slew of directions in a complete scope of manipulation that has come forward before a final or confirmatory order is out. So while an interim order in one of the indices was recently made public on July 3rd, there is scope for more such orders to come before a final confirmatory order comes. Meanwhile, Jane Street is not holding any big trades or any major trades because of the increased scrutiny, and the exchanges are also continuously monitoring the entire issue and sending regular updates to the regulator.
Okay, thank you for that, Charu. So this becomes a big one because, the whole Jane Street saga we thought was behind us, but the regulator now making it clear that they're not just putting it away, that, okay, the penalty is paid, it's all done. And maybe that's in some part leading to this muted volumes in the markets as well.
Yeah, you reckon, right? I kind of think so too.
I'm not saying that you need manipulation to make the markets run. Don't get me wrong.
No, this is a better part of the market. A low volume market, but no manipulation, as opposed to high value market, but with manipulation.
Not necessarily that everyone coming in high volumes
is manipulating. Yeah, we're not insinuating that.
Yeah, but having said that, you may have seen some muting of the mood till there is clarity on what is going to happen. No one likes regulatory action as a rule. All right, let me go across to the next story we're doing. And we talked about this at the start of the show today with Trump coming down heavily once again and making all of these claims and allegations on India's purchases of Russian oil. We're going to have a conversation now in a bit with Yogesh Patil from Daulat Capital just to understand the stock impact and impact on India's crude basket as well. But before that, let me go across to Somit Sarkar to understand that relationship.
Well, yes, if you look at FY25, how much India imported crude from Russia, it stood anywhere between 35 to 40%, depending on how the crude discounts were. It was around $2 to $3 per barrel, and that's the reason why India was sourcing crude from Russia. In the first quarter of 2026, it has come down to 33.7. Also, the crude discount has come down drastically from 2 to 3 to just now $1 per barrel. Yesterday, when we were speaking to Chennai Petroleum management, they were saying that now they are sourcing less than 20 to 25% of crude from Russia, given the fact that crude discounts on Russian crude has fallen below $1 per barrel. So India has been importing crude from Russia only because of the discounts, and whenever the discounts have come down, the crude imports have also come down. Now, if you look at the Russian oil math, Russia accounts for nearly 8.9% of the total global supply of crude, and Russia exports crude to China, India, EU and few other countries. But China and India source for the majority of the exports for Russia, nearly 85% of this, and of this 85%, majority portion is going to China. Now, China and India are the world's largest crude importer as well, and hence the crude imports is more. Now, if you look at this part, Russian crude discount in July was around, or in fact less than $1 per barrel, and this is as per Chennai Petroleum management. And yes, now we are importing less crude from Russia as well. That is what the management had clearly guided in the yesterday's interview. Apart from that, if you look at the fact that what will be the impact on the oil marketing companies? Now, lower crude from Russia does not mean that there won't be any crude availability. It is just that the fact that the discount amount will come down, and this lowering of discount could have a bearing on the marketing segment of the oil marketing companies, because with this discount amount coming down, the cost of sourcing crude will be higher, and that could have a bearing on the oil marketing companies' marketing segment, because every $1 per barrel rise in the crude prices lowers the marketing margin that an oil marketing company earns on selling every liter of petrol and diesel by around 0.5 rupees per liter. Now, this is the FY25 crude sourcing chart of India. Now, from Russia, we sourced around 36%, from Iraq 20%, Saudi Arabia was around 14% followed by UAE 9%, USA 6%, and then there are multiple other West African countries and other countries from where we sourced around 15% of the remaining crude requirement. Now, what would be the impact on the oil marketing companies? Now, every 0.5 rupees per liter drop in the marketing margin lowers Indian Oil Corporation, BPCL and HPCL's earnings or EBITDA by around 2 to 3%. But do remember that lower crude sourcing from Russia does not mean that there won't be any crude available. There is plenty of crude available in the market. It is just that there would be some impact on the earnings of the oil marketing companies.
Yeah, and you know, it's an important one. Somit, thanks for putting that into perspective. Yogesh Patil, Director Research Oil and Gas at Daulat Capital, with us on the show. Yogesh, good having you. Thanks so much for taking the time out. Now, have you been able to do some analysis about what is the kind of impact that happens for the businesses per se, if indeed there is a potential swap of crude sourcing from India's perspective?
Yeah, good morning. So as a fundamental analyst, I will try to bring some clarity on this retweet from MEA side. So hope you remember in 2018, Trump first administration asked India to divert the oil sourcing from the Iran. And we stopped the purchasing of oil from the Iran, while the China continued at a discount Iranian crude with a huge credit period or credit benefits. India lost that opportunity in last 4-5 years. Now, US again administration asking us diversion of oil sources from Russia. I strongly believe India will not make any same mistake again. And after reading between the lines of MEA statement, India is likely to continue a Russian oil import. That's one. Secondly, even in the rarest case of the scenario, if it happens, then the refiners to lose approximately $1 per barrel at a GRM level, considering that the India importing 35% of the Russian oil, and which is exactly that is processing at a discount of $3 per barrel. The least impact would be on the HPCL, where the refining portfolio is minimal compared to the marketing volume. Now let me throw some light on the oil demand and the supply market. If you just look at in last 3 to 4 days, the OPEC has decided to infuse the 548 kbpd additional crude from the September. Every global agency is highlighting that the global oil surplus is expected to be in the next quarter, or we can say a last quarter of the current calendar year. So this would be a big and best opportunity for the investors on a tactical bet side on the HPCL.
Okay. So that is the first aspect. The second aspect is because oil, Yogesh, per se looks to be not in a bull market, if you will, but maybe the gains would be capped. OPEC Plus has revealed its hand yet again, etc. Would you believe that substantial dips because of perceived news flow, if not actual news flow or actual developments, could be buying opportunities, or would you believe large institutional investors would want to stay out of this pack for the time being until clarity emerges?
So there are 3 analytical points here to note down. First of all, currently the crude prices are now in the range of $68-69 per barrel, despite a huge infusion of oil or more oil supplies from the OPEC side, and that is mainly happening because of the strong summer demand that is literally supporting the oil prices. Now look at fundamentally sitting in the next quarter, exactly in the 4-quarter calendar year, we will see a huge surplus of oil, and that will lead to a kind of oil prices decline from the current level, and that could be below $65 per case. Now you're asking me that whether the institutional investors will enter at this level or not. My judgment is very simple. Definitely institutional investors will tactically play this bet, and they will invest into the OMCs if any corrections from the current level into the OMCs.
So what would be your top bets over here, Yogesh? And let's put this in 2 parts. One, we look at OMCs, we look at downstream, upstream, and then of course we look at companies that are dependent on crude inputs coming in. As far as OMCs and ONGC, etc. go, how do you see these companies placed, and which are best placed?
So as far as the OMC is concerned, the HPCL, look at the HPCL where the refining is the lowest in terms of volume compared to the marketing. So the fall in oil prices, definitely the HPCL is the biggest beneficiary among the OMCs, and that's why the best bet would be the HPCL among the OMCs. Now coming back to the ONGC, definitely the ONGC will have a little bit negative impact considering the falling in oil prices in a coming quarter. And that will definitely drag a little bit on the earnings on the ONGC. So we would not prefer ONGC at this point of a time, but we will continue to go with the HPCL.
Okay, and in terms of crude sensitives, your Interglobe, SpiceJet, or even your paint companies, how much of an impact do you see?
I'm oil and gas analyst, so I would refrain myself.
Okay, fair enough. I'll tell you where the question is coming from. That if India and China do agree to reduce their dependence on Russian crude, and then these 2 nations with very large demand start going into the open market, then even if OPEC Plus has increased prices, Yogesh, you are going to see a spike just because of the quantum of demand that comes in, isn't it?
So that is what exactly I was pointing out. We have lost the opportunity 6-7 years back to continuing Iranian oil purchase at a discount rate with the huge credit benefits. Now the India unlikely to do the same kind of a mistake, losing a cheaper or discounted oil supplies from the Russian side. So that is what I was pointing at the start of my discussion. So it is most unlikely, and after reading in between the lines what the MEA has made it public yesterday night, that clearly indicates India is not going to divert its oil sourcing from Russia.
Okay, Yogesh, so one is this, right? And if I can just move tracks a little, because how the sourcing happens and how the cracks are, etc., for other companies as well. I don't know if you, for example, track the refiners, the MRPL, Chennai Petro, etc., and if you have thoughts there, because the expectation was that the results for Q1 will be good. They weren't. then the expectation is that Q2, Q3 might actually have good numbers for a Chennai Petro, for example, because of the diesel cracks. But if the sourcing of Russian crude were to go down, if it were, I know you are saying India will not make the mistake, but in case there is an alternative explode, etc., does it change the dynamics, and therefore is it possible to predict what kind of earnings would a Chennai Petro or an MRPL or some of the others make? So how do you approach that bucket?
Okay, so Q1 FY26 of these standalone refiners was expected to be better, but because of some volatility in a crude during the Israel-Iran war, that has impacted on the crude inventory side, and that lead to some crude inventory losses during the Q1 FY26. And because of that, a little bit disappointment was there on the MRPL and the CPCL number that everyone knows. Now sitting today in a Q2 FY26, two things keep in mind. Initial days of the July month, the Singapore GRM, the product cracks like the gasoline, gas oil, all these were really better. But in last 8-10 days, in the last 2 weeks, what we have seen a little bit a kind of a muted cracks on all these oil products, and that's why the Singapore GRM has come down to the level of $4 to $5 per barrel compared to what it was a $6 per barrel. So again, it is again expected to be a better Q2 because the petrol, diesel, and the ATF cracks are still better compared to the last quarter. I mean to say a Q1 FY26, and there would not be any kind of inventory losses sitting today in a Q2, and which will again support your thesis of a better GRMs in a Q2. So yeah, as per the guidelines and the guidance of the CPCL, they are expected to post the better GRMs in a Q2. So I would expect that will continue in a Q2.
Okay, thank you so much, Yogesh, for speaking with us. So, luckily, not too much reaction. This sort of tariff conversation and the bullying that is coming on Russian crude got muted because of OPEC Plus's decision to increase its output, which is why perhaps not too much reaction coming in. HPCL under a bit of pressure, IOC, BPCL as well. But the other big story, and we want to set this up for you, is the monetary policy meet which will take place is on actually. We'll see the outcome tomorrow, and the question is, will RBI see rate cuts once again, or will Governor Sanjay Malhotra hold rates steady? After an action-packed day today with many developments, all eyes now on the RBI MPC meet and the outcome. What the economists are telling us, that rates are most likely to be held steady. Vishwanath joins in with more detail. Vishy, apart from what the polls are saying or the economists are saying, is there a case for a bit more to go, despite the front-loading last time in light of all of the tariff headwinds?
Right. So what we do know at this point in time about the monetary policy is that there is a majority economist sort of viewpoint that the RBI and the MPC are going to hold rates. That is true. However, what you need to also understand is that the voices on the other side, which are expecting a rate cut, are not that silent. Actually, the breakup is quite strong. If you were to look at 10 economists that NDTV Profit has polled, 6 of them believe that there is going to be a rate pause. There's going to be a pause by the MPC. 4, however, still expect a 25 basis point rate cut. So the 60-40 ratio is not that small if you were to look at what historically these breakups have been like. If you were to look at the stance change, now remember that the RBI about 2 policies ago had come up with a neutral stance, and it is expected, however, majority of the economists once again are expecting that the status quo will remain, that neutral stance will remain. However, 4 of them still believe that there is likely going to be a change. The RBI might become more easing in its approach. Monetary easing might make a comeback on as far as the monetary policy stance is concerned. Just taking a look at where the macro indicators are at this point in time. Just look at where the June CPI inflation is. The retail inflation is about 2.1%. That's a historic low. And it's at the lower end of the RBI's tolerance band. Remember, 4% is a target, but plus or minus 2% is a tolerance band. So at 2.1%, it's at that lower end. And the July CPI is further expected to moderate. So that is going to put some amount of easing as far as the Monetary Policy Committee's discussions are concerned. Bank credit growth. There again, the June credit growth is at 10.2%. June is when the RBI made that 50 basis point massive rate cut, and since then a lot of banks have been cutting down their credit growth, have been cutting down their interest rates to boost that credit growth. However, that's still not showing in the numbers. You know, a year ago it was about 13.8%, so that's 10.2% is still quite low. If you were to look at where the GDP numbers are, the Q4 GDP number coming in at 7.4%, that showed that growth in Q4 was still strong. However, for the full year, FY25, that GDP growth is estimated at about 6.5%. So below normal, however, still strong. As far as IIP is concerned, that the index of industrial production is at a 10-month low already. And that's an important indicator because that shows that growth is slowing down, inflation is low, room for rate cut has improved, and that is why you're seeing that breakup when you look at the economist expectations. 4 out of 10 still believing that there's going to be a rate cut.
I wonder if Rahul Bajoria is in that list. Thank you so much for that, Vishwanath Nair there. Rahul, of course, is head of India and ASEAN Economic Research at BofA Global Research. Rahul, great to have you on NDTV Profit and chat with you today. Do you think there's room for more?
So I think there is room for more. I think the real question is, what is the right time to kind of deploy that particular room, right? And I think with the kind of uncertainty that's been there prevailing, especially from a financial market standpoint, and with the kind of numbers that we are seeing and the cause of those numbers, I think the RBI perhaps still will feel that there is room to kind of take a pause given the front-loaded action, and if need be, they can always deploy the limited policy space that the governor had alluded to in the previous meeting. But perhaps after seeing how exactly some of the supply side variables kind of pan out, right? So we are kind of going through a period where there is a lot of mixed evidence, as far as growth is concerned, and on inflation clearly there's a lot of comfort. So this does give room. But then we also think that there's a lot of room for patience as well, which the RBI has kind of been nudging us towards.
Okay. By the way, just a couple of details. We now formally have those listings. Rahul, just a moment. Just wanted to mark those because while Lakshmi India Finance, the new kid on the block, has listed at a discount, we do have Aditya Infotech starting with a 50% premium. Remember, it's a business or it's an IPO that got subscribed over 100 times, and hence this optimism around listing. Okay, getting back. So, Rahul, you laid emphasis on not on the room for the cut, but on the timing of the cut, as in when it were to happen. There's a lot of chatter, Rahul, around how inflation in the US might pick up, and because of this whole tariff piece, etc., and despite the trade deals that the US has struck, we are looking at a period of slightly higher inflation than earlier envisaged. How much would that play on the minds of emerging or ASEAN central banks? Because thus far we know they have preempted, or rather not paid complete heed to what might be happening in the US, but looking at the internal factors which are now more in control. Would the same happen going ahead?
Yeah, so at this point in time, with the fact that we have had a weaker dollar for quite an extended period, I think that has kind of given a lot of room for central banks, both in India and in Southeast Asia, to kind of preempt and cut ahead of the Fed. As you might know, Bank of America has had a fairly out of consensus call for a while of not expecting any Fed rate cuts through 2025. We continue to stick to that call. We think that, the fact that there is a higher tariff rate, effective tariff rate that the US is settling at, and at the same time, while the labor market is slowing, the stagflationary scenario probably does not give a lot of room for interest rates to come down in a front-loaded manner. So it's not going to be a cause of support. But certainly if the dollar remains weak, I think that gives a bit more wiggle room for central banks, as it was evident in case of India as well, that, there is room to cut. But then largely speaking, I would say the domestic environment is what is dictating this entire monetary policy cycle, both in India and in the rest of the region as well.
Okay. Rahul, what are the key points that you're looking out from the speech? I mean, the consensus is that there will be a pause, but what would you be watching out for, especially since inflation has been so benign?
Yeah, so I think the main emphasis is on growth, right? Because this particular monetary policy cycle was essentially triggered after the growth numbers started to weaken quite actively late last year and, in the first half of this year. Now, since then, we have seen both fiscal policy and monetary policy turn a bit more counter-cyclical. So we have seen, government spending pick up. We have seen rural activity remaining relatively resilient. And then monetary policy obviously has turned more accommodative. So I think while inflation is a necessary condition, it's essentially the expectations around growth that will anchor RBI's view. And inflation there becomes, I would say the pivot factor on which they can kind of give some guidance about whether, in the future, once the festive cycle plays out and, we see whether the economy is recovering or the economy is slowing down, then the RBI will basically use both a combination of low inflation and weaker growth to justify more policy action. We don't think that is something they are going to use that right now to do anything, but they will essentially lay out a path towards which, or conditions in which they can potentially cut rates. So I would look for dovish guidance from the central bank, but, a promise of sort of not acting now, but continue to watch data in order to gauge what can be done in the next 2 to 4 meetings.
Okay, that seems likely actually, because growth is going to be, and pushing growth is going to be on top of agenda now that inflation has largely been brought under control. Thank you so much, Rahul Bajoria. Pleasure speaking with you as always. All right, I just want to take a look at the two listings. Those are the big ones this morning. One has been a super hit, one has not. Lakshmi India Finance at about an 8% discount, but look at Aditya Infotech. I think 675 rupees was the issue price, and it's at 1,017. I know it was wildly oversubscribed, but we have seen that recently, where you've seen huge oversubscription numbers and nothing really happens on listing.
Yeah, you're right. I mean, I think even yesterday or day before was listing, just about an 18 rupee premium on that base. So you're right. Yeah. This is a good surprise actually.
Yeah. All right. So more on those two issues when we come back. But before we get into that break, here's a quick update. Anil Ambani has left Mumbai and will be appearing. He seems to be on his way to appear before the Enforcement Directorate in Delhi in connection with a 17,000 crore rupee loan fraud case. These summons follow searches conducted last week across multiple companies and executives linked to Ambani's business group. Remember, NDTV Profit has been at the forefront of the story. We were the first to report on the searches at the campuses and the ED questioning of bankers in this case as well. We will be getting you all of those live pictures and details as we move ahead. All right, you're seeing live pictures right now from outside the Enforcement Directorate in Delhi, and this is interesting, Neeraj. We're told that there are 3 gates outside the Enforcement Directorate. Now we don't know from which one he's going to enter, so we've manned all 3 gates. We have cameras at all 3 gates. Of course, we had cameras at Anil Ambani's home this morning as well, so we got those visuals of him heading to the airport. But this is an important one because an ED summons to a large corporate, a corporate of this stature, has not really happened. And there was always the option of him asking for an extension or delaying it. He doesn't seem to have done that yet.
Yeah, viewers, and lest you call us bloodhounds, we are, because that's what we do for a living.
Yeah, that's how news works. All right, so you're seeing some of those live feeds coming in. We're going to be on top of that story. We'll take a very short break, but we're coming back with a lot more.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
Welcome back. You're watching India Market Open. All right, time for an NDTV Profit exclusive. Paytm is poised to edge closer to full Indian ownership as Ant Financial plans a complete exit through a block deal. My colleague Shrimi is joining in with more exclusive details.
Yeah, so Tamanna, Ant Financial is planning to fully exit Paytm through this block deal, and shedding the China ownership is what the overall broad idea here. So what we are picking up is that existing investors have showed interest in participating in block deal for Ant exit. However, this is going to be open market block deal, so they can't really control that. But what sources are telling us that it could be picked up by the identified stakeholders. Now, move is expected to help Paytm securing regulatory approvals as it planned to enter new sensitive business like insurance, where the ownership structure norms are quite stricter, and this exit aligned with the growing regulatory concern around China origin investment, especially in Indian Fintech. Remember, government in 2020 introduced Press Note 3 mandating approval on all kind of Chinese investments. So this is in line with that, and at this time finds the valuation very attractive, even though they are getting in discount. And also sources are telling us that company working, Paytm working to resolve and settle all its existing pending matters with regulator. In fact, 10 to 12 application of settling the matter in different issues, including FEMA, is already under consideration. So clearly this exit is not just about one investor leaving. It's also about Paytm moving closer to becoming a fully Indian-owned company, which could be key to their future plans and long-term stability. So all eye on how this deal unfolds and what next for Paytm.
Actually, I'll take from there, Shrimi. Thanks for that. And this certainly keeps Paytm in focus. What also is in focus is Godfrey Phillips, because on the back of strong set of numbers in the first quarter, that stock is active too. Mahima is standing by with the earnings fine print. Mahima, 8% for Godfrey Phillips.
Right, so it's a good set of numbers for sure this quarter when it comes to Godfrey Phillips, and I think it's they don't disclose their overall volume growth, but the kind of uptick that we've seen in the top line, it seems like the volume growth has been in double digits for Godfrey Phillips, and this is also we can take this reading from ITC's earnings as well, because good volume growth in cigarettes is seen for ITC as well. In terms of the overall PAT also, the adjusted PAT has seen a growth of around 25%, barring its one-offs. In terms of the volume growth, growth, that's the key reason as to what's probably aided the top line. Cigarette and tobacco revenue has seen a growth of around 33% YOY basis, and even profits have seen a growth of around 28%. And this is despite of the tobacco inflation that has taken place, in the past quarter. They've also announced 2:1 bonus issue, and the record date is set on 16th of September. In terms of the overall numbers, revenue saw an uptick of around 36 odd percent, EBITDA up 25%. Margins have taken a hit. This is because of tobacco inflation to that 22.7% mark from a 24.8% mark. And overall net profits are up 56%. But as I mentioned, adjusted PAT is up around 25%. Lastly, the company has also gone ahead and approved to increase their authorized share capital from 25 crores to 50 crores. So this is the overall view of how Q1 has panned out, and of course the updates with regards to where Godfrey stands.
Okay, thanks a lot for that, Mahima. So interesting morning. On a flattish to a marginally lower morning, there are some stocks which are bucking the trend, if you will. Let's welcome in a market voice to make sense of what to do in a scenario like this. Ashwini Agarwal, founder and partner at Demeter Advisors, with us on the show. Ashwini, great having you as always. Thanks for taking the time out. And I wonder if, Ashwini, discretion is the better part of valor right now. Stay on the sidelines maybe, because I was just thinking about it. Both on the upside or on the downside, it's almost becoming very, very difficult to measure the risk reward, let alone the gumption to enact a trade.
Morning, Neeraj. I think you're right. So what's happening is that there are a lot of events which are shaping up the market. So on the downside, you have a very weak earnings season playing through. You have all the noise on the tariffs that is roiling the market sentiment. And lastly, you have a huge amount of paper supply via the IPO and offers for sale that are going on a day-to-day basis. So, there's really all the three factors hitting the market. And on the upside, one hopes that, what RBI has done by way of improving the liquidity, and there is surplus liquidity of 4 lakh crores in the banking system, what they've done on interest rates, and apparently another 25 basis points might be on the annual. That might help demand with a lag as the year progresses, but that's just a hope. As of now, there are no signs that consumer demand is anything to write home about. So yes, it's a very, very challenging situation, both on the downside and on the upside. My sense is that, the correction that we have seen in the last 3 to 4 weeks probably limits downside to not more than 5% from here, but I'm just kind of sticking my neck out, and it could be a lot more. Who knows? Depends a lot on how the US does from here.
So Ashwini, okay, that's an interesting one. So are you saying that if the US, the US as a nation, what it does to tariffs, yes, or what do US markets do per se?
How do the US economic data points read out, and how does the US market react to that? Because we are starting to see some weakness in the US economy. The markets have been very, very strong till now, but will this continue or not is the real question.
Ashwini, hi, Tamanna here.
Morning, Tamanna.
Do you think that there is a bit of a thick skin that Indian markets now have to all of the Trumpness coming out every morning? Sorry, I'm trying to find more words to describe what we're seeing. Or do you think that we're underplaying the impact of what he's saying? When we had a commentary this morning from one of our experts saying that his bark is worse than his bite. Can we really safely say that?
I have no idea. I wouldn't want to hazard a guess as to what happens on the policy front, whether in the US or here. But what I would say is that, exports to the US at the end of the day are 2% of the GDP. Even if you take a big haircut there, does it really sink India or Indian GDP? The answer is probably not. Yes, from a headline perspective and from an export earnings perspective, it could be a little bit of a challenging period. But, we'll have to weather the storm. It's up to the Indian policymakers to decide, and for the US to decide what each country will do. We as market participants will have to just kind of muddle through. That's how I see it at this point. So the policy front, I'm not so bothered about, to be honest with you. I think the real question which I'm struggling with is that why is demand in India so weak? I mean, we've had now, 6 months of concerted push from the government on government capex. We've had better liquidity. You've had better rates. If you read through the commentaries from the banks and from the lenders, they seem to be positive about asset quality, especially in the microfinance space. In a quarter or two, they expect things to turn around quite smartly, but the market doesn't seem to buy that narrative. And all indications of demand are very soft. And to me, that is a real worry.
What would you do right now then? I mean, there's one take for caution, and this is something that Neeraj spoke about earlier as well. But this is also a time for opportunity, you think, because domestic, fundamentally sound companies, are there enough out there?
Yeah, I mean, if you sift through the market carefully, you can find bottom-up earnings stories which are India-only in nature, have very little to do with international trade, and are in sectors where demand is reasonably okay. So, I don't own Godfrey Phillips, and I'm not recommending that stock, but just going back to the comment, your analyst was making. I mean, it's a business that's winning market share, and therefore its earnings are beating that of the market leader. I mean, these kind of narratives are there. So you have to sift through the market on a bottom-up basis, find companies that are either winning market share or are in an interesting space which is continuing to grow despite all the headwinds we are seeing. The consumer, in my view, is not consuming, the traditional things, the products or cars or automobiles, but they are spending more on services, they're spending more on entertainment, travel, etc. If there's a way to play that. I mean, those are the areas that you have to seek. And, Tamanna, I cut my teeth in the market through the early 90s through till 2003. The market went nowhere. Okay. But you had plenty of bottom-up stories that made you money. And I think we are back in that kind of a situation where headline markets may not do much, but there'll be individual stories that will do well.
Are there enough individual stories this time round in the consumption space? Is that where you see some of these opportunities? Would you look at maybe a rebound in IT? Do you think IT has been beaten down more than it deserves?
IT, I'm not very sure about, because I think, the hiring patterns are still very mixed. I mean, if you just see the commentary from Infosys and TCS, I own neither, just to be very clear. This is a general discussion. They're diametrically opposite. I mean, one seems positive about hiring and the other seems quite negative. So I don't know where IT services are going. So there again, you might find one or two bottom-up ideas, but I think as a sector, I'm still not very clear where it's going. In the consumption space, yes, there are stocks that are looking good. I think in the construction infrastructure area, I think there are select stories which are good. In healthcare, there are stories both in pharmaceuticals as well as in broader healthcare services. There are stories which look good. And mind you, I've moderated my return expectations significantly. I mean, if I think that one can get mid-teen returns in a stock on a bottom-up basis, I think that's a fairly attractive outcome. That same number, say 2 years ago, would have been north of 20%. So, you have to be kind of cognizant that the markets are expensive and taper your returns. But if you do that, yeah, there are bottom-up stories. I mean, at the end of the day, every individual investor needs not more than 20, 25 names. And I think, can we find that many names? The answer is yes.
Where would the top decile of themes be where you're finding these opportunities, Ashwini? I know you've liked some real estate in the past, you liked select bit of energy transition in the past, you liked select bit of pharma in the past. What's the calling now?
If you ask me, it's the resetting of the marketplace. In many areas, whether it's in energy, whether it's in go-to-market, like think about it, okay, traditional retail versus quick commerce. You have similar sort of narratives playing out in many industries. You have shift in market shares taking place. I mean, again, just to go back to the Godfrey Phillips versus ITC example. So I think in a broad market where the broader economy is not doing much and aggregate demand is probably not doing much, you have to look for areas where somebody is eating somebody else's lunch. Okay, and that's where you have to go. I think that would be, in a broad sense, what I would guide to. I mean, I can't unfortunately speak about individual names, but that's what I'm looking for. I'm looking for companies which are uniquely positioned because of their circumstances, because of the bets they've made in the past, which are coming now to fruition, whatever it is, and who are in a position to grow, notwithstanding the challenges.
So since I mean, not to take that pun so far, but do you think platform companies make the cut to companies that are eating someone's lunch? Definitely well positioned in areas where others are not there. The moats seem pretty decent. Not asking you to name names, but do you think that there is some scope there even now?
Yeah, in some names, yes. In some names, there is a scope now. And similarly, delivery, not the stock, delivery companies, I'm talking about logistics companies. I think you're seeing market consolidation there. If that trend kind of continues, you might see pricing power come back in that industry. And which players to bet on is for every individual to decide. So you can look at consolidation as a theme. You can look at market share shifts as a theme. You can look at changing consumer behavior as a theme. You can look at healthcare. You can look at pharmaceuticals, which continue to do very well despite all the challenges. And mercifully, till now, at least, they haven't been hit by tariffs. And that might come, who knows? But for the moment, not. So those are all the things I'm looking at.
Okay, thank you so much, Ashwini Agarwal, for speaking with us today. And I like that thought. Companies that are eating other companies for lunch or getting into that space and actually coming out on front. So very competitive ones with a high moat.
And lower your return expectations, because if 2 years back, the average return expectation was 20% returns, he's moderated it to about 13%. And that's a blue-blooded, deeply insighted investor talking about very moderate return expectations.
Yeah, absolutely. Well, that's all the time we have on this edition of India Market Open, but stay tuned. Ask Profit comes up next, but also our in-depth coverage of what's happening with Anil Ambani. He arrives at the ED headquarters at 11 a.m. We have that covered from every angle. So watch out for all of those news and developments after this break.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो, बोलिए मैडम। डब्बा टेलिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hi, thanks so much for joining in. You're watching NDTV Profit and my name is Alex Matthew. Now, generally this show gets you answers to all of your stock related questions, but there's quite a bit that's happening that you need to know about, and we'll try and bring you all of that over the course of the next 1 hour, not least of which is the Enforcement Directorate investigation into wrongdoings by Anil Ambani group companies, and of course Anil Ambani going to be questioned by the Enforcement Directorate on a variety of those issues. You can see the live visuals on your screen of him having reached Delhi, and he will soon be appearing in front of the Enforcement Directorate for several issues that will be spoken about. Now, let's talk about the equity markets in just a bit. These are in fact live visuals from just outside one of the gates at the Enforcement Directorate. There are 3 such gates. We're going to have 3 reporters that are joining us live from the field to give you some context on why Anil Ambani is at the Enforcement Directorate today, what are the likely questions that will be asked to him, and what the context is. Could he face legal action down the line? Of course, you will know if you paid attention and watched NDTV Profit over the weekend that a lookout circular was issued by the Enforcement Directorate to Anil Ambani, and this is actually something that will prevent him from traveling out of the country. It's something that has been done in past instances as well in high-profile cases, but in particular with regard to Anil Ambani, he will not be able to leave the country. What you're seeing on the screen is his arrival. This is some time back, possibly about a half an hour back or so, or 45 minutes back, when he made it to the Enforcement Directorate headquarters in New Delhi. And of course, you know that the Enforcement Directorate has offices across the country, including in Mumbai, but in New Delhi, this is where he is going to be questioned by the officers of the Enforcement Directorate. We will soon have a reporter on the field in Mumbai as well, outside his home, because there's one statement that was made by Anil Ambani's camp, or one of his companies, about the allegations that have been made. We will bring you details on that in just a bit. But before we do, let's talk about earnings. And Suyog Kotecha, who is the Executive Director and Chief Executive Officer of Aarti Industries, is joining me now to talk about his results. Suyog, thanks so much for taking the time. I appreciate the time that you've taken. Good morning. First, tell me what has worked and what has not in the quarter gone by, and the outlook for FY26.
Yeah. No, I think Q1 was a tough quarter, relatively tough quarter. I think we went through some major disruptions, including significant corrections in our raw material itself. I think two major raw material that account for 70% of our purchase went down by almost 15-20%, which meant we had to take a significant amount of inventory valuation loss of roughly 30 odd crores. And the second, the global geopolitics continued to impact sort of shipments, especially export shipments, where Iran-Israel war led to a lot of choking of vessels coming to Kandla port, which led to deferment of some of the shipments from June to July. So I think with those two major reasons, I think Q1 was roughly 19% down quarter on quarter. I think the shipment delay, of course, will get recovered during the quarter two. But now sort of we're dealing with the US dynamic that has again triggered up in the last 3 to 4 days. So overall, a bit soft Q1. I think on the strategic initiative side, we continue to make the progress. So I think the three major levers that we had given in our midterm guidance around cost optimization, operating leverage, and capex-led growth, I think all three are on track. Cost optimization continues to go as per plan. We are expecting to implement most of the initiatives by the end of this financial year. Operating leverage in terms of ramping up volumes from already announced capacities is also happening well.
Before we get to that, I have a couple of specific questions on points that you've just mentioned. So as I understand it, benzene and aniline prices changed dramatically and you have inventories. And so therefore, those inventory issues were a bit of a concern in the first quarter. I'm just wondering, to what point will that be a drag, and where do you see that settling? Point number one. Point number two, are you on track to achieving that guidance of 1,800 crore to 2,200 crore on top line in the next 3 years, as you've stated?
Yeah, so I think on the first one, near term, I think the issue is kind of settled. We've seen kind of bottoming out of pricing for both benzene and aniline over the course of last 30-45 odd days. So we expect the inventory valuation related issues are sort of behind us. On the second one, I think on our midterm guidance, and I was sort of talking about it, nothing has changed for us to revise that. I think we basically banking on three major areas for that bottom line growth. Cost initiatives are on track, both variable as well as fixed cost. Operating leverages, most of the capacity expansions on the existing product portfolio are already complete. Now it's a matter of ramping up the volumes and doing market development there. In near term, with the US tariffs, we have a bit of a speed bump. So we have to figure out how to diversify away from US market, which used to account for 15 to 20% of our revenue. But we will figure that out over the course of next few quarters. And the third one is a capex-led growth. That's also on track. The greenfield site in Jagadia will go through phase-wise commissioning throughout the next 3 to 4 quarters. Some assets will get commissioned in the second half of this year itself, and remaining part of the block will get commissioned in the next financial year. So I think all three buckets well on track. So we retain our medium-term guidance.
Retaining medium-term guidance, but in the interim, would you say, Suyog, that we're likely to see a couple of soft quarters while you realign? And you've pointed out that you want to reduce dependence on the United States. We all know what is happening there. So one, that, do you anticipate FY26 to be a consolidation year where you are realigning things? And is pricing likely to be a little bit challenging in the near term from that perspective?
So second part of your question, pricing will remain challenging. I think we've been talking about it for a while now, that the global demand supply imbalance will take some time to recover, which will mean pricing and margin recovery will take a decent amount of time to come back to historical levels. The first part of your question in terms of US, we're still frankly watching out where it settles. I think we're not going to take any calls based on what we have seen in last 1-2 weeks time frame in an immediate sort of manner. As I said, we have 15 to 20% exposure to US. We have a variety of products that we sell to US, and different product have different implications. Some of them are exempt. Some of them we have a global competition where we have to watch out for a relative tariff disadvantage. And some of them are pure market development efforts where affordability of the customer itself becomes a bit of a question mark with 25% plus unspecified penalty kind of tariffs. So we will evaluate that over the course of next few weeks and sort of realign our market footprint accordingly.
So, Yog, I'm sorry to rush you, but we're running out of time. I just want to ask a small clarification on the margins front. Assuming that pricing pressure becomes a challenge, or remains a challenge, we saw it drop quite dramatically to sub 12%. Is that likely to be the run rate in the rest of this financial year as well? I'm talking about operating margins.
Yeah, so I think the margin will remain what we saw sort of average of last year, right? So we're talking about 12.5 to 13.5 kind of percentage is what we are tracking at this point in time. So we will try and hit similar sort of margin profile even during this financial year.
So Yog, thanks so much for taking the time. Appreciate the time that you've spent, and I wish you all the best in what is likely to be a challenging FY26.
Thank you.
All right, let's continue to speak to managements. And in fact, you have the debutante on the stock exchanges today, Lakshmi India Finance. It listed at a discount. It is operating in a space that is facing its share of challenges. And Deepak Baid, who is the managing director of the company, is joining me now to talk about a little bit of that. Mr. Baid, thank you so much for taking the time. And first of all, congratulations on a successful IPO. I guess the street is taking into account everything that is happening in the MSME space and the challenges that you might be facing on the lending side. You want to talk about that first? How are you navigating this slightly challenging environment?
Yeah, namaste. Thank you all first, and I really thanks for investors for taking faith on us and investing in companies. So yes, MSME, we are into MSME business where we are into tier 2, tier 3 cities of the states, where we are funding to deeper rural cash driven businesses and taking security as a collateral from them. So these collaterals are all appreciable collaterals like residential and commercial, where they have a self-attachment with this property. So they are doing well. They are making. They are able to expand themselves. They are able to grow more, and I think so. The quality of that is why the quality is better, and we'll plan for much better quality in future.
So, Deepak, the question though is, and it's not a case with you because your return on asset remains strong at more than 3%. But certain other players in the space, in the lending space, are facing challenges on credit cost. Those credit costs have gone up. And so I think there's a little bit of caution on the part of the street to say, look, let's wait for a couple of quarters to see what the trajectory is for Lakshmi India Finance before we bet whole hog. And here I'm talking about the listing discount that we are seeing on the screen right now. So would you say that you're likely to be able to maintain credit costs at a comfortable level? ROA will remain above 3% for the foreseeable future?
Yeah, sure. Return will be, we will be maintaining the asset quality, and ROE will be better with this fundraise, and we will add more risk covering part. Our credit process, we will strengthen more credit process so that we can maintain the quality, and our rating, we are expecting our rating up also, so that will help us in further growth, and we can with that we can have a good quality of customers on board.
Okay, on the loan trajectories side, and here I'm talking about the disbursement of loans. What color can you give me on how that is panning out in the current financial year? Do you anticipate that the volume of loan or disbursement of loan will pick up heading into the festive season?
Yeah, of course. So coming months are really good for banks or NBFCs and all BFS sector, in fact, because it's a festival season, and we have seen the past also that these quarters performance are better than first quarter, and we have a plan to open more branches in same deeper rural areas, and to serve such customers, and to have on board them, and have a better AUM growth and better disbursement in future.
Kind of AUM growth that you're anticipating, you don't need to give me an exact number, but what have you witnessed in the past and what is likely in the future?
Yeah, so past we have grown with 30-35% CAGR, and same pattern or better we are expecting numbers from which we are able to grow, or recently the branches which we have opened last year. So now the results is going to come from those branches. So I believe that this numbers will be much better as compared to last year.
All right. Thanks so much, Deepak, for joining me today, and pleasure speaking with you. Look forward to the next chat as well. Lakshmi, India Finance, they're listing at a discount, not the best start to their journey on Dalal Street, but then it's a space that they're operating in. Now, let's circle back to one of the most important stories of the day. Anil Ambani is, even as we speak, appearing before the Enforcement Directorate in connection with a 17,000 crore rupee loan fraud. And the summons, of course, follows searches that were conducted last week across multiple companies and premises of companies that are promoted by him, and executives also listed or linked to the Ambani businesses have also been investigated. Remember, NDTV Profit has been at the forefront of this story. We were the first to report on the searches at Anil Ambani's premises and the Enforcement Directorate questioning of bankers in the case. We now have 3 of our reporters on the ground at various locations across the country, including the Enforcement Directorate office in New Delhi, including the residence of Anil Ambani in Mumbai, where we have had a reporter on the ground, as well as in other parts of the country as well. But what we're going to try and do for you over the course of the next 15 to 20 minutes is give you some perspective on what is happening today, why there is a questioning of Anil Ambani, and what the implications are from a legal perspective. So let's first go to Aishwarya to give you a sense of what the ED has done, what the Enforcement Directorate has done at this point, so that it gives us a little bit of context on what to expect. Aishwarya.
Right, I'm stationed here outside the headquarters of Enforcement Directorate's office in New Delhi. What we're learning and picking up right now is that Anil Ambani has left the Delhi airport, is on his way currently to the headquarters in New Delhi. The headquarters right behind us. A whole lot of police has also been stationed here for security purposes, and the ED is likely to speak to Anil Ambani as well as some top executives of this particular Anil Ambani group as well. And for context, of course, you have mentioned the case, of course, is one of the biggest corporate frauds recorded to the tune of 17,000 crore rupees. Apart from that, we will also be looking at bankers who have been summoned by the ED, both private as well as public lenders. So that's on the cards, and we'll see and keep you posted on the developments further that happen here at the Enforcement Directorate headquarters.
I will come back to you to give us some perspective on the timeline and the history of the probes. But before we do that, Anushka, I want to come to you. We've spoken over the weekend as well about the lookout circular that was issued and a few of the details on what has been done so far. So you mentioned at the time that there are several pieces of evidence that have already been collected by the Enforcement Directorate. What can you tell me about this body of evidence that they have so far collected?
That's right. The ED has, in fact, recovered, a voluminous incriminating documents. Not just that, they have also, in fact, taken a lot of computer peripherals regarding this whole money laundering case. Several of the bank, executives have also been written by the ED, to provide them the, whole report about how the money was, in fact, sanctioned to the Anil Ambani linked groups. There are three companies, in fact, who are right now under the radar, that is the Reliance House Finance Limited, Reliance Commercial Finance Limited, and Reliance Communication. ED has, in fact, right now issued a lookout circular for Anil Ambani, and one major arrest has been also, in fact, made in this case. Partha Sarthi Biswal, who's the MD of Biswal Trade Link Private Limited, was arrested. He had given a fake bank guarantee of worth rupees 68 crore to 3 companies linked to Anil Ambani. Not just that, there were several, irregularities that was in fact registered at, the Biswal Trade Link Limited when the ED went there to raid the Bhubaneswar and Kolkata, branch of the office. They found that there were no regular updates about how the office was in fact operating. The ED had found that there were no shareholder register. There was no proper accounting that was done. The turnover of the transaction of the company far exceeded the declared turnover of the company. So that is why this whole arrest has been made. Today there is a possibility that Partha Sarthi Biswal will be in fact sitting in front of Anil Ambani while the ED will be questioning both of them regarding this whole case. Not just that, ED has in fact also written to 10 to 12 banks, asking for them and seeking a whole detail as to this whole case. Axis Bank, ICICI Bank, HDFC Bank, Punjab and Sindh Bank, Bank of India, all of these banks have been asked to submit a detailed report. Now, a whole money laundering to the tune of rupees 70,000 crore has been in fact made in this, being alleged in this whole case. Anil Ambani is likely to appear in front of the ED. We are stationed here.
Got it, Anushka.
And we are in fact also showing you the visuals of what this current situation, at the ED office looks like. There is a
Got it, Anushka. So let me go across to Shrimi Chaudhary, who's also joining us from New Delhi. Shrimi, a couple of questions arise, and specifically, I'm sure our viewers want to know what are the kind of questions that are going to be posed to Anil Ambani. Of course, this is likely to be a questioning that takes place over the course of several hours, and is there likely to be cross-questioning also that takes place?
Yeah, so Alex, what typically happen is that, when a high profile like this and the top guy is summoned, they make the person sit for first few hours, and then the investigation lead, who is leading the entire investigation, they will send the team to that separate room where the person is seated, and then they start gradually, asking a few questions. Of course, they prepared a set of questions, the proper questionnaire based on the evidences, based on the documents, the audit finding, etc. But how they start is they start very gradually. And in this particular case, of course, the first up, the question will start with the quid pro quo allegations which Anil Ambani is facing with Yes Bank Rana Kapoor, and as we know, have been reporting that how Yes Bank has sanctioned loan to Reliance, and then it came back to the family office of Rana Kapoor. So that is one key allegation. The another one is that how those loans, the depositor money, has moved to several shell companies of ADAG group of companies, and the whole modus operandi with all important documents and evidences. They are going to present that in front of Anil Ambani is what we are getting indication. And third, of course, the bank guarantee, the fake bank guarantee through this Odisha-based entity which who got arrested last week, and with all those statements which ED is recording in the sidelines with the Odisha entity, those questions and those evidences will also be presented in front of Anil Ambani is what sense we are getting at this point.
Got it. I will come back to you on a couple more questions, Shrimi, and we've got Agnidev Bhattacharya, who's outside the residence of Anil Ambani in Mumbai as well, just to give us a sense of what the response from the Ambani camp is. But before we do, we're joined by Jayanand Dehadri, who's a lawyer at the Supreme Court. Thanks so much for joining us this morning, Mr. Dehadri. I just want to get some perspective on the legal ramifications of this. At this point, of course, it is questioning of a high-profile individual in the form of Anil Ambani. How much of a bearing will this have on him personally? Because we're talking about irregularities that had to do with companies that he promotes.
Hi, morning, and thank you for having me on your show this, today. See, I think all of what ED has said so far, to be fair, is in the realm of only allegations. And this is a part of their process. They're conducting an investigation. They have every right to do so. And in the course of that investigation, they have summoned an individual whom they believe to be in some manner having knowledge of this entire issue. So I wouldn't jump the gun right now and say that Mr. Ambani, is guilty of something, or that, he's going to be indicted or charged in some manner. This is all rather preliminary. Let's also not forget that the enforcement directorate in our country, unfortunately, has a very, very checkered history of prosecution. Most of their cases end in either discharge or acquittal, so they don't really end up prosecuting very many people. I mean, successfully prosecuting very many people. So now, of course, I have read the news reports like all of us have. I wanted to make one very important technical legal point that merely, if a company gets a loan and passing on that, those funds that have come in as a loan to other group entities doesn't per se become an offense of any sort. So this is a complete misreading of the law. In fact, there are judgments of the Indian courts which clarify this aspect, that merely because some loans have come from a lending agency and those loans have been shared amongst other group entities doesn't by itself make it money laundering or some sort of criminal offense. So I think I would watch this very cautiously.
Yes.
I'm not convinced that this is going to have some very major impact either on Anil Ambani or his company. I would wait to watch what the developments are. And from my vantage point right now, I don't think this is a very big deal, frankly.
Okay. Mr. Dehadra, so that is one issue that you pointed out. The second issue, of course, is when arrest took place over the weekend or perhaps just before that in the bank guarantee case, where a fake bank guarantee was used. And seemingly, just on the face of it, and this is not a legal opinion, this is the opinion of somebody watching this from the sidelines, you can't not know that a fake guarantee is being used, especially when it is in the form of a State Bank of India guarantee. And so therefore, there is an element of a question that needs to be answered. Would you agree?
100%. I mean, if there is something that the agencies have found to be troubling, it's their duty, in fact, to go in and to ask all the right questions. Now, insofar as this Orissa issue is concerned with the bank guarantee, even with that, I would imagine, I'm not a judge and I'm nobody to really sit in judgment of any of these individuals. But I can tell you one thing, that the top person in any organization, it is impossible for that person to know what their sort of subordinates are doing down the chain. It's very difficult unless the agency is able to bring, the investigators are able to bring some concrete material to say that no, Mr. Anil Ambani knew exactly what was happening. He's participated in this conspiracy. He has asked for it to happen in a particular way. Now, unless all of these aspects come into the picture, I don't think it's fair to point, for ED is of course doing its duty, but I don't think it would be right to jump to any conclusions. Fine, there are some questions being raised.
But Mr. Dehadra, having said that, and a counterpoint, please correct me if I'm wrong, if I remember correctly, in the Tata case where Cyrus Mistry was asked certain questions, ultimately this was a defense that he was making, was that at the vantage that he was at, and because he was at the helm, he didn't have absolute control of everything that was taking place down the line. And if I were to draw a journalistic parlance, ultimately the buck stops at the editor. If there is a mistake in a newspaper, the editor is hauled up by the authorities, and so therefore the buck has to stop at the person who's at the helm. Would you agree?
I compliment your memory for recalling that, the aspect, what you mentioned about Cyrus Mistry. But I will say this to you. The buck, of course, stops at the top when it comes to, say, a civil liability. But when it comes to criminal issues, there is no vicarious liability. Anil Ambani cannot be held vicariously liable for a criminal act that he has not committed or someone down the line has committed. So, which is why I'm saying that only a fair investigation, once there is a full-blown investigation, all the facts will come out. So I agree with you that this is troubling. On the face of it, prima facie, this is troubling. Okay. But unless and until there is a very detailed investigation that comes out, there's no way for us to say that Anil Ambani had personal knowledge of any of this.
Wait, Mr. Dehadra, please allow me to interrupt you, because we're just seeing live visuals on the screen of Mr. Anil Ambani making his way, I believe, into the Enforcement Directorate, if I'm not mistaken. We'll have to get clarification from the reporters on the ground, but seemingly a lot of reporters trying to get a soundbite from him at the moment. He seems to have entered the building. There we go. These are live visuals on your screen. This is, of course, the Enforcement Directorate headquarters in New Delhi. And this seemingly is going to be the start of the questioning by the Enforcement Directorate on the various issues that we have just spoken about. Of course, Mr. Dehadra was opining on what he thinks about the cases that are currently being investigated and questioned about, and we will be talking about some more of those details. He seems to have entered the building, Mr. Dehadrai. So you were making a point. Apologies for having cut you off. Would you like to complete it?
No, I to be balanced, to be perfectly balanced, I think, the ED also should be complimented in this case. Now, this is admittedly a very high-profile person. And there are some allegations that have come to the fore. And I think ED is also doing its duty. It's doing its statutory job. They're coming in and investigating, what these allegations are all about. So I think it's all right. It's very premature at this stage. Let them do their investigation. Let them find out what the facts are. I believe they're going to confront Mr. Ambani with that gentleman who's allegedly made that, the bank guarantee, who committed the bank guarantee fraud, allegedly in Orissa. So when all of these things start in an investigation, in any honest investigation, there is a lot of field work that is needed. So let that field work happen. And then I think the truth will come out. But as I said earlier, merely, handing out loans from one entity to other entities, does that become an offense? Our courts have held that is not an offense, and certainly not money laundering. Yeah.
Understood. And thanks so much for that clarification.
Thank you.
Appreciate the time that you spent with us. We have to slip into a very short break. So this was our attempt at trying to bring you perspective on everything that is happening. And of course, this is a developing situation. We will bring you updates as and when we get them. For now, we'll slip into a very quick break. On the other side of the break, we'll go back to regular programming and take all of the questions that you've been sending us on WhatsApp. Do stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे
Welcome back. You're watching Ask Profit on NDTV Profit, and we can finally go to all the questions that you've sent us on social media and on WhatsApp. And by the way, if you're tuning in for the first time, then the way that you can get in touch with us is either on the number on the top of the screen or on the landline number that is at the bottom of the screen. You can always call us, and we'd love to hear your voices. We've got our first question on this side. Actually, let me introduce you to the guests. We haven't introduced them yet. Asta Jain of Hem Securities, as well as Swati Hodkar, AVP Technical Research at IndusInd Bank. Thank you so much, ladies, for taking the time, and apologies for keeping you waiting. I appreciate the patience that you have. So the first question that we will take is from Mr. S. Sankaranarayan, who is a retired AGM from SBI, he says. And he would like a view on Acutaas Chemicals, which used to be called Ami Organics, or Indore Mines, and he's specifically looking to enter the specialty chemical space, and he wonders whether these are the two companies that he should be looking at very closely. Asta, what's the view?
Hi, good morning to all of you. See, I am not able to answer on this question because we are not covering any of these two counters. So I think it's better if Swati can answer.
Okay, fine, all right. So, okay, but then what if I were to push you to ask or to answer on specialty chemicals? If there is a company that you would invest in at this point, what would it be?
Navin Fluorine, with no doubts, because what we believe that this company is, looking very, very strong, not only from the fundamental perspective, but the kind of, the growth guidance, etc., which the company is giving. And we are finding the margin for this company is very attractive at the present point of time. So Navin Fluorine is looking very strong to us in this space, and we have our targets which are at around 5,400 to 5,500 in the short to medium term. So I would like to go with Navin Fluorine in this space.
Okay, I'm not going to Swati on this because the question was on the fundamentals. I will ask the next one to Swati though, and this is on Suzlon Energy. Abdahir from Madurai wants to know, he's bought 1,300 shares at a price of 69 rupees, which is above the current market price, and he wants to know what to do with it. Swati, on the charts, what's the view?
Yes, good morning all of you. The view is positive for a long period of time because the stock is under the formations of the symmetrical triangle pattern, and I believe that it has a strong potential to give the breakout of 68 levels. Currently 68 is acting as a strong resistance level. If it surpasses that level, Alex, then I believe that the trend will change on the high side and which will take a counter towards to 74 to 75 levels. So overall setup is really positive. Downside, it has a very good support at around 62 levels. So as long as it stays above those levels, the view will remain a positive. You can hold on your long positions for immediate target of 74 to 78 levels of the high side.
Got it. All right. So that's a comprehensive view on Suzlon. We've got a question on HDB Financial Services. We've got Aarti, who got allotment during IPO and wants to know what the long-term view is. She doesn't really have a timeline, and she wants to know whether she should add, hold or sell. It's pretty much at the issue price at this juncture. Asta, would you suggest that you can enter these levels, or would you wait for better price?
No, I would not like to suggest regarding any fresh entry for this counter. Why? Because what we have seen that the financial performance was not up to the mark in the quarter gone by. And if I look after the valuation in that case, the valuation seems to be definitely on the higher side. So that might be the reason that I'm not very much optimistic for the fresh entry in this counter. However, those who have, got the allotment during the IPO, or those who have bought it, I think they can remain invested in this counter for the longer time horizon. But in the shorter term, we can expect some more pain in the counter. So our price target for the long term, I'm limiting myself to long term only, it's around 810 to 820. In the short term, the stock might, get some downside from here also.
Okay, so even in the long term, the return potential does not seem to be very significant, so bear that in mind. All right, Gopika from Chennai has got the next question. IFCI is the name of the counter. She's bought at levels of 69 rupees. She's looking for a fundamental view. Asa, do you have coverage, and if so, what would you do?
Yes. For IFCI, yes, we are liking this counter, and what we believe that the kind of potential this company is having, especially if I talk about their margin profile, that seems to be very, very strong. So we believe that this counter is well poised to show more upside from here, and maybe 2-3 quarters down the line, we can see some very strong financial performance on the back of the kind of management steps which the management is taking. So overall, positive on this counter. Remain invested in this counter with a price target of 65 to 70.
Got it. All right, we've got our first caller of the day. I believe it is Govind who's calling us. Govind, very good morning to you. I believe you're calling us from Hyderabad. How can we help you today?
Yes, sir. Good morning, Alex, sir. Good morning to all of you,
Good
sir.
morning. Please go ahead.
Yeah. Alex, sir, I can only one doubt, sir, regarding fundamentally strong company for tube investment. Can I buy this time, sir? I can at least 2 lakhs to 3 lakhs rupees investment this time, sir.
Okay. If I remember correctly, you'd asked me this question yesterday as well, right?
No, sir.
No, you had not. Maybe it was somebody else.
I'm not.
Okay. Let me go to Asta. Since it's a long-term investment, he's looking to deploy as much as 2 lakh rupees into tube investments. He thinks that it's a fundamentally strong company. Do you agree, and would you say that he can do so?
Yes, it is a fundamentally strong company, but there was a problem, or I should say small degrowth, which we have witnessed in their quarterly numbers. In fact, if I talk about the valuations also, valuation seems to be on the higher side. So what I believe that this is a fundamentally strong counter, but due to the weak financial performance in the quarter gone by, this counter may witness some more downfall from here, and that will be the great levels to make a fresh entry into this counter. So rather than making fresh entry at this point of a time, let this counter settle till the levels of 28.50 or 28.60 and then make a fresh entry rather than going at this point of time.
Okay. Pakshal from Ballari is asking the next question, and PNB is the name of the counter that we're talking about. 126.8 is the buy price. The question that he's got is, what's wrong with the whole PSE and PSU banks? Why PSU banks not moving? Can he consider a buy on dip strategy in Punjab National Bank for a period of 18 months? Of course, there's a lot that is happening in the space, not least of which is the monetary policy that has switched over the course of the last few months. And a lot of these banks are seeing a little bit of a contraction in their net interest margins. Of course, that could reverse as well once the cut in the cash reserve ratio comes into play towards the end of this year. But those are all in the fundamentals. I guess the question is on the shorter term, and so therefore, Swati, is a buy on dip strategy on PNB appropriate? If you bought at levels of 126.8, what should be the strategy?
See, at the current level, definitely he can hold on the long positions, but not to average it out in the CMP. I believe we might witness some sort of a more downfall towards to 98 to 97 levels. Up to that level, we can witness some selling pressure. So any dips towards to 98 to 97 rupees, you can add on the long positions. Upside, I'm looking for a target of 114 to 115. Those are the short-term targets I'm looking for the PNB. So wait for some more time, and buy on dip strategy should be implied at the CMP.
All right, our next caller is on a subsidiary of PNB, I believe. Venkat is calling us from Bengaluru. Venkat, very good morning to you. How can we help you today?
Yes, good evening. Good morning. Yeah, I want to invest on PNB Housing. So is it the right time to enter the stock?
Why do you want to invest in PNB Housing? What is the...
Yeah, recently it has corrected, no?
Yeah. But you know why it's been correcting, right? You know why it's been falling?
Yeah, the CEO was resigned recently.
Yes. Okay.
So the same day it was fallen 18%.
Yeah.
So I want to know the basics, fundamentals for long term 2 years. Is it good or should I wait some more?
Okay, I understood. Asa, on the fundamentals, is this a key risk, the lack of a chief executive officer and the void that it brings, the fact that the chief CEO has left in an unexpected manner? Would you buy these levels and look for a substantial upside?
So what I believe that if I talk purely about the fundamentals remain intact because in fact the management has hosted a con call also, and in that they have assured that their margins and their asset quality will remain, on the pure set of lines. There will be no deviations in that. So I think pure on the fundamental purpose, this is looking a good stock. But right now, the kind of news flow is making it, detrimental, and that is why we are recommending not to buy at the current level. Although what we have seen that the stock has seen a rally, since last few years, we are seeing the stock has rise like anything. So let's wait for some more time, let it cool down more, let the news get settled, and then make a fresh entry. So right now, I'm not recommending a fresh entry into this counter, because on the valuation perspective also, it becomes somewhat on the higher side. Let the stock cool till the level of 720, 730. These are my ideal levels where I recommend entry to this counter. Right now, just wait and watch and don't make a fresh entry.
Got it. All right. By the way, we're toying with an idea here on this particular program, and anybody who's tuning in, and if you've messaged us, let us know what you think. We often have management speak to us because it is earnings season, of course, and we can't avoid it. But we would love to hear questions from you as well. So if you've got specific questions, and one of you, Sunny, in fact, has said that he's listened to the conversation that we had with Aarti Industries earlier on in the show, and he's invested and he hasn't been able to exit because he'd been holding from higher levels. So if you've got specific questions, you've been looking at the company, we would love to ask your questions as well. So if you think that's something you'd like, let us know in the comment section or on that number that you see on the screen. Snigdha is calling us from Hyderabad. Snigdha, very good morning to you. How can we help you today?
Hi, good morning. So my query is regarding Torrent Power. I hold one-time shares at 1,306 rupees.
Okay.
So I just want to, as they are posting results today, I just want to know if I would get a profit for next 1 month.
Okay, shorter term
and
perspective.
Also, can you please give, can you also, I need a suggestion from experts regarding some short term.
Apart from Torrent, you want more ideas?
Yes.
How do you define that short term, Snigdha? Is it 1 year? 1 month?
3 months.
3 months, all right. So, Swati, Torrent Power border levels of 1,306, and while you're at it, any ideas that you would suggest for a month? I know it's, or for rather 3 months, I know it's a tough market right now because things can go any which way.
Yes, Alex. As of now, the counter looks positive. We have already seen a sharp correction from almost 1,500 to now 1,270 levels, and now the counter has entered into the oversold zone. We are witnessing a positive crossover from the momentum indicators such as the RSI, which shows that the downside is limited, and we are likely to witness some sort of a bounce back rally, which might take a counter towards minimum target of 1,350 will be the initial targets we are looking for, and beyond that level, it will continue its rally towards to 1,370 to 1,380 levels. So my view is definitely positive. You can hold on your long position since the counter is sitting at your CMP as well. Hold for an immediate target will be 1,350. Beyond that level, 1,370 levels can be.
Got it. Okay. The next question is on Biocon, and Raj is asking a question. He says that the results are due on the 7th of August. I'm sure that this is already known by Asta. Asta, the question is, would you wait for those results to deploy, and is this the right time to invest in Biocon?
So yes, definitely I would like to wait for the result before deploying the funds, although we are expecting the results to be on the positive side regarding the growth in the bottom line as well as top line, but the kind of market volatility which we are witnessing right now, I think that can pose an opportunity to enter at the lower level. So it's a better choice to enter at the lower level rather than making fresh entry into this counter maybe after the result. Then it will be a safe bet. So my idea here is at least wait till the level of 350 to 355 before making entry into this.
Okay. Sunny, it's too late to suggest questions right now for Aarti Industries. I already spoke about them. Sunny is asking me to ask when will good times come back for the company. I did effectively ask him that, but let's go to the next one. Surjit is calling us from Chennai. Equitas Small Finance Bank is the name of the counter that we want to know about, right, Surjit?
Yes, sir.
Hi, morning. What can we help you with?
Sir. I have bought around 100 shares of Equitas Small Finance Bank at an average price of 70. I want to know about the long-term view.
Long-term view, okay. Let me go across to Asta on this one. Asta, do you have coverage on Equitas Small Finance Bank? If so, what is the view? He's bought at levels of 70.
Yes, we though it is a diversified small finance bank, they are basically into lending. And my view for the long term is remain invested for this counter, because what we are liking that their NIMs are really becoming very supported in the last few quarters. In fact, we have seen a good asset quality management from the small finance bank, and hence we are positive on this counter. Idea here is to remain invested with the price target of 65 to 70.
Okay, Vishal Megamart is the name of the counter. Holding from IPO, 90% profit is being witnessed. Wow, that's a dream run. Seema from Jodhpur has got this question. It's a nice question that she's asking. Iski halat trend jaise to nahi hogi? Asta, do you have an answer to that question?
Regarding Vishal Megamart, it was quite positive from the moment the IPO arrived, and at that time also we have recommended a subscribe, although it has given a very, very strong returns. But I don't believe that there is anything to look like anything to look in case of a trend trend kind of situation is expected. Although Vishal Megamart, they have got a very, very strong fold, especially in the northern parts of the country. And if you go there, just in the northern region, they have got a very strong stores, and the footfall is also very, very high. So we are positive on this counter. The only problem with these retailers is that their valuations. So valuations are a little bit on the higher side. But my idea here is to stay invested in this counter. It will yield good results in the longer term. And our price target for this counter is 170 to 175.
Okay. All right. Do you remember the first question that I asked you, Asta? I just want to reiterate, specialty chemical space, you had said Naveen, right? No. Which?
Naveen Fluorine.
Naveen
we
Fluorine.
have 5,400 to 5,500.
Yeah, okay. So there you go. By the way, our first viewer missed the question, Mr. Sankara Narayan. If you're listening in, then the answer was not the two counters that you had identified. Naveen Fluorine is what Asta likes in the specialty chemical space. We've got our next caller, Tejpal, who's calling us from Hyderabad. Tejpal, hi, morning. How can we help you today?
Hi, very good morning to the panel. Nice to talk to you after a very long time.
It's my pleasure.
Yeah, we are holding 10,000 shares of Spark, Sun Pharma Advanced Research at an average price of 150 rupees.
Yes.
I have a long-term view for at least for next 2 to 5 years. So I'd like to know, should I be adding more or should I be holding it?
So when did you buy this? Did you buy it after that big price drop, Tejpal?
Yes. I bought it very recently, 1 week to 10 days back.
Because there was one formulation which they had which didn't really go into clinical trials or failed clinical trials.
It's for psoriasis. It's for psoriasis, but other formulations in the pipeline are very strong. And we have Sun Pharma, 4 trillion rupee company in the back end.
Yeah, that's true. That's a good point that you're making. So, and you're willing to hold for the long term, you said, Tejpal?
Yes. At least for 2 to 5 years.
Okay, so you're asking what the prospects are. Let me go to Asta. Asta, so he bought it after that big price drop, as I mentioned, when that formulation didn't really take off and the street was anticipating that it would. But there are so many other things that they're working on. Would you say that the prospects are good for Spark down the line?
I think prospects are good, but not at the present moment of a time, because right now the stock is purely driven by the kind of results which they have posted, in which they have not posted a profit. Here I am just excluding the other income and exceptional items, and then I'm telling you that the profits are not there. So it is into the losses, and we have a very good other counters for that matter to look upon. So yes, this counter is a good long-term story. It can be good long-term story provided they show it in their results. Right now, just on the basis of the financial performance, we are not liking this counter, or we are not liking for a fresh entry. So maybe after some time, when the stock fall till the level of 120, 130 or so, then I think we can think of a fresh entry, especially at the 130 point. I think a fresh entry can be made.
Point made. So bear in mind, you bought 10,000 shares. So that if that drop is likely, then be a little mindful and keep your stop losses in place. Anna is calling us from Bengaluru. Anna, hi, morning. How can we help you today?
Good morning. I have a query regarding NTPC Green.
Okay.
I got this on IPO for 108. I have 276 shares.
Okay.
So now the shares are not doing well right now.
Yeah.
So my query is, should I invest more? Should I hold it, or should I, sell? What is the prospect
Should you sell? And am I right in assuming that you're holding for the long term? More than a year, more than 2 years?
I'd like to, yeah, but yes, but because I have NTPC Green and the other normal NTPC, so
got it.
Which one to hold on
Got
to?
it, got it. Okay. Asta, quick view here. We're running out of time. So between the two, would you hold NTPC Green and NTPC, or just NTPC Green, or one of the two?
I think NTPC Green is better because their whole projects are there in the NTPC Green related to the power project. So I think NTPC Green can be a better choice, but not at this point of the time. So maybe at the lower levels of around 100 to 90, it can be a good bet to enter into. Right now, I think NTPC Green can be looked upon as compared.
Okay, Anna, hopefully that answers your question. We have to do a curtailed rapid fire today, but we'll try and fit as many as possible over the course of 1 minute. Ladies, you know what this is about. RBL Bank, Gaurav wants to know, bought at levels of 171.2, holding period is, should you book profits, I believe is the question, I think. What's the view, Swati?
Partial profits you can book at the current level. Second partial you can hold on by keeping a profit stop loss on 250 for a target of 280.
Okay. Aegis Vopak Terminals is the name of the counter. Bought at levels of 252. Current market price 247. Should it be bought, Asa, on the long term?
No, not right now. Maybe at the lower level of 225 to 230.
Okay. Shipping Corporation of India, Prashant, has bought at levels of 309. Would you sell at a loss, Asta?
No, not at all. We believe that this counter can pose good upside from here. Remain invested in this counter. Initial price target can be set at around 225.
Dam Capital bought at levels of 300. Would you hold or exit? Rajan wants to know. Asta?
Dam Capital is a hold from my side.
Okay. All right. Well, that brings us to the end of this edition of Ask Profit. Asta, as well as Swati, thanks so much as always for taking the time. Viewers, it's been a bit of a curtailed session today for obvious reasons. If you tuned in from the start, you know why. But then we'll be back tomorrow to take more of your questions. And up next is Know Your Company. This is NDTV Profit.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
एसआईपी करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार वो खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL
Bank?
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Hello and welcome. You're watching KYC and today is going to be interesting if you like turnarounds, because this one could well be a very large turnaround if it were to play out. They are penciling in a top line which will likely double in 2 years. It's an established company. We're talking about Balaji Amines, and this could well be the play if all of this plays out in terms of what they are gunning for. Let me first start off with what I want to know. The first thing, what's been tepid and what's keeping a lid with regard to stock price action today is the fact that volume growth hasn't been seen even in Q1 FY26. So can volume start to pick up going forward is the first and foremost thing I'd want to know. And if not going forward, what is the visibility like with regard to volume uptick? Second piece, new capacity. They have put out 2 new plants over the last 3 months, and how and when does it start impacting the top line of the company is what I want to know. Third one, Chinese dumping and destocking. One is Chinese dumping, the other one is destocking from global peers. This is where the pressure on Balaji Amines is coming from. How are they dealing with this, and how far are we from a revival on both of these metrics or on each of these metrics? FY26, what are pricing trends and expectations that we are looking for? FY26, is there a scope for margin recovery? Are input prices looking better, likely, and therefore even if there is no top line tailwind, could there be a margin tailwind we could see? And how confident is the 3,000 crore top line and the 19% margin guidance for FY27 looking at the back of everything that's played out. I'm Harsh Sahita. Joining me today is Varsha Chandani. As always is the case when it relates to chemicals or pharmaceuticals, and therefore I'll hand it in her capable hands to drive us through what the company does. Balaji Amines, Varsha.
Thank you for that. So, before speaking about what Balaji Amines does, let's just focus on what are amines. So amines are chemicals used primarily as solvents in pharma and agrochemicals, and the applications include your solvents, which derives almost 44%. You have pesticides, your animal and feed additives. So these amines are used in solvents, pesticides and feed additives. Now if I were to talk, so nothing but they are basically solvents, that's it. Now let's talk about the market size. If you see the global...
But sorry Varsha, I am interrupting. What are solvents?
Nothing, you just binding...
It's a liquid. Which ensures that your formulation is derived correctly.
Correct.
If that is the correct explanation.
Yes.
But yes, for the viewer, that's what a solvent is.
Yes,
because
correct.
you say solvents in a very easy fashion. It's slightly difficult for some of us laymen to understand that. Anyway, please go ahead.
Okay. Now, talking about the market size, so a global amines market size, if you see, stands at around $4.9 billion, and top 6 companies control 50% of the global capacity, and we'll see why. And China leads with 60% of global production and consumption. Now, what is the moat and why there are only few players when it comes to amines industry? Number one is it's the amines itself is very hazardous when it comes to transport. It's very corrosive and highly flammable, making transport very risky. And so this is one of the reasons why you have only 4 to 5 players in the world. And in India you have alkyl amines and Balaji amines. Now technological expertise, if I were to talk about, limited company possesses technology to manufacture amines. For example, alkyl amines partnered with Western players for technology, but Balaji amines developed its own technology when it comes to amines technology. Now the other point why there are only few players in this industry is this amines require very high capex, and significant investment is being required to set up these facilities. Also when your amines or when your product is being used in pharma, in agro, all these MNCs, they require regulatory approval, or I would say customer validation, and this takes 2 to 3 years of customer validation. So if Balaji amines were to supply amines to XYZ company, that XYZ company will require 2 to 3 years to check whether the amines produced by Balaji are good enough for them. So 2 to 3 years is the gestation period, I would say, when it comes to amines industries. Also now, so this is basically what amines are and why there are only few players in this industry, and what is the moat behind this company. Now talking about Balaji amines, so they manufacture aliphatic amines and derivatives. So you have amines, and then you go down, you derive products, you would say value added products or derivatives from those amines as well. So companies make amines and its derivatives. Now for example, talking about amines and specialty chemicals, what they make methyl amines, ethyl amino, ethanol, etc. Don't go by names, these are used in pharma, agrochemical, rubber, pesticides, rocket fuel. Who are the clients for these companies? When you say pharma, you have Cipla, you have Piramal, you have Thermax, you have Lupin, who uses amines from Balaji amines. Now talking about the amine derivatives, let's go one step down. From amines, they manufacture derivatives, and these are used in pesticides, performance chemicals, animal feed, your specialty chemicals, and these are used by who are the clients? You have Sun Pharma, you have Wockhardt, you have Ipca, you have Aarti drugs, using these amines derivatives. Now, a very useful piece of information. One of the challenges that this industry may have, or this industry is going through, is that customer is becoming a competitor. For example, Aarti drugs is coming out with its own amines facility or amines capex. Your customer is itself going into your product. So this is one of the challenges or one of the risks that the company has. moving on, if I want to talk about the specialty and other chemicals, there are acetonitrile. You might have heard this number of times, anti-dumping duty on acetonitrile. So these are all the chemicals which are used in your water treatment, in your pesticides, in your pharma intermediates. And if I want to talk about who are the clients when it comes to specialty and other chemicals, you have Indian Oil, you have GAIL, you have Zydus Life Sciences. So overall, if you see, we have amines. What are amines, and what are the products when it comes to Balaji Amines? So pretty good company when it comes, because only 4 to 5 players, Harsh, in the globe. So, and this company has developed their own technology, the other good thing. Now the other thing is, because of the challenges that the industry is going through, Balaji Amines is no exception to this. But also one more thing, very small portion of revenue, comes from the hotel business that they cater to, and that's one of the reasons. We'll talk about this while valuations,
Okay.
Their hotel business.
But so they have a single hotel.
Yeah.
Right. And how much of a focus is that with regard to where the business is concerned? Do they focus too much?
No.
Not so much.
So the good thing is, not much capital has been employed towards hotel business, the good thing in the recent years. So that's the good thing. And also the specialty chemicals, we should, we might ask to management, they were expecting IPO for specialty chemicals. So let's see where they are when it comes to
that could be some value unlocking opportunity. But let's quickly look at the metrics that we will talk about when it comes to our Balaji Amines. We'll start off with the income statement, the balance sheet, the cash flow, return ratios, shareholding, street cred. There's no street coverage, or rather just 2 analysts cover this counter, and therefore we've excluded that. And then there is outlook and valuation. So we'll speak about all of that. But let me have Varsha start off with the income statement. Varsha, can I request you 2 things? So when you are talking about the income statement, give us perspective. The numbers are already on the viewer's screen. What's happened? And what are the key drags that the business, or the headwinds that the business is facing, that we're seeing the kind of numbers that we are seeing? 2400 to 1400, and doesn't look pretty, right?
Yeah, exactly. So what we'll do is, first I'll just go through, how the numbers have been. One thing, and we'll also focus on margins. Look at the margins from 26% to 19%. We'll talk about that also. But first thing is why the revenue numbers or the net profit numbers have gone down drastically. Now this is true across industry. You have global chemical downturn that you're seeing, which has been impacting every chemical company. Now this faced a significant slowdown post COVID-19. This impacted demand across various end user industries, like you have agrochemicals, you have pharma, which consumes amines and specialty chemicals. Now the agrochemical sector, which is now the key focus over here, is the agrochemical sector, which is a key user of amines, experienced volatile demand due to inventory destocking, due to China dumping, due to erratic monsoons in certain regions, and due to the pricing pressure because of the dumping and because of the destocking. You had the end product price went down, and this affected the revenue for these companies. So overall, because of the pricing pressure in the overall chemical industry, is one of the reasons why the numbers for the Balaji Amines and even for Alkyl Amines doesn't look good. But talking about the margin, so this is where the interesting point is, why the margins have gone down significantly. Look at there. In FY22, the margin were like 27%, which has gone down to 15%. Now, the one thing is, this was clearly evident that 26% won't last, even for alkyl amines. Alkyl amines showed margins of around 33-34%, which was not sustainable, as said by management of these companies. Now, why? Because the spike during FY21 and 22 that you're seeing is due to acetonitrile price surge. So the end product price, that is acetonitrile that we were speaking about, a chemical which is used in your pharma and agro, and in water chemical as well, the prices of that product surged. So it surged from 160 per kg to 280 per kg, and this is one of the reasons. And why it surged? Because of the high pharma demand, and this is one of the reasons your margins spiked up drastically. And when the end prices of acetonitrile gone down, the margins have also gone down, coupled with the pricing pressure across industry. So, so overall, if you see, the company has not done good. And this is one of the reasons why we are giving thumbs down.
Very simply put, 3 factors. China dumping, some bit of stocking up which had already happened during COVID, the unwind of which hasn't yet happened, and higher raw material prices. Those are the 3 factors why you're seeing what you're seeing on your screen. The profit hit, as well as the top line being hit, as well as the expense line being hit. So all 3 have been hit adversely because of this. Okay, so broadly that's the take. Let's talk about the balance sheet, and now we'll move fairly quickly because we're now behind the most important part of this discussion. The balance sheet, around 1840 crore in terms of equity shareholders funds. We are sitting at around 5000 crore in terms of market cap. So that's the price to book. There's no borrowing on the balance sheet, fairly clean balance sheet per se on a standalone basis. There's no debt which is likely to be taken as well in the future. Maybe to fund some bit of capex, a subsidiary might take on 150 odd crore of debt, which is honestly very, very minimal. So really no concerns. You look at the cash and bank balance as well of 360 crore. There's enough room there as well. So broadly, that's how the balance sheet looks. But the cash flow, Varsha.
Yeah, so cash flow, Harsh, as you in starting you had pointed out that company is doing a lot of capex, and that's one of the reasons the net cash flow is negative, because they've done a lot of investments. So if I were to talk about in 2024 and 2025, the cash flow from investing activities in 24 was almost 274 crore. Then it came to 140 crore. So because companies doing a lot of investments, you're seeing the net cash flow either a negative or very minimal amount of net cash flow with the company. So overall on the cash flow statement, we would give a neutral stance because of the investments that the company has been doing.
And even when I'm talking return ratios, the headwinds you're seeing on the income statement is translating on the return ratio. So we had very, very good tailwind till FY23, numbers reflecting on your screen, 36% ROC. If I push it back to FY22, it was north of 45% ROC. So very, very strong, but it's fallen to 11%. The recovery completely depends on the 3 factors we spoke about on the income statement side. So you want to monitor that. Shareholding pattern, Varsha.
Overall, shareholding pattern, I mean, it's kind of thumbs up, nothing much dramatic there. Promoters' stake has been increased a little bit, that's a good thing. FIIs have maintained their stake at almost 5%, and even DIIs, if you see, has been maintaining that stake. So overall, it's a thumbs up when it comes to shareholding pattern. Okay, let me take you through street cred. The last 1 month stock is down 20%, last 6 months 12% down, year to date 15% down, 1 year 33% down, but 5 years the stock is up 2.5x, and that's what's driving possible profitability, at least for the longer term investors who are likely to hold on better. So we've given this a neutral. Short term, of course, we've seen pressure. Varsha, both outlook and valuations. Yeah, so starting about outlook, so they're targeting 3,000 crores of revenue in 2 years, and with the expected volume growth was 10 to 12%. Especially as the new capacities ramp up in FY26, I'm talking about. EBITDA margin expected are 19 to 20%, and the total capex that they're expecting standalone, not considering the specialty chemical, is 200 to 250 crore over the next 2 years, which is already in focus, in progress. Lastly, on the valuation side, if you see, so now comparing with alkylamines, the valuation is at a discount now. There are many reasons for that, considering the management pedigree, and of course because of the investors' concern about the hotel business, and also the when it comes to the net profit, or when it comes to all the financials, the weak financial that the company has seen. So all these parameters have led to, I would say, a discount valuations compared to alkylamines. Okay. Now, so company has to prove for that premium valuations for Balaji Amines, yeah. Yeah, but the likely silver lining in all of this is the fact that if they do a 3,000 crore in FY27 with a 20% EBITDA margin, that will mean 600 crore in the kitty. That
is phenomenal, because that will in itself mean that the company is flushed with 1,000 crore of cash. Not just that, enough to do the very small capex that they are expected to do, and further leverage on the opportunities available. So that's how the rating parameters stack up. We've given valuations a thumbs up only for that reason, with the potential turnaround opportunity which could come about. We'll get a better perspective as we're joined by management. 4.5 on 8 is what this one gets. We're joined by D. Rama Reddy, who's the Managing Director, Balaji Amines, joining us. Sir, pleasure having you. Sir, first give us a perspective on how Q1 has gone for you and what set up the context for us for FY26. Both in terms of volume, what price trends are you seeing? What should we expect in terms of top line because you've added capacity? Just give us a quick color on those factors.
Thank you, Ash. See, actually, in spite of many hurdles, you know that the chemical industry and the pharma industry is going in very different windfalls. So we have done par with the last quarter, as well as if you compare with the last year also, the same margins, 19 to 20% we maintained. And actually, there's a improvement has started. Last 1-2 months, we have seen that uptake has improved. But again, we have seen some of the volatility because of these tariff news. And second thing, because of the dumping from the China, we have applied for some of the products for the anti-dumping. And also, we have learned to live with whatever is available if we are not getting the benefit of anti-dumping. So there's a reason, in spite of all these things, we have made same. And we expect in coming quarters, there should be, because as you rightly said, there's some capacities will be coming into the stream. Actually, one capacity has just came about 2 weeks back, 2 to 3 weeks back. That is isopropylamines. That is doing well. And this dimethyl ether, which is plant is ready, but we are fighting for the, I can say the fighting word only, because when we make any product first time in the country, there are a lot of hurdles are there in the approval point of view. We are waiting for the PESO approvals for the storage and transportation of this product, dimethyl ether, because it's an alternate to the LPG. Actually, BAS has already given the go ahead for the blending of 15 to 20% blending of dimethyl ether into the LPG. So we are expecting these should come in this quarter. Then this plant will start. And after this, there are the 2 more plants in the pipeline. One is the N-methyl morphine, again with the new technology we are coming up. And another product which is the old product, the acetonitrile, we have taken up the dumping up. That is also coming up by end of the year. These 2 plants will come into the stream. So there will not be much up in this year, but definitely next year, as we said, the 27, there will be definitely, we will reach to the 3,000 crores, what we said in the earlier call.
So Mr. Reddy, hi, this is Varsha this side, pleasure to have you. So you are expecting 3,000 crores by FY26 with 19 to 20% of EBITDA margins, got that point. Also, Mr. Reddy, you were expecting 10 to 12% of volume growth in FY26, and now in Q1, year on year, the volume has decreased. So just wanted to have your view on overall outlook when it comes to volume and of course the pricing trends that you are seeing.
I'll tell you, see, if you look at the consolidated basis, at subsidiary level, we are having 2 activities. One is the brownfield modification of the plant. The other way is the greenfield expansions are going on. These both activities are taking place. That's the reason nothing is happening in the top line point of view at subsidiary. That has impacted on the total top line and even volume growth also. We have seen marginal last quarter, this quarter, there was about 800 to 1,000 tons increase in the volume growth. But going forward, because one plant we have started and other plants which are gearing up, so we will see as per the our guiding, about 10 to 12% volume growth should be there. And what we have seen in the last 1.5 months, there's an improvement in the margins and pricing. See the in spite of all these hurdles, we have maintained the 20% of the EBITDAs. We should aim better than this, if not less than this, we should go better than this in the margin point of view. And as I said, in 2027, not 26, I'm telling you 2027 end, you will see this 3,000 crores turnover definitely because all these plants will be coming into the stream, including the acetonitrile, and some part will come from the subsidiary also. The brownfield will finish by end of this year, and even greenfield also will start by the end of the year.
Trends are you seeing on the destocking side of things? Talk to us about that. We've been talking about this recovery in specialty chemicals for a while now, but that's not reflecting, sir. So give us that perspective.
Because of the volatility, you are well aware, you have seen what is happening every day. Yesterday, Trump said 25%, today is talking different. So this volatility is also giving some doubtful things for buyers. See, I am selling almost 10 to 15 containers of my material every month to USA. People who bought few weeks back, they are in a puzzle. What will be its duty when it arrives at their doorstep? So these type of volatility is giving some pinch to the customer end, but definitely there is a good days coming for the specialty chemical, because Make in India, what we are talking for these several years, we are all, Harsh, I will be very, very clear with you, we are creating the capacities, just waiting for the opportunity.
So who bears the tariff? Give us that perspective. Who bears the tariff? What are your conversations with your clients suggesting? Are you expected to do a lower margin on your product, bear some bit of that tariff, or not at all?
No, it should not happen, because earlier there was 0 to it has already come to 10%. There also we have maintained these margins. In fact, the day before yesterday, we were talking to some of the customers, overseas customers in the USA. They were saying that in this 25%, we are not asking you to compensate everything. They are also ready to forego to some extent. And it should be win-win situation. We may go for some 2 to 3% reduction from our price, and they will also going to bear whatever the new tariffs have come.
Mr. Reddy, so talk to us about the Greenfield project when it comes to, Balaji Specialty Chemicals, number one. And number two, you were in talks when it comes to, IPO of Balaji Specialty Chemicals. So any update on that?
IPO I cannot say right now, because that will be with the hands of the board of directors of Balaji Specialty Chemicals. Larger board only can tell you, but we did not have any discussion on that. Once we finish, as we said earlier, this greenfield expansion, which will be finished by last quarter of this current year, then you will hear more good things about, because sodium cyanide, hydrogen cyanide, based on these two imported chemicals, there are many other products in the pipeline. So you will see, that's the reason I'm telling you 2027 will be much better. This 26 will be only, these products will be adding at the end of the year. But next year, definitely you will see the good. You are well aware that we don't have any standalone basis, any debt, even working capital also we do not have. Even after finishing this also, we don't see that anything will go for the debt in the current financial year for the parent.
Right.
There may be little in the subsidiary, because it depends upon the plant's commissioning. If we take some break in the plant's commissioning, then there also we will not have much of the debt.
Right. Sir, thank you. Actually, that's all the time we have. Unfortunately, would have loved to continue this conversation, but out of time. But very interesting, again, in terms of both guidance and perspective. Thanks so much for coming in and speaking with us. Out of time, from Varsha, myself, everyone who puts the show together, thanks so much for watching.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो
हेलो,
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो,
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that is
Good afternoon, you're watching Markets at 12 with me, Shreyanshi Singh, and this is the show where we get you a snapshot of everything that is happening with the markets at this point in time. Let's take a look at some of the sectors. Before we do that, of course, let's take a look at the Nifty. In fact, that's holding on above those 24,600 levels, just above those levels. Some pressure is what you're seeing coming back to the markets at this point in time. So whether you take a look at the Nifty or the Sensex as well, it's a very similar picture, 0.4% downtick coming in for both of these benchmarks, so moving in tandem with each other as we speak. But let's take a look at some of the top sectoral losers, because there's a longer list of top sectoral losers, in fact, than there is a list of gainers, because there's only just two sectors, in fact, holding on to a tinge of green, auto as well as PSU Bank. There's some amount of resilience there, but on the flip side, there's a pharma index, oil and gas, FMCG, IT, realty, finance, as well as Nifty Bank and Nifty Defense holding on to a tinge of red at this point in time. Nifty Pharma is the one that is leading losses as we speak. In fact, let's take a look at some of the top sectoral losers. So there's a Triveni Turbine, Reliance Power, Inox India, Wellspun India, as well as TBO Tech. Those are some of your top sectoral losers, down anywhere between 3.5% to 7% at this point in time. And from within the Nifty 50 pack as well, you're looking at an Asian Paints down about 1.5%. Infosys down about 1.5% as well. Reliance is also holding on to a loss of about 1.5% there about BEL, ICICI Bank, also some of your other top losers from within the Nifty 50 pack. But let's also move on. Let's get you a very important story then. Anil Ambani has reached the Enforcement Directorate office in Delhi for questioning in the alleged 17,000 crore rupees loan fraud case. What is the procedure? What does it entail? And how will the investigation be proceeding from here on? Shrimi is joining in with all of those important details.
Yeah, that's right. Anil Ambani questioning is underway, and what we are picking up from the insiders that he soon after he arrived, he been made to sit for 15 minutes, and then he has been taken to the interrogation room. There is a separate room where all these money laundering questioning happens. So he's been taken there, but there is no lawyers or any associate is there with him. Right now the questioning is underway, and what we are also learning at this point that he could perhaps come out at the lunch break from the ED premises, and post-lunch the questioning will resume. The important fact here is that whatever statement he is recording, because everything is getting, both audio and visual is getting recorded, so it's permissible in court, unlike the usual police complaint where you can tweak and alter the statement. But in this case, it's clearly admissible in court. You cannot alter once your statement is recorded, and that is very crucial, and that is only allowed in the PMLA. The key question which ED official is asking at this point on, some of the major allegation, we have been reporting about it, and first up is, of course, the quid pro quo between the ADAG group of companies and, Yes Bank Rana Kapoor, the entire circular lending, the way Yes Bank, sanctioned and disbursed loan to Reliance, and then it came back to the, Rana Kapoor family offices is something ED is going to question. The second important aspect, that how the entire loan being sanctioned to multiple ADAG group of companies has gone to several shell funds, diverted to several shell funds, and that is why the ED also summoned, key executives of Anil Ambani to kind of get sense that how they planned this entire modus operandi and the complex web of transaction. And the third, of course, is the fake bank guarantee is what ED has highlighted. In fact, we have seen the Bismal Trade Link promoter getting arrested last week. He is the person who actually, facilitated the entire fake bank guarantee to secure the tender, the government tender, which is related to Reliance Power. So some key allegation, of course, Anil Ambani has to face and to answer and to reply and to give statement on those allegation is what indication we are getting. And once he will come out from the premises, we'll get more. We are, tracking closely this development. But one thing is very clear, that ED will be trying to establish the money trail, that where the money headed to, the proceed of crime and the amount, because right now we are talking about 17,000 crore of the illegal loan fraud.
All right, then thanks, Shrimi, for getting us all of those details. We trust you to get us updates as well, and the money trail is something that we have to keep in mind when it comes to this particular case. But Shrimi, while you're with us, talk to us about Paytm as well, because it's poised to edge closer to that full Indian ownership, and Financial, in fact, is planning a complete exit through a block deal. Tell us a little more about what you're gathering from your sources here as well.
Yeah, so that's very interesting, information coming in the Paytm block deal. What we are picking up from the sources is that the existing investors, have expressed strong interest in the block deal. But remember, the block deal is expected to be in the open market. So you can't really control that the Ant Financial Services, who is, expected to sell its entire stake, which is around over 5%, who will be the buyer there. But what sources tells us that some existing investors has already expressed the interest to, buy those, stake. Then the another important aspect here is emerging, that this entire move is going to help Paytm to clear all the future regulatory approval. Now, what we are picking up at this point, that Paytm is keen to enter some sensitive sectors like insurance, where the ownership norms are very stricter. So you have to go through a lot of these checks and balances. And the way, Paytm have been perceived like a China-backed entity, that become a kind of pain point and has been facing hurdle on that points. And that is why the move trigger, where you've been seeing that how Ant Financial Group, paring its stake over last 2 years, and now there is a final exit. And in the meantime, Paytm is also kind of working on to settle and resolve all the pending matters. 10 to 12 application is what they are looking to settle with the different regulators. So the clear point is that, of course, the China entity will exit fully, and the Paytm will become the solely Indian entity.
All right, and thanks, Shrimi, for getting us that very important update as far as Paytm is also concerned. So that's another counter to keep in focus. But speaking of counters that you should be keeping in the spotlight, let's take a look at KPI Green Energy. In fact, KP Group is in focus. On the back of KPI Green Energy's earnings, let's look at the key takeaways when it comes to the first quarter of numbers. You have growth that was led by consistent execution strength, so that's something that you're looking at. And they're also increasing scale across both their solar as well as hybrid projects as well. So that's also very important to note. Other than that, there's also them signing 3 MOUs with Delta Electronics to be collaborating on a bunch of projects. So that's also something that you're looking at. So when you look at the revenue, EBITDA, as well as net profit, you've seen a rise coming in on a year-on-year basis. In fact, let's talk to the management. Dr. Farooq G. Patel, CMD of KP Group, is joining us at this point in time. Good afternoon, and thank you so much for taking time out and joining us today. First things first, I wanted to talk to you about your revenue as well as net profit growth. Of course, that was impressive, but you did have the EBITDA margin that is contracted by some 280 basis points. In fact, what do you see as the key triggers when it comes to this margin compression there?
Thank you very much, Shriyasi. That we have declared the result today for the first quarter of the KPI and KP Energy both. And you have seen that from the last quarter to this quarter is quite very nice. And quarter 24 to 25 is also quarter 1 to 1. If you see, 614 is a revenue, and 111 is the PAT for the KPI. And same with the, you can go to KP Energy also, that from the last year to this year, 40 to 45 or 60% growth in both companies. And the order book is quite a strong, and execution also quite strong. And EBITDA, as you said, as you mentioned, is 200 and something in KPI and 100 and something in the KP Energy also. So let's see the trajectory from the last, say, 24 quarters. If you can calculate, we are doing well for the renewable energy as a KP Group.
All right, then, Mr. Patel, I just wanted to double down on that, try and understand if there's a strategic decision that you're taking at this point in time to be prioritizing growth over immediate margin expansion. Is that something that you're looking at?
Yes, we are going, as you mentioned before also, that we are going through with the Delta and all this stuff because of the base and the green hydrogen and the offshore businesses. So, of course, we are going for the sustainable renewable energy growth of as a group.
All right, then, absolutely. So I also wanted to talk about your order book as well, because that is quite important to talk about. Could you provide a breakdown of this order book in terms of IPP versus CPP? What percentage is what you have for solar versus hybrid projects? Give us a sense, a little more color on this then.
We have the order book for the CPP and the IPP in KPI is about 1.8 gigawatt. Which is a work in progress, and in a KP Energy 2.22 gigawatt, as in a hybrid and the solar and the wind 3 segment. You have seen, you must have seen in the presentation also, where we have already uploaded to the NSE and BSE, and work in progress in KPI is 1.8 and 0.5 in CPP already we have done, 1.2 in IPP, and 0.5 is already we have completed. So you can see 1.7 plus 2.3 is 4 gigawatt in the KPI and 2.22 gigawatt in KP Energy, altogether 3.26. But when you are going for the cumulative with the KPI and KP Energy is a 5.9 gigawatt, which are going to be completed as a IPP and CPP both. But in KPI, you can say that IPP growth is a very high level by the next year end.
Well, absolutely. So that's something that we're looking at when it comes to the order book, right? But I also wanted to get a sense about those MOUs that you've signed. We're talking about 3 MOUs, but looking at Delta Electronics for BESS as well as green hydrogen and EV charging infrastructure that are highly strategic. I want to get a sense of the immediate next steps when it comes to these collaborations. Talk to us about any pilot projects, target timelines that you have in mind when it comes to the commercialization, as well as the expected revenue contribution that you're also outlining when it comes to these collaborations then.
Already, as you rightly mentioned, that we have already 1 megawatt plant we have done for the green hydrogen in our Matar factory where the KP Green Engineering is, and we are going to use that green hydrogen into the same factory of the Matar. We will be the first in India who are creating or who are manufacturing the green hydrogen and using in our factory. And our plan is for that perspective only. We have done this MOU with the GS2 and with the Delta also, and with Advait and the people also to make this all things in a big way. We are coming with a very big in this green hydrogen trajectory within 1 or 2 years, you can say. And for that already pilot project is ready and it will be energized by the October end.
All right then, sir, before we let you go, I just wanted to get a very quick word on KP Energy, a very quick outlook if you could, just closing comments, very quick comments then.
Thank you very much. KP Energy is having a 2.22 gigawatt orders in hand in the EPC of the wind, and we are going to get a very big orders in KP Energy also with the KPI, and both we have, as I told you before, that we have 5.9 gigawatt orders in hand, and our target is 10 gigawatt as a group, and we are reaching closing these orders by the September end, about whatever we have today in hand in pipeline is about 2 to 3 gigawatt. Thank you very much.
Point taken, sir. Thank you so much for taking time and joining us this afternoon. Thank you so much for that update as far as the management is concerned. But moving on from one management to another, then it was an inline set of numbers. In the first quarter, when it comes to Marico, you did have resilience growth for a few segments that aided revenue largely. In fact, Mahima caught up with the company's MD and CEO, Saugata Gupta, to talk about the way ahead for the company, as well as its plans to beat the competition. Let's go across and listen into a slice of that conversation.
Hello and welcome. You're watching NDTV Profit. I'm Mahima Vajrajani. The earnings that we're focusing on today is Marico. Well, it's come out with its set of Q1 earnings and it's a good set of numbers. Good recovery in terms of where value-added hair oils stand. Overall also, it did beat the street expectation. Brokerages are also, pegging Marico as one of the top picks in the FMCG space. To discuss all of this and as to how the quarter has gone by, we're joined by Saugata Gupta, MD and CEO of Marico Limited, joining us now. Mr. Gupta, hi. A very, good afternoon to you, and always a pleasure speaking with you. Just want to get a sense of this quarter, because this quarter sets a tone quite different from where FY25 stood for FY26 overall, and just want to get a sense of what tone is it setting and what were the hits and misses that you saw this quarter.
I think if you really look at it, we have been, especially in the India business, sequential uptake of volume growth. That volume growth is the most important thing for an emerging market consumer goods company, because at the end of the day, just pricing-led value growth or cost-led, cost or A&P cut-led profitable growth is not sustainable. So therefore, I think the biggest news is that we have been sequentially having an uptake in volume growth. We have now hit 9. We have done 6, 7, 8, 9 in that sequence. We are now firmly believe that we can have a shot at doing double-digit volume growth some 1 or 2 quarters this year. Obviously, there is inflation, and that will lead to a good revenue growth, and we expect revenue growth in conjunction with the fact that the international business will continue to deliver double-digit mid-teens constant currency growth. We expect revenue growth in the zone of 25% plus minus. I think as far as yes, there has been an unprecedented inflation, in terms of the copra input cost, which has led to, I think, us taking 60% around price increase, which is a weighted average price increase between pricing and MLH drop in Parachute, which I think, in spite of that, the brand has been resilient at around we have been flattish with a 1% transaction growth, minus 1% in terms of volume. And the diversification journey continues to do well, and the value-added hair oil. So I think it's been mostly hits. Obviously, we have to cope with a very short-term margin pressure. Having said that, if you see, invariably copra, and if you look at the two hyperinflationary cycles of copra, one between 14-15 and there's the other one which was in 2017 and 2019, it is followed by a deflationary cycle. So margins we pick up, and therefore we get back into the 2-year CAGR of double digits. So I don't think we are worried about it, as long as we stay true to our the fact that we continue to execute well, continue to focus to invest. As you know, that in spite of different cyclical issues, we have continued to invest behind A&P, and we are fairly certain that we should be able to tide through. It's a very short-term issue, and in fact, copra has come down from its peak in the last 2 weeks.
You mentioned that volume growth, you're expecting a double-digit growth 1 or 2 quarters down the line, which is at 9% this quarter, and probably that's the highest in the past 2 odd years. Just want to get a sense, when you say double-digit volume growth, give us a range, give us an idea of the range in which you're expecting volume growth to be in. And then secondly, now that copra inflation is kind of easing out, do you think that the gap between that volume versus value growth will kind of narrow down?
First of all, let me just clarify. I said we will aspire to hit double digits. I think since we have been a sequential uptake every quarter to hit double digits, and which means moving up a little bit slightly from the 9%. See, in terms of the copra inflation, I think it's coming down. As you know, that obviously pricing lags the inflation. So I think I see the pricing-led factor continue to be playing out. Having said that, I think if you notice, we started taking price increase in the second half of the year. Some anniversarization will come. So if you look at it, if you add up a certain number of, if we continue to keep this volume with a slight improvement, as well as getting into mid-teens plus constant currency growth for international business, around mid-20s kind of a revenue growth is very much possible. And as we said, we'll wait and watch, and we hope to get in the second half the margins coming back. But as I said, these are very short-term transient terms. I think what is most important is to continue to deliver good volume growth. And I think what is also encouraging this term is that this quarter that we had 99% of our portfolio gaining market share. That is also, I think, very, very critical.
Interesting. In terms of your Parachute segment as well, because that has shown resilience, as you correctly mentioned, that despite of the kind of, the 1% decline in volume and the kind of demand that is there, plus the price hikes being taken, overall, you've seen a good momentum when it comes to Parachute. Just want to get a sense, now that copra prices are moderating, what is the outlook with regards to where Parachute stands, and with regards to where competition stands in this place? Because there are a lot of these startup companies, small companies that are coming out with these hair oils. Just want to get a sense there. Is it kind of impacting or eating away the market share in any way?
So first of all, again, it is too premature to say that the entire commodity table is moderating. Yes, it has come out of its peak, but it's still significantly inflationary. What it gives us is a comfort in terms of the fact that we don't have to take any more pricing, and there will be no squeeze of margins. So I think this inflationary component YOY will continue significantly in the second half of the year, but I think it's stabilizing, I would rather say. As far as Parachute is concerned, I think we compete with some of the small brands as well as unbranded, and we have continued to gain market share. And historically, if we look at the hyperinflation years, we are far more resilient in terms of supply chain, and usually smaller brands, local brands, or some of the unbranded gets far more impacted. At the same time, we are also cognizant of the fact that with these pricing, there could be some impact on volumes, and therefore we are taking steps to ensure that we keep on gaining market share, so that even if there is some consumption stress in temporary or short term, we make it up, and we continue to deliver a volume growth or a decent moderate volume growth in the franchise in this year.
Alright, and there you have it. That was the management of Marico talking to us about their inline set of numbers in the first quarter. Stock not doing that much at this point in time at least. But let's talk about Oswal Pumps, because that particular counter is buzzing away in trade, 1.5% uptick as far as Oswal Pumps is concerned. In fact, we have Puneet joining in with the update on this one. Puneet, looks like it's a strong set of numbers.
Well, very strong set of numbers, and we have mentioned this particular quarter that for the company was expected to do well. First quarter since listing, so it has been a strong quarter of roughly 20 to 30% revenue growth. EBITDA as well as profitability has also moved in tandem with that as well. And while the stocks corrected a bit from the day's highs, we're now being joined by Mr. Vivek Gupta, who is the chairman and the managing director of the company. Mr. Gupta, very good afternoon to you, sir, and thank you so much for joining in. Sir, मेरे को फर्स्ट क्वेश्चन आपसे यही था कि हमने आपका ऑर्डर बुक जो है 29,000 पंप्स का है करंटली, आप कितने टाइम में ये ऑर्डर बुक एग्जीक्यूट कर सकते हैं, एंड जो नए ऑर्डर्स है इनका एग्जीक्यूशन टाइमलाइन क्या है?
देखिए, ऑर्डर बुक में दो चीजें रहती हैं. एक तो हम लोग जो हमें गवर्नमेंट के जो ऑर्डर्स कंप्लीट करने होते हैं वो करीबन हमें मिलते हैं 90 डेज. सो वी आर वेरी कॉशियस कि 90 और 30 दिन का हमें उसके बाद एक एक्स्ट्रा टाइम मिलता है जो बोनस पीरियड है. सो हम 100 ऐसे ही ऑर्डर्स रिसीव करते हैं जो 120 दिन तक हम लोग कंप्लीट कर पाए, ताकि डिपार्टमेंट के अंदर हमारे जो क्रेडेंशियल्स है, इमेज है, वो बहुत स्ट्रॉन्ग रहे और आगे के लिए गवर्नमेंट का फेथ हमारे कंपनी के ऊपर ज्यादा से ज्यादा बने. सो ऑर्डर, चूंकि गवर्नमेंट इज वेरी एग्रेसिव इस पूरी स्कीम में, तो वहां पर हमें और भी ज्यादा ऑर्डर्स लेने में कोई इशू नहीं है. और इस साल में जैसे हम लोग बहुत इजीली देख पा रहे हैं कि तकरीबन 75,000 से प्लस पंप हम लोग प्लान कर रहे हैं कि इस साल डायरेक्ट इंस्टॉलेशन करें. सो वो बहुत क्लियर हम विजन लेके चल रहे हैं, और वहां पर हमें कोई सरप्राइज नहीं दिख रहा है किसी तरह की अचीव करने के लिए.
तो गुप्ता जी, क्या आप एंटिसिपेट करें कि आप इस साल में 65,000 से 80,000 के अप्रॉक्सीमेटली यूनिट्स आप सेल कर पाएंगे? इस रेंज में भी हुआ तो भी चलेगा, बट ये रेंज में आप ये साल की वॉल्यूम एक्सपेक्ट कर रहे हैं?
देखिए, हम लोग इस साल का जो टारगेट लेके चल रहे हैं, जो गवर्नमेंट में डायरेक्ट इंस्टॉलेशन में करीब 65,000 to 80,000 के बीच में हम लोग अपना टारगेट लेके चल रहे हैं. और वी आर वेरी मच श्योर किसी तरह के ऑर्डर्स रिसीविंग में, एग्जीक्यूशन में और कहीं भी हमें कोई डिस्कनेक्ट नहीं दिख रहा है. बहुत स्मूथ वे में हर चीज जा रही है, और नेक्स्ट क्वार्टर इज ऑलरेडी ऑक्यूपाइड, तो वो कोई दिक्कत नहीं है.
और सर, आपने कहा कि आप अपने लिए रफली अराउंड 80,000 ऑन दी अपर एंड आप बेचने की कोशिश कर रहे हैं इस साल में. स्पेसिफिकली गवर्नमेंट के साइड से वो कितने टेंडर्स और ऑर्डर्स दे सकते हैं आपके हिसाब से? इन टर्म्स ऑफ मार्केट साइज कितना है बेसिकली अभी?
देखिए, इस साल चूंकि पीएम कुसुम 1 की गवर्नमेंट का टारगेट है कि इस साल के फाइनेंशियल ईयर में ये पूरा प्रोजेक्ट कंप्लीट किया जाए. सो करीबन 6 से 7 लाख पंप द स्टार्टिंग ऑफ दिस फाइनेंशियल ईयर गवर्नमेंट के पास पेंडिंग थे अंडर कंपोनेंट बी. तो डेफिनेटली गवर्नमेंट ये एग्रेसिवली चाहती है कि इस साल पूरे पंप इंस्टॉल हो, ताकि हम नेक्स्ट पीएम कुसुम 2 को एग्रेसिवली लॉन्च कर पाए. सो इस साल का टारगेट बहुत अच्छा है, और 6 से 7 लाख पंप इस फाइनेंशियल एंड में, या ये मान लीजिए ज्यादा से ज्यादा कैलेंडर ईयर 26 में पहले दूसरे क्वार्टर तक ये फिनिश हो जाएगा, दूसरे क्वार्टर तक।
सो सर ये तो आपका करेक्ट हो गया, 6 to 7 lakhs आप गवर्नमेंट बेचेगी, उसमें 65 to 80,000 आपका है। Q1 में आपका रफली 513 करोड़ का रेवेन्यू था, तो इस क्वार्टर में आपने कितना वॉल्यूम ग्रोथ किया है?
अप्रोक्सीमेट करीब 15,000 पंप के करीब हमने 15 से 18,000 पंप के करीब हमने इंस्टॉल किए हैं क्वार्टर 1 में ओसवाल में। अगर हम टोटल सप्लाई की बात करें या टोटल मैन्युफैक्चरिंग की बात करें तो वहां पर हम लोगों ने बहुत ज्यादा अपने कैपेसिटी को यूटिलाइज किया है। हम बात कर रहे हैं कि डायरेक्ट जो हमने गवर्नमेंट में इंस्टॉल किए हैं, मैं स्पेसिफिक वो नंबर की बात कर रहा हूँ आपसे।
और सर गवर्नमेंट के हिसाब से इस क्वार्टर में रफली आपने कितना वॉल्यूम देखा है? बिकॉज ये 6 से 7 लाख का वाइल इनका टारगेट है, तो इस साल में या ये क्वार्टर में हमने देखा है कि 60 से 70 हज़ार की गवर्नमेंट ने सिक्योर किया है पंप्स इस क्वार्टर में।
मैं ये मान के चल रहा हूँ कि इस क्वार्टर में गवर्नमेंट के करीब 50 से 60,000 पंप इंस्टॉल हुए होंगे तकरीबन।
Well, that was Oswal Pumps and the management as well, and very strong listing for the company in this particular quarter. But that's on Shreyanshi, that's on Oswal Pumps. We've seen really good strong quarter for the company.
Well, absolutely, and you do see that reflected in the stock price as well. But that's all the time that we have on the show. Thank you so much for tuning in.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है, ड्रीम सिटी। तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and
welcome to NDTV Profit. A very good afternoon to all the viewers. I'm Hiral Datia and with me is Varsha. You're watching Profit Buzzers and it's an interesting day of trade because from the day's low as well, a mild recovery that's come in terms of the markets, but you're seeing that pressure which has continued and you're trading in the negative. Let's quickly pull up Nifty 50 on the screens. There you go. Cuts of around 0.4% coming in there and we're below the 24,700 mark. 24,630 is what you're tracking so far. Let's quickly pull up Bank Nifty on the screens and then we'll look at the sectoral heat map to understand which are the sectors which are aiding this kind of a downtick in trade today. Bank Nifty as well, similar kind of trends that you're tracking with regards to Nifty 50. Let's look at the sectoral heat map. You just have the PSU Bank Index, which is trading in the positive, followed by auto, second consecutive session of gains in terms of where the auto index goes. And you have the media index as well, which is pretty much on the borderline. The one sector which is taking a beating today is Nifty Pharma, followed by oil and gas on the back of the commentary that we've heard from Trump when it comes to Russian oil. FMCG also trading under pressure, IT taking a beating today, real estate down to the tune of almost 0.6%. Defense continues to see profit booking. So that's the trend that you're picking up in terms of sectors. Let's quickly look at the heat map in terms of Nifty 50 and see what the stock chart is looking like in trade as we speak. Firstly, IndusInd Bank, the top gainer on the back of Rajiv Anand coming in on the leadership position. Titan seeing gains, Maruti trading in the positive. And Maruti is seeing profit, buying interest today after some bit of sell-off in yesterday's session. Trent is another one. Last couple of trading sessions have been really strong for this one and it's taking cues from the kind of surge that you're seeing in terms of sales as well. SBI Life trading in the positive. What's on the losing end? You have Adani Enterprises, Nestle, Cipla in fact on the back of the US FDA letter, Asian Paints trading under pressure, in ICICI Bank and Infosys with Dr. Reddy's which are down in trade. Varsha, broader markets, a similar trend because last couple of days that's what you're seeing.
Yeah, exactly. Broader markets are actually mirroring benchmark. Let's see what Nifty Midcap 150 is doing. It's down almost 0.14%. You have, New India Assurance, you have Tata Investment, Fact, and Minda who are buzzing when it comes to, Nifty Midcap 150. While on the losers side though, you have BSE, you have Aurobindo Pharma, under pressure on the back of earnings, did not meet the estimates. You have Timken, you have Biocon, you have Bharat Dynamics also losing when it comes to Nifty Midcap 150. Even Gland Pharma is under pressure, expected to post its Q1 results today. On the small cap 250 front, of course, down almost 0.21%. You have Godfrey Phillips, which is buzzing on the back of earnings. You have Tanla Platforms, Chambal Fertilizers. In fact, a lot of fertilizers companies are buzzing in trade today. You have Sterlite Tech also buzzing when it comes to small cap 250. On the losers side, though, you have Triveni Turbine on the back of Q1 numbers, MedPlus Health, Wellspun Living, Intellect Design and MGL, which are under pressure when it comes to small cap 250. So, when it comes to broader markets here, a lot of stocks are buzzing and under pressure on the back of Q1 earnings, right?
Yeah, it's an earnings heavy day as well for the broader markets. But the top story of the day, the leadership churn that's happened at IndusInd Bank, and that's entered a new era with seasoned banker Rajiv Anand set to take over as MD and CEO from the 25th of August for a 3-year term. Now, an asset management veteran and former deputy managing director at Axis Bank, we bring in my colleague Vishwanath Nair to give us more perspective about this. Vishi, clearly a new boss at IndusInd. Would this mean the tables would turn at the IndusInd Bank?
Well, table turns or not, we'll have to sit and watch at this point in time. But what we do know is that Rajiv Anand will be taking over at IndusInd Bank, and specifically, he will be appointed for a period of 3 years. His first day at IndusInd Bank actually starts on the 25th of August. So 3 years from that point is when he will complete his first term as a CEO. He, of course, retired early from Axis Bank on the 3rd of August. And at that point in time, what sources are telling us is that he retired from Axis Bank thinking that he is actually going to retire from being a banker for his life. But then IndusInd Bank turned up, and then that's why they had to go ahead and he had to apply for that job. Now, coming to his professional journey, when he was actually the CEO and MD of Axis Asset Management between 2009 and 2013, after which he entered Axis Bank. So this is where the Axis sort of saga starts in his career. Axis Bank, he was a retail banking head, president of retail banking in between 2013 and 2016, after which, of course, he's also served as executive director, which is when he entered the board. And then in 2021, he became Deputy Managing Director of Axis Bank. Since then, that is a position that he has held till his retirement on the 3rd of August. In the past, he's worked with major banking names. He started his career at HSBC. He was a bond trader there. ANZ Greenliz, IDFC and Standard Chartered Bank as well, where he was appointed for senior leadership positions. Now, what are the challenges in front of Rajiv Anand as he takes on his new role? The primary one is going to be the fact that IndusInd Bank is currently facing challenges on multiple fronts. This includes the problems that are there in the derivatives accounting portfolio, and also in the microfinance portfolio, which is both of which he has faced trouble. The bank has faced troubles in both these situations. Governance concerns are a major issue, which are causing a significant reputational harm to IndusInd Bank. Apart from this, of course, the former CEO, Sumant Katpale, and Deputy CEO, Arun Khurana, both had quit IndusInd Bank in April. This was because SEBI found credible evidence of insider trading by both of them, because the derivatives issue was only disclosed to the market in March of 2025, but it seems that they knew of this much earlier, and that's why they were dumping their stock. The bank is suspecting fraud. Of course, bank is currently being managed by a committee of 2 senior executives who are currently executing the role of the CEO, but now with Rajiv Anand's entry, that helps. His first tasks, that is going to be something important to watch out for. What exactly is Rajiv Anand's first line of duty? The first of which is he needs to appoint a credible and trustworthy management team at the bank. If you were to look at the microfinance business, there again, he has to build some trust. The bank currently does not have a CFO, it doesn't have a treasury chief, it doesn't have an audit chief. So all of those appointments will have to happen. He also needs to reorient the growth strategies as far as IndusInd Bank is concerned, because right now, the 2 executives are running the bank. They are only doing business as usual. So growth strategies need to be reoriented. Separately, he also needs to leverage whatever strengths IndusInd Bank has in the commercial vehicle as well as gems and jewelry financing business, asset financing businesses. He needs to leverage that and grow that further. And lastly, for IndusInd Bank, for a lender like that, housing finance is a fairly new business that they've started, a book of only about 5,000 odd crore. His job will be to then grow that further and ensure that IndusInd Bank is able to capitalize on that.
Right. Thank you so much, Vishy, for getting us all the details. So, a lot of challenges and execution is going to become key from here on. But let's also get in Avinash Gorakshakar, Director Research, Profit Mart Securities. Avinash, good afternoon and welcome to the show. Always a pleasure to speak to you at NDTV Profit. How are you looking at the new boss at IndusInd Bank, and what would you advise investors to do?
Yeah, I think, Hiral, good afternoon. I think this is definitely a good beginning. See, I think Rajiv Anand would definitely bring in new processes and some sort of vigor in the company's management board. But I think, as Vishy mentioned, I think it's too early to take a call as to what are the kind of immediate kind of changes he makes. But I think over the next, say, 1 to 2 quarters, I think you'll probably see the kind of direction, the bank takes. And I think the derivatives portfolio, the microfinance portfolio are 2 areas where I think a lot of painful decisions may have to be taken. So I think, these could be the near-term challenges. But I think net, whatever negativity had to happen now that has happened in the stock price, I would not be surprised that for some time the stock would stabilize and would now wait for some positive improvements on the numbers, positive improvements from the commentary, and how the bank is going to be completely rebranded and rehauled to ensure that there's a complete trust from investors as well as from the institutional side. So I think we'll have to wait and watch for at least the next 3 to 6 months, and obviously after that actions would speak louder than words.
Right. Thank you so much for that view, Avinash. Well, moving on, Tata Motors. Let's see what that counter is doing. It names PB Balaji as the new JLR CEO after Andrin Martel stepped down from his role. Let's bring in Puneet with more on this one.
Well, thank you for that. The stock might not be reacting too much, but it is one of the most critical steps that Tata Motors has taken towards its JLR division. As you rightly mentioned, they've appointed the current CFO, Mr. PB Balaji, as the new CEO of Jaguar and Land Rover business starting in the second half of this fiscal year. Now, it's going to be important because he's been serving as the CFO of the company since November of 2017 and has been one of the integral parts to ensure that the JLR division also has been very strong on its financials over the last 4 to 5 years, and we always used to see a translation loss impact pre-pandemic on JLR. Since Mr. Balaji has stepped in, all those have stopped, and hence the turning around of the financials the credit has to go to him as well. Apart from that, he's worked in the automotive and the consumer business for 32 years, and hence it's not new to him for making turnaround as well as growth strategies going forward as well. The two key aspects to watch out for will of course be the demerger of both the passenger vehicle and the commercial vehicle division, and Mr. Balaji will of course be leading JLR in that aspect, and what happens with the eventual rebranding of Jaguar as well, because it's expected to be an EV only brand. The brand did get into a lot of controversy because of his rebranding for the Jaguar brand, so he will need to do a lot of work, but definitely one of the key personnels appointed within Tata Motors for JLR, and it could be one of the key re-rating triggers going forward as well.
A re-rating trigger coming in with the JLR. Before we get into Avinash on this one, let's quickly address a Paytm. Let's pull up that one on the screens. Anfin has raised $454 million in the block deal. They've sold it at around 1,067, pretty much at what the current market price is. The stock is now down nearly 1% in trade. The details are just coming in right now with regards to the stake sale that was already reported on NDTV Profit yesterday. What is interesting with the Paytm is the way the DII stake has been increasing as well. From a 3% in March 2023, the DIIs have actually gone ahead and increased their stake to nearly 15.8%. So a lot of interest that is coming in on that front. The public shareholding has also gone up, though the number of shareholders has gone down. It's the FIs who have gone ahead and reduced stake. Apart from that, if you talk about the key, FDIs as well, it's Mirai, Motilal Oswal and Nippon. These are the ones who are present as per the current shareholding pattern. Overall, if you talk about the turnaround, the regulatory challenges that have been faced by Paytm, that is something which probably will go away with this. And the turnaround that we're expected to see from here on as well is the pivot in terms of the payment business, the focus that the company has with regards to profitability and growth. In fact, they did turn positive in the first quarter of FY26, beating the consensus numbers as well. And they're striving towards a 15 to 20% EBITDA margin, where currently they're sitting at around 3.7%, and they're expecting to exit FY26 with an EBITDA margin that will be considered better. The three triggers for our Paytm will be the RBI easing restrictions on the company and accelerated margin expansion and profit growth. And overall, from an analyst perspective also, if you see 10 have a buy call, 5 hold, 4 sell, and the average target price is around 1100, which is below the current market price as well. So that's with regards to where Paytm goes. Avinash, a quick question with regards to Antfin exit and the turnaround of a Paytm, as well as JLR getting the first Indian CEO, and whether it will be a re-rating candidate as well from here on.
Yeah, I think as far as JLR getting a Indian CEO is definitely good news. I think all things apart, I think what the market would like is how the volume numbers stack up, and I think Mr. Balaji has got a very clear cutout kind of strategy and program going forward. My sense is that the CV numbers which have come up till now have shown some indication of green shoots. We could see a little more traction on the commercial vehicle side in the second quarter of this financial year. and hopefully the second half should be much better. And I think the markets are also waiting for the demerger of the JLR and the domestic business, Hiral. I think that would also be a near-term trigger, because clearly JLR would be an independently listed company. To that extent, I think we'll have to see how this pans out. But overall, I think the second half of this financial year is going to be much better than the first half for Tata Motors. Hopefully the rate cuts, the rural demand and the economy, I think we could see good amount of traction in the second half starting September onwards. As far as Paytm is concerned, I think this is definitely a good development, because a lot of market people were not very comfortable with the Chinese connection in Paytm. Now with this sellout, the Chinese connection is completely out. I think domestic funds have increased their stake here. And I think, things are gradually improving. But I think to get a complete revival for Paytm, maybe you'll have to wait for the next 2-3 quarters. I think the markets would look at operating efficiency to kick in, cash flows to improve. And I think the market opportunity is large, but I think they need to also repair their balance sheet to a certain extent. And I think once earnings, at the operating level kick in, that is the time when I think you could see a significant amount of re-rating on the Paytm stock. So somebody who's got a 12 to 18 month time frame can definitely consider to look at buying a small quantity here. But I think keep the time frame medium to long term.
Right. Thank you for that view, Avinash. Well, two stocks which I'm going to focus on. One is Sanofi Consumer and Health, which has come out with its Q2 numbers. Now, if you see, good set of numbers. Revenue increased was led by export operation and successful product launches. Net profit uptick was led by lower base last year, and other income also aided net profit for the company. EBITDA margin impact was led by higher other expenses, and they've launched 2 products in the allergy segment. So, one is Sanofi Consumers, good set of numbers. The other one which is in focus is Oro Pharma, which they missed estimates basically. So revenue miss was led by lower US and API business revenue. Lower contribution from Revlimid, that is cancer drug, impacted their EBITDA, and PAT miss was led by EBITDA miss and higher than expected tax expense. So Avinash, 2 pharma stocks, Sanofi Consumer and Aurobindo Pharma. How are you seeing their Q1 numbers, and also your view on both of these stocks? And in apart from this, if you have any other picks in the pharma sector.
Yeah, I think, Varsha, both these companies, I think numbers have been a kind of divergent. I mean, if you look at Aurobindo, they've missed this quarter numbers because of lower API sales. And I think the markets are looking at slightly better numbers. So it's a kind of a tad disappointment for this quarter. We'll like to see how the company performs in the second quarter. But I think looking at the price movement, I would not be surprised that beyond this level, maybe there could be some further panic sell-off. So I think, the stock could consolidate for the near term. We are suggesting our clients that whoever is holding Aurobindo Pharma should hold on. Fresh buying is advisable once we see a better clarity in the second quarter. And as far as Sanofi Consumer is concerned, I think it's not a bad set of numbers despite a large presence of other income. And I think the product category, I believe, is going to get further accelerated in the coming few quarters. So that could be a trigger point. But I think overall, if somebody wants to buy this stock, I think one needs to keep at least a 18 to 24 month view. This is not a stock which could possibly give you a very short kind of upside in the very near term. Valuations are fair to expensive. So I think, you'll have to keep a time frame of at least a couple of years before you could actually make some decent money here. So, this company was hyped up from the main Sanofi company. And I think shareholders have largely benefited. But I think clearly you could see some traction coming in over the medium to long term.
Okay, so that's with regards to the pharma pack. But moving on, Butterfly Gandhimati, that's another stock which is in focus in today's day of trade, and that is on the back of the numbers that have been reported. The stock has cooled off, but still seeing gains of nearly 7%. Clearly steady quarter amidst a weak industry trend. The earnings have been, though, lower versus estimates. The growth, the revenue and the margin growth has been slightly slower as well. Though their focus is in terms of the margins, that turnaround remains absolutely intact. So that's with regards to where Butterfly Gandhimati goes. The other one is a Global Spirits. The earnings have been lower than what the street was estimating. Bulk of the volumes have declined, and this is in contrary to the expectations as well. Regular as well as other segments have actually faced headwinds in Delhi as well as Haryana. And the policy shift that we've seen in terms of where Delhi goes, that has affected the final month of the quarter, back of which the margins have improved, though your profits have gone up by around 13%. If you pull up the stock as well, is under pressure. And if you talk about a Godfrey Phillips, that's another one which is buzzing. Cigarette and tobacco profits, they've seen a growth of around 28%. That stock is also at the day's highest levels with gains of 8.5% coming in there. A 2:1 bonus is what has been approved, and the record date is the 16th. And lastly, the PAT is not comparable because of an exceptional loss. So these three companies, Avinash, Butterfly, Gandhimati, Global Spirits and Godfrey, what would you advise investors to do basis the earnings reaction that you're seeing today?
No, I think amongst all the three, Godfrey Phillips looks to be quite interesting because the bonus has come after a long time. That would improve the liquidity, and I think clearly this has been a stock which has been under the radar by many investors. So I think definitely with this bonus, you could see a little amount of liquidity, and I think it could possibly gain further traction. Numbers have been decent. I think at least in this quarter, numbers have been in line with what the street expected. But I think Global Spirits has been a disappointment. I think that's the reason the stock is down today. My sense is that, going forward, what is the policy change, the regulatory change? I think that will be very important. But overall, I think, we'll have to see the second and third quarter. Normally, the pickup quarter for Global Spirits is the second half of the financial year. So I think net, the second quarter may not also be great. It could be more of a flattish kind of quarter. So second half should be better. So I think those who are holding on to the stock should hold on. I think fresh buying at these levels, Hiral, is not advisable.
Thank you for that view, Avinash. Moving on, let's see what TBO Tech is doing because macro headwinds have certainly hurt top line for the company. Earnings were impacted by multiple macro headwinds and the better than expected take rates in hotels and packing what the company has seen. Consolidated gross transaction value were muted at 2.3% growth of year on year, while weak gross margin drives EBITDA miss in Q1. While on the next stock which is in focus is Triveni Turbine. Again, if you see, let's just talk what didn't work when it comes to Triveni Turbine. The deferment of dispatches and orders impacted growth for the company. Domestic sales declined 24%, export sales declined 15%, and the quarter's performance fell short of expectations and proved to be more challenging. Order booking was down 16% at 536 crore due to lower export demand, and outstanding order book stood at around 2,000 crores, which is up 20% year on year. Avinash, both of these stocks, TBO Tech and Triveni Turbine, what are your views when it comes to Q1 numbers and what will you advise to investors?
I think the bigger disappointment came from Triveni Turbine because both the domestic and the export volumes were down. I think clearly execution took a hit, demand was low, and I think immediate recovery looks to be little difficult. So maybe the July to September quarter is also going to be a challenging quarter for Triveni. Although the order book is quite attractive and they maintained margins at around 19% from 20% earlier. The revenue drop is definitely something which is concerning, and I think that is something the markets have not liked. So we would prefer to be a little cautious here. We'll try to see, how the second quarter pans out. If at all it turns out to be even bad than the first quarter, then I think the stock would get further derated. But as of now, no fresh buying advisable here. As far as TBO Tech is concerned, I think this could be a small blip, but I think the second half is definitely expected to be significantly better. So we prefer to hold on here. I think any dip in the price would be used as an opportunity to accumulate.
Right, so that's with regards to TBO Tech. The future looks promising is what Avinash is saying. But let's quickly look at Oswal Pumps as well on the back of earnings. How are you looking at Oswal Pumps? Because the stock is seeing gains of nearly 1.5%. Avinash, the FY26 order inflow was something that the street was eyeing.
So I think, I think numbers have been quite solid. And I think recently, just before I came on air, I was hearing the interview of the MD of Oswal Pumps. He seems to be very aggressive in putting his guidance that this year also numbers are going to be pretty strong. The second quarter order book is also more or less completely in hand. Execution will be strong. So I think, somebody who's taking a next 12 to 15 months kind of time frame, this is a space where I think you're going to see a lot of growth happening. And with a very strong order book, Hiral, I think I won't be surprised that if numbers come much better than what the street expects, you could expect further re-rating even from these levels. So I think despite the fact that it's up by about 10-11%, any dip should be used as an opportunity to accumulate here. It's a stock where I think recently it got listed, but I think if numbers are good, you could expect a decent revival and a decent re-rating on the counter.
Okay, so that's with regards to Oswald Pumps as well. The stock is up nearly 24% since listing. In fact, we've just seen a block deal that's happened. 10.7 lakh shares have traded on Infosys. The stock is now under pressure with cuts of 1.5% coming in there. So that's with regards to our Infosys on the back of the large block deal that has happened right now. But as we slip into a short break, let's quickly also hear in what the management of Oswald Pumps had to say. That is Vivek Gupta, Chairman and Managing Director.
देखिए, ऑर्डर बुक में दो चीजें रहती हैं. एक तो हम लोग जो हमें गवर्नमेंट के जो ऑर्डर्स कंप्लीट करने होते हैं वो करीबन हमें मिलते हैं 90 डेज. सो हम वी आर वेरी कॉशियस कि 90 और 30 दिन का हमें उसके बाद एक एक्स्ट्रा टाइम मिलता है जो बोनस पीरियड है. सो हम 100 ऐसे ही ऑर्डर्स रिसीव करते हैं जो 120 दिन तक हम लोग कंप्लीट कर पाए, ताकि डिपार्टमेंट के अंदर हमारे जो क्रेडेंशियल्स है, इमेज है, वो बहुत स्ट्रॉन्ग रहे और आगे के लिए गवर्नमेंट का फेथ हमारे कंपनी के ऊपर ज्यादा से ज्यादा बने. सो ऑर्डर, चूंकि गवर्नमेंट इज वेरी एग्रेसिव इस पूरी स्कीम में, तो वहां पर हमें और भी ज्यादा ऑर्डर्स लेने में कोई इशू नहीं है. और इस साल में जैसे हम लोग बहुत इजीली देख पा रहे हैं कि तकरीबन 75,000 से प्लस पंप हम लोग प्लान कर रहे हैं कि इस साल डायरेक्ट इंस्टॉलेशन करें. सो वो बहुत क्लियर हम विजन लेके चल रहे हैं और वहां पर हमें कोई सरप्राइज नहीं दिख रहा है किसी तरह की अचीव करने के लिए.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में. फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग. जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है.
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो. प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है. निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ.
हेलो, बोलिए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching Profit Buzzers. Well, moving on, Anil Ambani reached the Enforcement Directorate office in Delhi for questioning in the alleged 17,000 crore rupees loan fraud case. What will be the procedure entail and how will the investigation proceed? We are here joined by Shrimi. Shrimi, tell us what your sources are indicating. Shrimi, can you hear us?
Yeah, I think there is some bit of an audio glitch with regards to where Shrimi goes, but this is going to be an interesting story which is developing pretty closely right now, where Anil Ambani has already reached the Enforcement Directorate office in Delhi for questioning, and this is in the alleged 17,000 crore rupees loan fraud case. Now, what the proceedings are going to entail is the crucial bit that we should be picking up from here on, and how will the investigation proceed. What will be the next steps that will be taken? Those are the key details that my colleague Shrimi will be getting us. Those are the visuals that we are picking up where Anil Ambani would be facing the ED heat. In fact, I do have my colleague Shrimi who's back with us. Shrimi, are you able to hear me well? If you could tell us from here on that now that Anil Ambani has been taken for questioning, what are the key details that you're picking up in terms of the next steps?
Yeah, so, we've been reporting that since 11 o'clock, after making him sit for 15 minutes, he has been taken to interrogation room where his both audio and video is getting recorded. And remember that in PMLA, whatever the statement he's going to give will be presented in the court, and you can't alter that. So that is something very crucial. So whatever statement he's giving on the slew of questions is going to be permissible in the PMLA court. Now, couple of questions and couple of highlights, since we know that ED is investigating 17,000 crore of illegal loan fraud, which flagged several complex web of transaction, right from how the loan sanction from the Yes Bank gone to Reliance and then routed back to Yes Bank Rana family offices. That quid pro quo angle is what one of the key question ED is asking. Another one is, of course, how the amount been given the loan sanction to both commercial finance as well as the housing finance, close to 12,000 crore, how that has got diverted to several shell companies, and of course the bank guarantee aspect, the fake guarantee where the Odisha-based entity is involved, and in fact we have seen the arrest being made there. So whatever the evidence is and whatever the statement that entity made, alleging that this was all done to kind of secure the SSCI, the government tender by the Reliance company, is also one of the key question which ED is asking at this point of time. So clearly he has to face some tough question here to answer, to reply, because whatever statement he's going to give, that will straight go to court. And in fact, we are also hearing that there will be some lunch break also, where he will be given some time out from questioning, and then the questioning will resume after 1:30, 2 o'clock is what the indication so far we are getting. But the number of question and the complex, given the complex web of transaction, the questioning will be continue is to at least 10 to 12 hours is what we are picking up, what we are learning at this point. But we are closely watching these developments, and we will be trying to get as much as possible that what is happening inside.
Right. Thank you so much, Shrimi, for all the details, and we'll certainly wait for next steps. Well, on that, let me also invite our second guest for the show, is Vinay Rajani, a senior technical and derivative analyst at HDFC Securities. Welcome, Vinay. Pleasure to have you. Vinay, how are you seeing markets considering all the geopolitical reasons that we have as of today?
Yeah, so good afternoon. Positional trend of the Nifty has been down only, so it is finding it very difficult to sustain at higher level, and every rise is being taken as a sell on rallies kind of opportunity. But the one observation has been that the Nifty is currently taking support around its 100 days exponential moving average, which is placed around 24,590. So that is a crucial level. For last 3-4 sessions, it has been trying to give close above that level, but positional trend is definitely down. Lower top, lower bottoms are there, and positionally we can see we are underperforming. We are the underperformer in the year 2025 also, where we have seen a rise of more than 27-28% in the markets like Korea, while Nifty is one of the underperformer with almost flat returns in the year 2025. So yes, the overall trend has been weak. Despite Asian markets and emerging markets are performing better than India, but looking at the support, 24,590 is a crucial level. If Nifty were to close below that, then it will be further negative, and the overall the positional support which we see below 24,590 is the 24,200, around which 200 days exponential moving average is placed. So yes, the positional trend has been down. The only thing that we need to see whether these supports are getting respect or not. So 24,590 followed by 24,200. These are the two supports one should watch out as a for bounce back.
Right, so that's an interesting one in terms of where markets go. Let's look at our LIC housing and see what that stock is doing in trade. You have a Jefferies, which has maintained a hold. The stock is down nearly 2%. They've cut the target price to a 635 from a 650. And this is on the back of the first quarter numbers that have missed estimates as well. They're expecting net interest margin pressures ahead, but it's only the valuations they're saying that is offering some bit of a support for this one. Avinash, what would you do with the LIC housing finance, or anything else that you would have to add in terms of housing finance companies from here on, taking into consideration the kind of pressure that real estate as a sector has been facing right now? Avinash, you're on mute.
Yeah, sorry. See, we like to wait for some clarity on the LIC numbers, Hiral. But within the housing finance companies, I think with 2 rate cuts announced, I think there is some pressure on NIMs. We'd like to look at some PSU names like Canfin Homes, which is part of Canara Bank. Typically, housing finance companies definitely would have to lower their margins to ensure that they get a bigger slice of the business. But I think looking at what LIC Housing Finance has reported, I think it will be better to wait, because clearly I think there is some margin pressure for these companies, and business has not come in the way the business should have come. And with the overall lull in the real estate market, I think obviously the first quarter has not been very great. So I think we'll have to wait for the second and third quarter for business to get ramped up, because I think clearly that is one of the key issues. So I think we'll continue to have a cautious view here. We are not very aggressive on housing finance companies. We'll prefer to bet on the PSU banks clearly, because they have bigger balance sheets and a bigger diversified income kind of stream. So that would be the strategy, at least as of now.
Okay, so that's with regards to LIC Housing Finance. But moving on, Manappuram Finance, that stock has been actually facing pressure in trade, and this is after its subsidiary, which is Ashirvad MFI, posted a disappointing first quarter. The stock also under pressure. Harsh is with us to tell us more. Harsh, over to you.
Well, yes, let me give you perspective. So while the lines are coming on the screen and you'll get a perspective with regard to what the numbers actually look like, there's a very, very sharp shrink with regard to the net interest income. That number was around the 290 crore number Q4 FY25. That has shrunk to 230 crore in Q1 FY26. So that shrink is extremely sharp. That's what you want to be mindful about. The margin numbers still awaited. Where Ashirvad Microfinance is concerned, Manappuram's numbers will come out sometime later this week. So you want to watch out for that. the real impact will come from the impairment number, which is actually the credit cost or the provisioning number. That number stood at 850 crore in Q4 FY25, was a real serious knock. In Q1 FY26, it was expected to improve, and it has. But on a console level, that provisions number was expected at around 522 crore. Now at an Asirvad level itself, the number has come in at 483 crore. So leaving very little bandwidth on a console basis to actually hit that 522 crore expectation number. But we'll have to wait and watch for the full Manappuram picture to play out. But likely looks like a weaker set than expected already, given Asirvad's numbers. So you want to be careful, and that's probably what's keeping the stock in focus as well. And the 2+% lower is likely justified due to that.
Thank you so much for that one. Vinay, a quick one. Manappuram Finance, LIC Housing Finance. What would you advise?
Yeah, so positional trend of Manappuram Finance has been quite bullish. Relative strength was quite there, and it was there, and till now it was performing well. No doubt we have seen our fall from the 285 to 250, 245 odd level. But overall on the positional chart, it looks better, and it is likely to outperform. Today it has come down, but overall I see strong support at 245. So trader can look this level as a stop loss in their trading long positions. But otherwise, overall chart looks like that it should outperform. Considering the LIC Housing Finance, it is looking weak. It is now below its 50 and 200 days average. So definitely trend has changed. Previously it was bullish. Now it looks like that it has given a fresh breakdown. So looking weak relatively. Support is there around 560. Resistance there around 600. So bias is on the negative side as in the LIC Housing. But Manappuram Finance is looking relatively stronger on the charts.
Right. Thank you so much for that view, Vinay. Well, let's move on and let's talk about a pack that has been underperforming not only today, but also for the last 15 sessions. And I'm talking about oil marketing companies. You have IOCL, HPCL, BPCL. All are down between 8 to 11% in the last 15 days. What's wrong, and is it right time to buy? Somit is here with more on that.
Well, yes, the oil marketing companies, in fact, the state-owned oil marketing companies have been under pressure. IOCL, HPCL and BPCL are down anywhere between 8 to 11%. Now, obviously, the Russian crude ban is one of the reasons, but that is not the only reason why the stocks are down. Firstly, the reason is the fall in the Singapore gross refining margin, which is the Asian benchmark for refining margin. Now, in the first quarter, they averaged around $5 currently, and so far in the second quarter, they have averaged around the $3.2 per barrel mark. And this drop in the Singapore gross refining margin is largely owing to the uncertainty owing to the global demand and the rising inventory globally, which has led to this lower GRMs. When it comes to marketing margin, which is the other segment for the oil marketing companies, in the first quarter, the gross marketing margin that the oil marketing company earned by selling every liter of petrol and diesel stood at close to 8 to 10 rupees per liter, and this has dropped to around 5 rupees per liter so far in the second quarter. Now, this drop is owing to the adverse movement that we have seen in crude oil prices and because of the adverse movement that we have seen in exchange rates. Now, apart from that, there was a weak performance that we have seen by all the peer companies, that is Reliance Industries, MRPL and Chennai Petro in the first quarter of FY26. For Reliance Industries, the O2C segment, which is the oil to chemical segment, that EBITDA dropped nearly 5% on a sequential basis. For MRPL, the GRMs were down 19% on a YY basis, and for Chennai Petro, the GRMs were down around 49% on a YY basis. So this weak performance coming in from the peer companies has also put pressure on the oil marketing companies' share prices. Now, apart from that, the Russian ban, uncertainty around the Russian crude is also one of the reasons, and this is owing to the renewed sanction on Russian crude exports by US, and this could cost the oil marketing companies, the cost of sourcing crude could increase by around $1 per barrel, and that could also have an impact on the earnings going forward. So that is one of the reasons. These are basically the reasons why oil marketing companies have been under pressure. But what are the key triggers or key positives going forward? Firstly is the LPG compensation. Now, there are multiple reports that the government could pay a part of the LPG subsidy for the oil marketing companies anytime soon. In fact, we spoke to IOCL management and they're expecting this subsidy to come in anytime in the second quarter of FY26. So that could be one of the key positives. When it comes to marketing margin, yes, they are down on a sequential basis, but the marketing margin that the oil marketing companies are currently earning of around 5 rupees per liter is still way higher than what the historical average was of around 2 rupees per liter over FY18 to FY25 what we have seen. Apart from that, ban on Russian crude is still ambiguous. There's no clarity on this because yesterday's government statement clearly hints that there has been no curb on sourcing or procuring the Russian crude. So even going forward, oil marketing companies could procure Russian crude if it is available at a discount, and that could also lead to lower crude prices for the oil marketing companies. Apart from that, if you look at the valuations, they continue to remain at par or at discount. For IOCL, it is largely at par with its historical average. For BPCL, it is at par, and for HPCL, it is trading at a discount compared to its historical average. And lastly, if you look at the return potential for Indian Oil for OMCs at this point of time post the correction, IOCL has a return potential of 13%, BPCL of 17%, and HPCL close to around 12% from the current levels.
Right. Thank you so much, Somit, for all the details. Well, Avinash, let me come to you on this. I'll ask you this question. All these OMCs, is it time to buy, to wait, or to watch? Avinash, I think you're on mute.
Yeah, sorry. Varsha, I think it's clearly from a medium to long-term horizon, oil marketing companies definitely look pretty attractive. But I think if you look at the near-term challenge of rising crude prices, there could be some supply-side pressure and some margin pressure, for their GRMs. Longer term, I think we continue to be positive because both the automobile and the aviation pockets are growing quite rapidly. And definitely, I think the opportunity to grow is quite significant. So maybe, in the second half, you could see a good bounce back from these companies, specifically IOC, BPCL, where we have been quite constructive. So I think, from a long-term, slightly, 6 to 12 month kind of time frame, it would be a good decision to buy them when, the stocks are under pressure. But in the short term, I think don't expect any immediate upside from them.
Right. Thank you so much, Avinash, for that view. Vinay, how are charts looking, when it comes to IOCL, HPCL and BPCL?
Yeah, so all three are in a correction phase. But if I were to compare with each other, then BPCL looks the strongest because it is above the 50 and 200 days average, while IOC and HPCL are going a bit weaker. So BPCL looking strong, and it looks like that they are into a correction phase in an overall bullish trend. So no doubt we have seen a fall from the 315, almost 10% correction in the stock like BPCL. But the medium to long term charts are suggesting bullish. This is just a short-term correction which is going on. The strong supports are placed around 300 odd levels, below which there is a strong 200 days average support placed around 300. 300 is the 200 days EMA support, so that is a very strong support. So relatively, chart of BPCL is looking much better than the HPCL and IOC, and it looks like that it is overall correction phase in the bullish trend.
Regards to where OMCs go, let's look at Azad Engineering. A strong set of numbers that the company has reported. Margin expansion is what you've seen, and that's what actually, aided the profitability number as well. The stock is seeing strong gains. Anushi is with us to tell us more. Anushi, what are you picking up from the conference call as well? Because good commentary coming in there.
Absolutely, Hiral. So, we have seen a decent set of numbers, as flashing on the screen. Now, we've seen about a revenue uptick of 39%, which was aided by the energy segment as well as the aerospace and defense segment. In fact, if you look at the growth, that was led by the export mix, which is up over 39% as compared to the domestic growth of 15%. And margin expansion also on account of changes in inventories which have taken place has aided that expansion number that we are looking at. If you talk about the order book, that also exceeded the levels of 6,000 crores. This is as of the June 25 data that we are looking at. Now, the company does maintain its overall guidance, which is there, which is a growth of 25 to 30% for FY26. In fact, they're also expecting the current wallet share across customers to increase from 1 to 2% to 5%. Energy segment, the growth was driven by GTD's plant, which got operational in fourth quarter. So more growth coming in from that side. And of course, the company also talks about such capacity addition plans, wherein it is seeing that capacity at peak levels can create revenues of up to 1,000 crores. So that is something that we should be watching out for. And this is the overall picture for Azad Engineering.
Thank you so much, Anushi, for that. Before we go to Vinay and Avinash for an Azad Engineering, let's quickly just address the flashes at the bottom of your screens where the ED has been grilling Anil Ambani. What the sources are indicating, the few questions that he has been asked is, one, he has been asked to provide the statement on whether he or senior executives were aware of or involved in any irregularities. That's the first question that was being asked. Secondly, did you personally authorize or influence any decisions that were related to the loan misuse? That was the second question. Apart from that, if there were any deliberate defaults that were made with regards to where payments or repayments were concerned, despite having the capacity to pay. That's the other question that the sources are indicating that Anil Ambani was asked. Apart from that, if there were any kickbacks that were given to any bank officials or government employees. And very lastly, if there were any payments that were made to influence the loan approvals or disbursal timelines. So these have been few of the questions that have been asked by the ED to Anil Ambani in the, in all of that is going right now in the probe, where, he was called for questioning in Delhi. So these are few of the questions that we have been picking up from our sources, and we will try getting you more details from these details as well. But moving on, staying with all of the scrutiny now, SEBI has been mulling ways to reduce volumes in options trading. In fact, the SEBI committee is going to meet on the 19th of August to discuss key details on reducing volumes in the options market. If you pull up a BSE, let's see what the BSE stock is doing in trade, because we already had the flashes that were bottom of your screens. The stock is nearly at the day's lowest levels with cuts of 4.5% coming in there. But let's get in Charu to tell us more. Charu, what are you picking up? Because clearly, reduction in terms of volumes for options trading, an impact comes in on the exchanges, and that's the reaction that you're seeing on the stock price as well.
So the market regulator, Securities and Exchange Board of India, is currently looking at ways to reduce volume in option trading segment. Now, one of the ways in which they are trying to do it is to encourage activity in the cash market instead. Now, again, coming on to how they are planning on doing it is recommending to the Finance Ministry about how to, they can go about reducing the STT on cash market transactions. Apart from that, they are also, suggesting that the fortnightly or monthly expiries instead of weekly expiries can be brought in, which is leading to some of the impact on stock exchanges as we are seeing right now. Apart from this, there has also been recommendations to reduce margin requirement in cash market segment. Now, these are some of the changes that are being explored right now. Nothing is set in stone, but we also know that the SEBI committee, the Secondary Market Advisory Committee, SMAC, is also going to be meeting on August 19 to deliberate further on this issue and come out with some concrete details. So we'll keep the developments flowing. That's all we know for now.
Charu, stay with us, and thanks for that. So, would this mean the end of weekly expiries or not is the key question here. Let me quickly first go to Vinay to take his view. Vinay, what do you make out of this, the source-based story that my colleague is picking up? And secondly, what would you advise investors to then do with a BSE?
Yeah, so capital market index has performed significantly in the year 2024, and after long outperformance, this defense and capital market theme is fizzling out, and they have fallen into a consolidation or correction phase, and still they are going weak only. Stock like BSE, which is no doubt it's still holding its uptrend on the positional chart, but the way it is forming a lower top, lower bottom, it looks like that it should extend the fall. So as of now, one should not accumulate these stocks in this particular capital market space, because they are still into a downtrend, short-term downtrend, and this fall can extend. So I would suggest investors and traders to wait for some more correction to come, and if they come at comfortable level or oversold scenario comes, then only one should look at for the going long opportunities. But as of now, they are looking weak on the charts, and one should avoid going long at this point of time.
Right. In fact, let me get in Avinash as well. Avinash, what do you make of this announcement? Or maybe I can't call it an announcement. It's more of a source-based story that we're picking up.
I think, Hiral, this decision or maybe this proposal to cut back the option kind of volumes is, I think, right from the beginning, the regulator wants to cut down the retail interest in these, financial instruments which are more risky. So I think, we'll have to wait and watch how the regulator does it. But typically, I think you cannot stop speculation beyond a particular level. So I think, traders who want to take the risk will still take the risk on the option side. And I think it would be a negative development, for the broking community, because a large part of their business currently gets generated, from the derivative volumes from the F&O side. So, you'll have to see what is the business impact of all this. But I think to increase the cash volumes, I think clearly that would be a kind of a long-term measure, because volumes on the cash side cannot increase dramatically in the short term. They take a little bit of time. It is news-based flows, basically, what kind of news flow is going in the market, particularly regarding any company or stock. So I think we'll have to wait and watch how this entire thing will be implemented. I think it's good to hear it, but how it gets implemented is going to be very crucial.
That view, Avinash. Well, thank you, Avinash and Vinay, for joining this conversation. Pleasure to have you. Well, moving on, time for an NDTV Profit exclusive. In the wake of the Jane Street controversy, SEBI plans to create a specialized division to investigate potential manipulation by high-frequency trading firms. Charu, who is still with us, have more details on that.
Hi, so as NDTV Profit reported this morning as well, the Securities and Exchange Board of India is mulling to, sort of create a group or a division of one of their most, qualified employees or officials to look into the manipulations caused by high-frequency trading firms. Now, this is going to be a department or a division in itself, and it is going to look into Jane Street issue at first or any other related party issues at first, but it is going to be having a more permanent position where they will be looking at such manipulations by foreign entities or HFT firms later on. This is going to be a group of people who are highly qualified and are going to be from different other departments of the regulator. Currently, we also know that due to the enhanced scrutiny that is on Jane Street, it is sitting on major trades, holding back from doing any major trades for now, and has also sought more time from the regulator to give their reply or response to the proceedings that are going on.
Okay, so that's with regards to the Jane Street fallout. Thank you so much, Aru, for getting us the details. In fact, let's get in Shrimi back with us as well with what's the latest that she's picking up on the entire Anil Ambani case where the ED probe is ongoing. Shrimi, over to you.
Yeah, as you can see right behind me, the entire camera units are gathered because the Anil Ambani is expected to come out any moment for a lunch break, and perhaps after a short lunch break of 30 to 40 minutes, the ED will resume the questioning. And some of the questions actually, he's been, asked, and the statement has been recorded is what we are gathering from insiders. And those questions related to that, were Anil Ambani or any senior, executives aware or involved in any kind of financial irregularities. That is something which was flagged during the investigation, that prompted the entire search operation. The second one, of course, that whether he was personally authorized or influenced any decision related to loan misuse. Now, again, the agency wanted to perhaps know that whether he was aware, he was involved in the entire, the way illegally the loan was diverted to several shell firms. Third question, what we are picking up is on the part that whether there were a deliberate attempt to default when the company and all those companies who defaulted has capacity to pay is something he has been asked. He has been asked to give a proper sort of answer and reply to that. And the fourth one is with respect to the kickbacks and the quid pro quo with the Yes Bank, the 3,000 crore of loan between 2017 and 2019 is something we've been reporting about. And the other one, and the important one, in fact, that were any payments made to kind of influence all those loan approval which his company, ADAG group of companies, has got. Now, remember, the bankers have been, questioned on the amount and the loan which was sanctioned and dispersed to Anil Ambani group of companies. In fact, the ED has written to at least 12 to 13 banks. Total 20 banks has given, loans to all Anil Ambani group of company, and they are questioning that whether all the due diligence were followed by banks or not. Try to sort of understand whether there is any kickback sort of indication coming there or not. So these questions so far has been asked, and I'm told that the statements is getting recorded. The questioning is underway, and perhaps the questioning round will resume, and it will go out for some time. So we are tracking that story closely, and we will see. Maybe the Anil Ambani may soon come out in some moment.
Update, Shrimi, we will be awaiting from you as well as soon as Anil Ambani comes out from the grilling session with the ED as well. But completely out of time, a wrap on this edition of Profit Buzzers from Varsha, the team that put the show together, and myself. Lots more lined up on the other side. All the small cap buzzers that you want to watch out for with Samit Sarkar. Please stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers. Now, I'm your host Anu Shivakaria and with me is Sumit Sarkar. But before we talk about the specific stocks action, let's also see how the small cap index is doing. And as usual, we have Hiral standing by to break that down for us.
Thank you so much, Anushi, for that. Let's quickly take a look at what's happening because your broader markets are mirroring what's happening in terms of benchmarks as well. If you pull up the small cap index in terms of BSE small cap and if you look at the Nifty small cap 250 as well, you'll see the kind of mild recovery that happened from the day's lowest levels, but the pressure has continued. There you go. 0.3% lower in terms of the small cap index. And if you talk about this Nifty small cap 250 as well, similar kind of trends where you're nearly at the day's lows. But let's quickly look at individual company impact as well. On the back of earnings, broader market stocks which are reacting in trade, you have the likes of a Godfrey Phillips, 9% up move, strong set of numbers. Sarda's second consecutive session of gains on the back of a strong set of numbers, and a Triveni Turbine on the weakness is trading under pressure. Apart from that, you have a TBO Tech that has cooled off slightly, but the expectation is that going ahead, the quarter, the coming quarters will be better, so there could be buying interest that could be emerging on this one. Butterfly Gandhimathi, strong set of numbers, and a Sanofi Consumer, strong set of numbers. 7 to 12% is the kind of up move that you are seeing. Another pack that is buzzing in trade is the fertilizer pack. No major news coming in there, but gains in the range of almost 2 to 6% on a Chambal Fert, Fact as well as a RCF. Whereas the textile companies that have been trading under pressure, and probably this is taking concerns from the tariff war, they are seeing cuts to the range of almost around 4 to 8% in terms of where textile companies are concerned. PSP Projects is another one. You have Adani Group which has gone ahead and increased stake in one of the small cap, 2.5% up move on this one, though the gains have been cooling off. Other stocks that are buzzing in trade, Prakash Industries, strong moves there. Newgen Software, Radico Khaitan, also some bit of cooling off there, but good move seen on this one. And Tanla and Sangam India are a few of the other names from the broader markets which are buzzing in trade. So that's the overall picture that you're looking at in terms of individual stocks in terms of the broader markets. But I think one company that you guys are focusing on is Ather. Puneet, I think that's going to be an interesting conversation.
Well, definitely. Thanks so much for that, Hiral. And we've seen a stellar performance for the company compared on a year-on-year basis. Costs have gone down. The gross margins have also increased for the company. And, let's also pull up, from the day's highs, we have seen some selling on Ather Energy in this particular quarter. But let's also get in Tarun Mehta, who's the executive director at the company and co-founder, of course, of Ather Energy. Tarun, a very good afternoon to you. Thanks so much for joining in and welcome to NDTV Profit. Largely, let me start off first with the key question. You have reduced costs in this particular quarter. EBITDAs also, the losses have reduced. Do you expect that by this time next year, Q1 FY27, you will be able to be at EBITDA break-even levels at Ather Energy?
Right. So last quarter was a great quarter for us. Our new product, Ather is the family scooter. Sorry. Yeah, new product, the family scooter, landed really well. And I think that's the primary reason why revenue was up almost 80-90% over last year. And sales was up almost 100% over same time last year. So this product is really allowing us to expand into the entire length and breadth of the country. We've expanded our distribution almost 30-35% just in one quarter, just in Q1. And this trend we expect will continue for a few more quarters. Ather's had one of the smaller distributions. And with that alone, we were doing 14-15% market share. We can catch up a lot on distribution over the next few quarters. So we are forecasting a fair bit of growth potential on our distribution footprint, powered by this new scooter. So our unit economics is already at a good place, and expanding distribution should give us a fair bit of operating leverage. And that's what we expect will drive reducing losses over the coming quarters.
So Soumit Sarkar also joining into the conversation. So on a sequential basis, if you look at your gross margins, they have expanded by nearly 300 basis points. Is there more room for expansion going forward, or gross margins will stabilize around the current levels?
I think the entire industry is at a fairly early stage, and there's a lot of cost reduction that continues to happen every quarter as we speak. For us, three strong factors in the recent quarters have been first, favorable commodities, particularly with lithium-ion cells. Second, strong results from value engineering. Our engineering teams have had a stellar record over the last few years in cost reduction, and that's continued in recent months also. And third is very strong sales of our software accessories. So that continues to trend really favorably. We're very close to the vast majority of our customers, almost 80-90% of our customers continue to buy software, which is a very high gross margin product for us. And despite the launch of a more mass market product, that trend hasn't really flagged off at all. So these three factors have contributed to strong trends. In the coming quarters for us, we expect material margins could get better because we are moving to cheaper chemistry cells, LFP versus NMC in lithium ion. So those we expect will help with margins. Value engineering will continue, and by next year we'll have a new platform, the EL scooter platform, which is a cost effect, which is lower cost platform. So we expect that will also help with margins.
Actually joining in as well, you just spoke about the EL platform that is coming. In fact, August is the date that we should be watching out for. Just want to get your sense in terms of further market share gains, particularly to the new launches also, which are anticipated, if you can talk about that.
So if you see our market share performance in markets where we have had strong distribution and strong product fit, for example, in South India, it has been around the 20-22% market share mark for a while now. In places like Gujarat, in recent quarters, we have seen a phenomenal result. In fact, last month, if I'm not wrong, I think we were number 1 in the state of Gujarat. We believe there is an opportunity for us to recreate a performance very similar to what we have achieved in South India and Gujarat in many other parts of the country. And distribution would be the key enabling factor to do that this year. And the lower cost platform would be the big factor next year. I think we closed July with just under 16% market share, which seems to be a defensible position. And given the expanding distribution, we believe there is a few more points of gain that could be within sight in the coming quarters.
Tarun, just one question in terms of South India, because you have been number 1 in that market for a very long time, and you mentioned about store expansions in Middle India, as you call it. Specifically, those stores in South India, is it that the sales coming from there will be, give you higher gross margins because of lower discounts in those areas, or is it that the actual sale number is something that we should watch out for going forward for you?
Ather has never been, we've been never big fans of discounts right from day one. Even in the peak of discounting in our industry about 4 or 5 quarters ago, Ather stayed away from any real discount outside of 1-2% discount typically during festive, and that's going to be the strategy going ahead also. Obviously, newer markets will buy more lower end variants in the early years. But we have seen a very healthy. I think the number one direction for me here, from which I'm taking direction, is the sale of software. Our software sales across all geographies, across states, have been very, very strong, which I think is symbolic of the fact that Ather can sustain strong ASPs irrespective of the market. South, given that it's a large market, sold market, is obviously one of the more profitable markets for us. But I think every market for us is quite lucrative and is becoming quite lucrative with every passing quarter.
Well, Tarun, just one final question from my side. You have raised money in this IPO for some capex on R&D, but also putting up a new factory, which will likely come in Maharashtra. So your capacity utilization has been hovering somewhere around 40% before the IPO. Just want to understand, will you still keep the factory that you had in Hosur, because that was, of course, on lease? So will that all the production eventually in the medium term move to the new factory that you're setting up?
We've already acquired roughly under 100 acres in Chhatrapati Sambhajinagar in Maharashtra, which is where installation of a new factory will commence very shortly with the IPO proceeds. Currently, we intend to continue our production out of the Hosur facility in Tamil Nadu and also the new facility in Aurangabad. Utilization of a current factory is rising up really fast. As you saw in last quarter's performance, sales grew almost 100% over previous quarter. And at that time, we were at about 30-35% utilization. So you can see the trajectory. In fact, my number one worry right now is that would we hit peak capacity even before Aurangabad goes live? So team is running full steam ahead to make sure Aurangabad, Chhatrapati Sambhajinagar comes live by next year, so that we manage the demand really well.
Right. Lastly, Tarun, I know that this situation is evolving and it would be difficult for you to comment, but on rare earth magnet, I believe that Ather has actually done a very good job, and you have looked at alternative supplies and alternative materials also, and you're not expecting an impact of more than a 1 week production, right? So it's quite positive that has come actually, the statement, right?
I would read this as positive in the current climate. Our engineering and supply chain teams have spent an enormous amount of time over the last few months to find alternates. And I've been publicly saying in the recent comments that I do believe the near-term solution for our industry would be to move away from heavy rare earths into light rare earths, while continuing to look at non-magnet-free motors in the long term. So our teams are working furiously in that direction, and I remain optimistic that the impact of the crisis should be limited to this quarter.
Well, thank you, Tarun. Thank you for joining us and explaining everything very rightly about Ather Energy. With that, let's go across to our next guest for the show, Prashant Tapse, Senior Vice President, Research Analyst with Mehta Equities. Prashant, any views on Ather Energy? The quarter looked quite strong here.
Yes, when we compare two companies in the EV market, that is Ola and Ather. So Ather numbers were far better than what Ola has presented a few months back. So market is assuming to see which stock can do better. So in terms of managing their cost, managing their losses, I think Ather has done really well. And the new product of Rista, I think that has really done very well in a lot of South Indian market, as well as entering into the middle market of India. So I think with respect to their margin management, with respect to their expansion and the product quality, so again, not giving any discount, these are the strategies why I think the numbers were really good, and I think the valuations are again going premium to what Ola is. So overall, very positive on the stock with a target of at least 440 to 500 for next 12 months from the current levels.
Okay, so that's the view that we are having for Ather Energy. But before we go to our next small cap and stock in focus, let me talk about Adani Ports, which is flashing on the screen below. Now, if you look at the numbers, now they did beat estimates. In fact, revenue is up over 31%. In fact, margins also at around 60.2% as compared to an estimate of 59.3%. And net profits are about a 6.5% of a growth. If you look at the FY26 guidance given, the company expects about 16 to 22% of an increase in revenues to 36,000 to 38,000 crore. EBITDA is expected to see about a 10 to 16% of a growth to 21 to 22,000 crore. And net debt to EBITDA levels, they have maintained up to the levels of 2.5 times if we are seeing. In other key operational metrics also, if you look at the FY26 scenario, port cargo volume is expected to see about a 12 to 14% of an increase, while trucking revenue is expected to see about 3 to 4 times of a rise, and marine revenue is expected to see about a 2 times of a rise. So Adani Ports flashing on the screen below. But with that, let's go to our next stock in focus, which is Butterfly Gandhimathi. Now the stock is buzzing in trade today, and this is on the back of its first quarter results that we are looking at. Mahima joins in with more details.
Right, so overall it's been a good quarter for Butterfly Gandhimathi in terms of Q1 key highlights. There's been a steady quarter, and this is amidst weak industry growth trends that we are seeing. Earnings were lower than what the street was expecting. However, slower than expected revenue and margin growth is on account of the overall demand trends. While industry demand trends remain subdued, its focus is on margin turnaround, and that remains intact even in the commentary given by the management. In terms of the overall numbers, revenue was up 3%, EBITDA up around 50%. Margins came in at 7% versus that of 4.8%. Net profit has seen a good growth of around 150%. In terms of other highlights, the focus on premiumization of portfolio, pricing and cost optimization will lead to margin expansion is what the company believes, plus growth for mixers, grinders, pressure cookers with improved market share and traction across channels is being seen. And lastly, in terms of gross margins, they're healthy at 41% on pricing action and product mix. Lastly, in terms of the valuations, Crompton, which holds 75% in Butterfly Gandhimathi, is trading at a valuation of 28 times forward 27 estimates.
Right, Prashant, any views on Butterfly Gandhimathi? The number looked quite strong in this subdued environment.
Yes, despite having so high competitive industries, I think the numbers were really good. So that is why the stock is rewarding to the price action at 7% absolute. Again, margin improvement of almost like 100 to 150 basis point on a YoY basis is really appreciable. That is a surprise for the stock today. But again, valuation I think still little bit of expensive when we compared with the Crompton, which is holding the stock. Despite having a expensive valuation, I think one should have a very positive outlook on a long-term basis, at least for a 10 to 50% growth from the current levels.
Okay, so that's the view that we are seeing for this counter. But also let's address AGI Infra now. This is another counter which is buzzing in trade today, and this is on the back of a recent couple of updates that we are looking at. The latest one being that the board has approved a 1:5 of a stock split, and the record date would be decided after a nod from the shareholders' approval on the same. But this is not the first time that the board has declared a stock split. In fact, if you look at December 24, also they had announced a 1:2 of a stock split earlier as well. Nuvama also has a bullish note on this counter, wherein they've initiated a buy call in the month of July, and this is the target price of 1,448 that we are looking at. It believes that it is one of the organized real estate players having an edge in Punjab's micro markets over there, which is currently underserved. Other than that, they're seeing about a pre-sales CAGR growth of 13% in the years between FY26 to 30, and they have a strong launch pipeline which adds up to about 5,120 crore, considering it has a land bank of 9.8 million square feet. Along with that, even if you look at the cash flow positioning, they expect the surplus to continue at around 1,506 crore. This would be aided by strong collection growth going forward. Just a little bit about the company. It is a real estate developer in Punjab, is what we are seeing. It has delivered over 10 projects and has covered total saleable area of so far of 8.9 million square. So far, if you look at the stock's performance, it has seen about a 9% of an uptick in terms of this last one or odd month. So, and if you look at the last 6 months, it has seen about a 22% of an uptick. In terms of the pre-sales also, while FY23 and FY24, we have seen this number going down from 667 to 500 crore of pre-sales to 366 crore at the end of FY25. But as stated by the Nuvama note, they're bullish in terms of how the FY26 is going to shape up for the business. Net debt to equity also remains on the healthier side. From FY23, there were almost zero net debt to equity is what we are seeing, which is now moved upwards to the 0.4 times of level is what we are seeing. So this is the overall picture that we are building for this stock. But Prashant, let me come to you on AGI Infra. What's your view on this counter?
Despite being a small cap company with a market cap of almost 2,600, but valuations are still very expensive, which is trading almost 40 times the PE and even price to book valuations of almost 9 times. So which says because of its unique business model which is spread in Punjab, and there are no other branded players present in the location, so it is giving this kind of company a premium valuations. But again, for a fresh new entry in the stock, there should be a wait and watch approach going forward. But again, the sector looks really good, and if there are no branded players in the same location, this company will really have a very premium valuations going forward. So overall, the target would be around 250 for next 6 months.
Okay, so that's the target that we are seeing for AGI Infra. Do keep that one on your radar. The next stock in focus is GPT Infra Projects. Now, what we are seeing over here is the first quarter numbers being in focus. Now, they've seen about a 29% of an uptick in terms of where the revenue is concerned, while margins have seen about a decline to 11.8% as compared to 13.3%, while net profits saw about a 40% of a growth. Now, if you look at the revenue growth, that was mainly led by the infrastructure segment, and net profit also, despite margin contraction, net profit growth was aided by higher other income as well as lower finance costs. But higher construction cost in the quarter impacted the margins that we are looking at for GPT Infra Projects. The stock still buzzing in trade today. In fact, let's also see the order book positioning in the last 3 years or so. They have maintained their order book at the likes of 3,000 to 3,400 crore of a positioning. So that is what we are seeing. In terms of revenue mix also, it has about 97% of its revenue come from the infrastructure segment, while 3% of their revenue comes from concrete sleepers. So this is the overall picture that we are seeing for this counter. Prashant, your view on this?
Very positive. A small cap company which has almost 2.8x visibility in terms of order book when compared with the last year sales. Even valuations are very much decent, which is trading almost like 15 times the forward earnings, and even price to book value of almost 2.5 times. So infrastructure project, we are very much bullish, and I think a lot of growth can come into small cap and mid cap infrastructure projects, and GPT is doing really great in terms of, despite having a margin pressure, I think that can be a cyclical, but overall picture for next 1 year, I think GPT can deliver you at least 15-20% return on equity from the current levels.
Another stock that remains in focus is Deep Industries. The stock is up 20% in the last 5 trading sessions. Yesterday, the company reported its numbers. What are the key takeaways coming in? Let's get in Vansh with more details.
The stock is up on the back of the Q1 earnings that the stock has reported. Now the earnings have been strong. The EBITDA growth has been driven by the revenue, and the company has reported the highest ever revenue growth of 62%. How the margins have remained flat for the company, and the net profit is up by 75%. If we talk about the numbers, the revenue is up 62% at 200 odd crores versus 123 odd crores. EBITDA is up 61% at 82 odd crores versus 51 odd crores, and the margins are flat at 41%, and the net profit is up 59% at 59 odd crores versus 37 crores. If we talk about some of the recent order wins for the company received orders worth rupees 97 odd crores from Oil India on 2nd of August, and orders worth rupees 45 crores from Oil India on 26th of June. If we talk about the total order book for the company stands at 3,000 odd crores as of August 2025. And also, if we talk about some operational details, company received a 15-year contract worth rupees 1,400 odd crores from ONGC back in September 2024, and the ground level operations for the same has been started in April 2025. The company expects substantial EBITDA margins from this contract. So clearly the strong numbers with robust order book is what the market is penciling in for this counter.
Well, that was the view coming in on Deep Industries. Well, thank you, Prashant, for joining us and giving us your perspective on the stocks that we discussed. With that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 AM on August 6th, only on NDTV Profit.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Thanks for tuning in to India Market Close right here on NDTV Profit. And it's a day which is, you could argue, quiet and low. There's no other way to describe this. So it's been about 0.4% lower. Nifty Bank about 0.6, Nifty IT about 0.7. So there are those pockets which are correcting in trade. But if you look at the larger picture and if you put out the heat map, you will see that there are some which are trying to counter this as well. So in some sense, consumption has come back today. And let's pull up individual stocks. So between Titan, Trent, Mahindra and Mahindra, Hero MotoCorp and Maruti, you have some of the auto and consumption names. Let's pull up the names individually. And all of these seem to be doing well for themselves in the session today. No, can we just have the individual names? So let's get Titan, up about 2.5%. Let's get Trent. Let's get Maruti. Let's get Mahindra and Mahindra. Those are the names that are doing really well in trade on the upside. On the downside, like I said, IT and banking are correcting and Bank Nifty is down despite IndusInd Bank, which is a low weight, of course, being up about 1.8% or thereabouts. So Nifty Bank down about 0.65%. IndusInd doing okay, but off the highs of the day for sure. The broader end of the spectrum, a degree of losers really. So results impact being felt on Triveni Turbine. So that is down about 7% in trade. There is weakness in Bombay Stock Exchange or the BSE stock. And that's stemming from the fact that there is talk of how the weekly options expiry might change. There is one of the media outlets which has posted that story, as a result of which BSE is corrected quite strongly in the session today. Some weakness in stocks like Piramal Enterprises as well, which is down about 3.5%, as well as Swiggy, which is down about 3.5% in trade. On the gaining side, again, not too many gainers, and you know, this is despite the fact that the Nifty 100 is down just about 0.45%. So it's not that there are sharp losses at the broader end of the spectrum, but there are individual pockets of strength really. Azad Engineering on the results has done reasonably okay. The new kid on the block, which is Aditya Infotech, has actually done very well. Newgen Software is up about 11%. Godfrey Phillips is up about 10%. And fertilizers as a bucket is having a really good day in trade. Starting with Chambal, but not restricted to that, because fertilizers and chemicals, Travancore or Fact has done very well. Coromandel is up about 3%. So that bucket is doing rather well for itself. So that's the long and short of what's happening in the markets in the session today. What we will do is we'll try and get in the management of Escorts going in just moments from now. But before we get in the company, let's get in my colleague Puneet to talk about the numbers of Escorts and the trends thereof. Because Puneet, I think there is lots to be taken home from the results that Escorts has given. versus what the industry-wide picture has been like, right?
Well, definitely. And with Mahindra on one side steadily growing from last year, we've seen that expectations and build-up of escorts to have some kind of growth in this year. While quarter one might not show that, it's visible in sales but not visible in the financials yet. So I think that's one of the couple of points. Management is expecting that for the industry, they are anticipating high single-digit growth. Will they be able to actually grow higher than the industry or maintain that share? I think that will be one of the first things that we'll be, quizzing the management on. Apart from that, we'll also see that the margin guidance, management had said that 12 to 12.5% is something that they are banking on to maintain this year. That will be the other aspect apart from the larger industry as well. So we've seen, the share price largely flat. Let's also look at the one-year chart of escorts and you will know the story, because for Mahindra, of course, the comparison is that the passenger vehicle space has been doing well, but for escorts, the tractor segment has been weakening over the last year and there's been some market share loss there. That's going to be one of the key aspects, Neeraj, at least from this results as well. But, let's also welcome in Mr. Bharat Madan, who's the whole-time director and chief financial officer at Escorts Kubota. Mr. Madan, a very good afternoon to you and thanks so much for joining in. In terms of, the market and the industry, I just wanted to first start off with that. Are you anticipating to see that it will be a year where we'll have some high single-digit growth, because the base here was largely soft last year for the industry as a whole? What is your expectations for the industry for FY26 as well as for escorts?
Yeah, so I think if you look at our guidance for this year, we have given the guidance for the industry to grow from mid single digit, so it'll be anywhere between 5 to 7%. And the reason we said is that because if you look at the last few months, I think 8 to 10 months, the growth started coming in the rural side from September last year. So the second half of last year, obviously the base has already grown, but they grew 15% last year too. So obviously if you come to this second half of this year, the base will already be high. So first half we've seen the growth now in the first 4 months, we've seen 8-9% growth happening in the industry. But for the second half to sustain the similar growth will be a bit difficult. Now that's also one of the reasons. If you look at the growth skewness, it's been more towards the southern investment market, which has grown almost 19% year on year. Compared to that, the markets in the north and central India, where Escorts has a stronger brand and market share, have grown only 0.5%. So given that geographical mixed issue, so we obviously had some problem in the past few months. But now going forward, I think as you enter the second half, with the growth momentum in the south and western market will slightly slow down. We expect it will get balanced out. So overall, the industry may still show a growth of 5 to 7%, but yes, it will not be that skewed to the south and west as it was in the last 8 to 10 months.
Mr. Madan, when I think of what people are talking about when it comes to the positives for the quarter, this is Neeraj here, of course. Good afternoon. The third consecutive quarter of sustained margin improvement in the agri segment, and that is being looked up as well. I believe some parts of your commentary for the quarters ahead is looked up as well. To your mind, what was the one key positive that came out of this quarter? It could be something that has happened for 2-3 quarters and has continued in this quarter. And what was that one thing that you felt was the sore spot for your company in the quarter one?
If you look at the margin for the last quarter, the reasons for improvement are two. One, obviously, the price increase what we had taken in the first quarter from 1st of May, on the tractor space especially. And second was the softness which has been continuing in the commodity prices for last few quarters. So we've not seen the aggression. I think it's only in one of the 4 quarters last year we saw some hardening had happened. Otherwise, in 3 quarters last year, we had actually seen the commodity prices continue to soften. Same thing we saw in the first quarter also, where we got a benefit of the soft commodity prices, which leads to some improvement and the reduction in the material costs. Obviously, going forward, as we mentioned in our commentary also, there's been some pressure now we're seeing, because now we pass on the material cost increases with the lag of a quarter. The last quarter, we've seen some metal prices have hardened up, which will have some minor impact in the second quarter margin, which obviously we try to offset with the other cost reduction initiative. But that can have some temporary impact. The pricing benefit will mostly sustain on the balance of the year also. So I think from margin front, we had given a guidance it will be somewhere between 12 to 12.5%, and last quarter was 13.1%. So if I think the numbers continue to be the way they are, the way we expecting the industry to perform, we think we should be able to hold on to the margin level, and 12 to 12.5% will be improvement over last year still.
Oh, okay, so you're saying that you could well nudge the whole time or annual number of 13% as well if things hold up well. I mean, or 12.5 seems to be a decent fighting chance.
It will depend on the commodity prices.
Of course.
In the balance 2 quarters, obviously, if they remain soft, then it's possible you can also hit 13%.
Got it.
I won't be surprised.
And just one other question is, and that is when it comes to revenues and whether pricing in exports is better, because I think you've reaffirmed on the con call that you would do what 25% export growth in line with the industry standards. Would that be a fair assessment?
The industry will not grow 25% on export. Our exports have been higher because the base is very low. If you look at last quarter, we grown 80% on export because there's a very low base for the last year. But now we come to a situation where our average export every month is happening in the range of 500 to 600 tractors a month. And that number will continue. So that will virtually translate into 30%, 25% growth over last year export numbers. On the margin front, export obviously is better because the rupee has depreciated. So that's a benefit which is obviously been echoing. So today the export margins are even better than domestic margins.
Mr. Madan, you mentioned, at the start of this conversation that West as well as South markets have done well last year. And is that the larger reason that the base effect could play in for this year, that we could see, low to mid single digit growth in those markets? And is that the subsequent reason that you're seeing growth in the northern markets where you are, of course, one of the major players? Is that one of the key reasons that you're looking at?
So there are 2-3 reasons. One, obviously, the reason what you mentioned is the base for the last year is already high in those markets. So we don't expect the similar double-digit growth will happen in those markets going forward, especially in the second half. Second is the gaps which we had in our product portfolio, which are not really catering to the paddy market. So we are going to introduce new product portfolio now in September, October, which will be essentially meant for the paddy market. The entire wetland series which is getting launched. So if you look at the portfolio of products in the last few months, so in all the brands we introduced a new product now, which will actually filling the gap. So with this introduction of this wetland series, we'll have almost 85% to 90% product application coverage on a pan-India basis across both PowerTrack as well as FarmTrack brand. In Kubota brand, we're still some bit short. We are present in a very limited segment right now, but there the launches will happen maybe in the years coming forward. So in the next 2 years, we'll see more launches coming in that brand too.
And just one question from my side, Mr. Madan, you mentioned about launches. So the Pro Max is something that you've launched that's doing well. You mentioned Kubota, you are looking to fill some gaps. You've launched one of the key products there in the 41 to 50 horsepower category. So that point is also well taken. Your point on South as well as West is also taken. But apart from that, what is leading and giving you confidence of growth in the northern markets? Because in terms of the environment, nothing materially has changed. What are you currently seeing in the ground? And please correct me if I'm wrong on that aspect.
No, one, obviously the monsoon has been above average, so we've seen a very good distribution in the northern and central Indian market. So that's one trigger which will happen. So we'll have a very good Kharif harvest this year. And I think the variables on the rural side are positive as of now. So including the higher MSPs and the good purchasing power in the hands of the farmer. So that we feel should actually drive the demand going forward. So the only, I think, the headwind which we see and which is still not really clear is in the emission norm, changes, which was supposed to happen from 1st April 2026. Now, if that really gets implemented, then you can also see a lot of rebuying demand coming up in the last quarter. Even though the industry has represented to the government and to the ministry to defer those norms. So let's see, we're expecting more clarity on this to emerge, in this month in August. That's what the ministry has promised us.
And Mr. Madan, you've spoken that about the demand and the industry. I think from a growth standpoint, what is the current capacity utilization you are at? Because you're also looking to put up a new plant. I think it's coming in Uttar Pradesh. What is the current capacity utilization and what is the timeline? Would it be that by somewhere around the next 2 to 3 years we'll see the new plant come in and be ready as well?
So our current capacity is about 170,000 tractors, and we are doing about 120 to 125,000 tractors a year. So it's still about 70% utilization levels are there, and there's also a scope to further increase the existing capacity to take it to a level of 200,000 easily with some balancing, which we'll intend to do. So from demand perspective, capacity perspective, we don't see there'll be any issue in terms of meeting demand in the next 2, 3 or 4 years. Obviously, unless the demand really goes very, very high, then we can obviously look at expediting the whole setting up of the greenfield facility. Otherwise, we think the existing facility can very well address the requirement for next 2-3 years easily. And by the time we expect the greenfield facility should come up in the first phase.
And Mr. Madan, what's giving you confidence in terms of the export market? While the base effect is also very favorable for you, and the numbers slightly smaller. In which kind of markets are you currently selling? Is it that the African markets, or is it that you're also selling in developed markets? Because the competition is one of the key aspects in both those areas. So how are you trying to counter that, and what is currently on the ground that you're seeing in these export markets?
Major exports are happening to the European market, and it's a developed market essentially, and we are selling there mostly through quota network. So if you look at our last quarter export, also almost 52% exports were through the quota network, and that's where I think quota is quite strong, especially the compact tractor which are being exported from India. So there's a larger market in the developed countries for those compact markets, but most of the developed market are for higher horsepower segment. So the lower horsepower is not really very their strength. So that really gets scattered from the Indian markets. But we are also exporting to neighboring countries like SAARC nations or Sri Lanka. We are also exporting to Mexico, to South Africa. So those are also the countries which are, we are catering to right now. We export to almost 80 countries from India. So I think the exports will continue to do well. Yes, the last market I think will enter probably with the North American, which is essentially the US market. So that's still we don't have the portfolio ready for that market. And that's why we are banking on the greenfield project, where we can also start exporting to US market in the long run.
Got it. Mr. Madan, we wish you all the best for all of this and more. Thank you so much for taking the time out and speaking to us today.
Thank you very much.
That's Escorts Kubota with their view. Exports will grow well. Margin expansion has happened, but difficult to predict whether this will sustain. It could depend a lot, or it will depend a lot on commodity prices. They are hopeful that they might do about 13%, but remains to be seen. Okay, thank Puneet as well for joining in on this conversation. Really appreciate. Well, so that's with regards to Escorts. Now let's move on to other pieces. First, Global Spirits is in focus on the back of the Q1 earnings, which missed street estimates, and it has impacted the stock. Let's get in Mahima with more details on this one. Mahima.
Yes, so Global Spirits is in focus, and this is on the back of its earnings, and the earnings did disappoint the street because it was lower than what the street was expecting, both in terms of the top line growth as well as volume growth. The bulk, that is ethanol and ENA volumes, declined contrary to what was expected, and regular and other segments faced headwinds in Delhi as well as Haryana due to policy changes. Now, policy shift in Delhi affected the final month of the quarter is something that has impacted the top line overall as well. The revenue was up 9%, net profit was up 13%, EBITDA saw growth of around 20% and margins are at 9% versus that of 8%. In terms of other highlights, capacity utilization stood at around 81%, which is improved in fact this quarter. Bulk alcohol sales up 11%, and prestige and above category saw growth of around 36% quarter on quarter. In terms of state updates with regards to where Global Spirits stands, Delhi liquor policy extended till March 2026. Business will now be as usual there, and UP continues to progress well, and other states' performance is in line with what the expectations are. So this is everything with regards to where Global Spirits stands, and of course its Q1 earnings.
Okay, that's with regards to Global Spirits. The other thing, I mean, when we just think of what some of the consumer plays, and I don't know if I can call Godfrey Phillips a consumer play, but let's assume I can. In some sense, it's consumption. Godfrey Phillips has been that real big shining star today, up about 9.8%, and something that Mahima told us about earlier. I think the other pocket to keep in mind is what's happening with the fertilizer stocks. Chambal fertilizers up 6%. There is fact which is up about 3.5%. Off the highs of the day, I believe fertilizers and chemicals Travancore. Yes, marginally off the highs of the day, but still doing okay. And Coromandel too had a fairly decent outing. So mind you, the catch out here is the kind of volumes that some of these stocks are trading with. Okay, more news and updates. The Indian IT industry is undergoing a fundamental transformation driven by AI integration, reversing the growth and hiring surge seen during the COVID period. Recently, several companies have announced job cuts, citing AI-driven automation and efficiency as the key factors reshaping how IT companies scale and operate. Before we get in, Sumit Pokharna from Kotak Securities to discuss AI's future impact, as also maybe get in a word on telecom. Let's hear it from my colleague Hiral on how the AI wave is currently impacting this space.
Thank you so much. Clearly, it's AI which is hijacking the IT jobs market, and that's what is evident so far. So the key questions we're asking is AI actually killing employment and growth? That is one of the key things that you're looking at. Secondly, Indian IT industry is probably undergoing a structural shift post-AI, and because of which, if you talk about the hiring and growth surge that was seen during COVID, that has probably reversed as well. Now, the last thing is this AI-led efficiency and project efficiency that is changing how IT giants scale from here on or not. To look at all of this, let's quickly look at the hiring trends as well. The boom has been fizzling out in an AI era in India. If you talk about the pre-AI era, if you versus COVID to post-AI, TCS, which had added almost 70,000 plus employees, it boomed to almost 1.7 lakh employees between FY20 to 22, that's COVID area, and then from FY22 to 25, it's added only around 15,700 employees. Similar is the trend with Wipro as well, where you did see a boom to the tune of almost 60 to 61,000 employees in FY20 to 22 during COVID, and now in fact they've gone down and slipped by around 2,800 employees. And with regards to Infosys as well, which is known for its hiring trends, around 34,000 employees were added then. During COVID, around 85 to 86,000 employees were added in that phase. And now post-AI coming in, you just have a 9,500 kind of an addition that has come in. So this is clearly telling you that there has been a slow movement in terms of additions. And Infosys, which was one of the hirers, has been actually looking out. Now, similar trend has been seen even with global players like Accenture and Cognizant, which you can clearly see the kind of boom that came in during COVID. 2.3 lakh employees that were added during COVID for Accenture. Cognizant was around 62,800. The way it has come down, where in terms of Cognizant, it's actually reducing to the tune of almost 11,500 employees. So that's the trend that you're picking up in terms of where hiring goes. Now let's look at attrition. What has happened to attrition is that in pre-COVID period, attrition has inched higher, and that's the trend from 10.5 in FY17. If you look at the first period, it's gone up to 11.3 for a TCS. Similarly, from 15% for a Infosys, it's gone up to 20.4%, whereas for a Wipro, from 16.3, it's gone up to 17.6%, and this is in pre-COVID period. If you look at the COVID era as well, let's quickly look at that attrition profile. It actually went up again from 12.1 to 17.4. For Infosys, it's actually jumped to around 27.7 in FY22, and for Wipro, it's jumped to around 23.3 from a 14.7. And lastly, if you see in terms of the next attribute as well, maximum employee churn has come in FY23, whereas 24 and 25 have shown some signs of stability as well, and that's what is indicated in terms of where the numbers go. Very lastly, if you see in terms of the growth profile, Infosys and Wipro has the highest churn, that is indicating volatile workforces from here on. Next, if you see, the attrition has dropped by around 600 to 800 basis points across firms by FY25, which has mainly been aided by hiring freezes and cautious outlook. And if you talk about the revenue growth, that is also mirroring, because if you talk about the constant currency revenue growth, that has been slowing down from FY17 to 19. Pretty much, I mean, that range has been increasing for companies. But if you see the COVID area, that's the time you've started to see some bit of softness. It was only FY22 where all the companies saw a good boom. But post that, the moment AI has come in, if you talk about the growth trajectory, you can see the charts clearly dwindling. So that's the kind of trend that you're picking up, where you're saying that with AI coming in, your workforce is going down, but growth is also being impacted.
Okay. Hiral, thanks. That's comprehensive. And let's get in Sumit Pokharna. He's VP of Fundamental Research at Kotak Securities, joins us on the show to talk about how he thinks about this as well. Sumit, good having you. Thanks for joining in. And this becomes the key talking point simply because of the kind of corrective moves that we've seen in the IT index, right? Over the last 1 month, what's it about over 10%, sulking in trade today as well. Somebody made a point recently, Sumit, that a shrinking workforce need not mean shrinking business for Indian IT. And they could recoup this even with a lower workforce because of automation. Could that be true?
Thanks for inviting me. What you said is right, because every company or client is looking for productivity gains right now, and AI is helping them. All companies are open to try AI to improve their productivity. But still, we are at the exploration stage for the time being, so far AI is concerned. We have not yet, none of the Indian IT companies have got a big order purely based on AI. It's just supplementing the existing work. So a lot of efficiency, accuracy, hallucinations, all those things is yet to be clarified whether AI can take care of that. So as I mentioned earlier, we are at the exploration stage. Now coming to the attrition, hiring trends and all that, I will give a bigger weightage for this to be two factors. First, the macro environment is not that conducive. Why is it so? We all know because of tariff war. Plus, the discretionary demand is not picking up because of the multiple reasons. Now, when we are comparing it with COVID period, I believe it's not a right apple-to-apple comparison because during COVID period, the demand surged like anything. We should not expect that to continue for very long. Secondly, the hiring happened very high during that time period. So law of averages playing out at this point in time. So what we are seeing is that macro environment is not conducive, which is impacting the IT more, just not AI, because we have not seen any major order coming to any Indian IT service company purely based on AI.
That's true. That's true. But so therefore, would you believe? So here's my question again. I'm just trying to understand this. That let's assume over the next 12 months, we see a number of IT companies losing some of the legacy business, losing some of the workforce, but winning AI orders, becoming enablers to AI. Could that impact the multiples and thereby the prices for the better or for the worse as they move in this transition period?
Right. So at this point of view, look, valuations have already corrected a lot.
Okay.
So if you look at a free cash flow yield and other things, I think large caps are available. Most of the large caps are available at very attractive prices. But macros, we need to still wait and watch how the tariff war continues, because you just need to understand how the client is thinking at this point in time. He is delaying his decision making to spend on IT because of uncertainty. Nobody likes uncertainty. Today he commits a big project and start investing or doing capex on IT, but suddenly macro changes, government policy changes that may impact him. So he is also taking its own time or deferring his major capex. He is just focusing on core modernization rather than looking at discretionary spending and all that. So definitely there is demand for new technologies like cloud, AI and ML. But all engines of the system are not working at this point. So that is why we are seeing subdued growth in most of the IT companies. As you have been continuously highlighting about the lower employment and all that, I would like to highlight that Indian IT companies have hired in Q1 almost 12,000 employees, roughly around. I am talking about top tier 1 companies. So if you compare it with the last quarter of this previous year, then we have seen a decline there. So there's some addition is happening. So what has happened at this point in time, there is a change. There is in the revenue model. Earlier we used to project based on the number of employees and you can project the revenue. But that model is not working at this point in time because everybody needs to upskill. If you're not upskilling, you cannot meet the current demands. And then there is a pressure of layoffs. So it's a mismatch between the demand which is there and the supply. If employees are upgrading themselves or upskilling them, then there is a lot of demand for, if you know generative AI, you know latest technologies.
Got it. Okay. Sumit, out of time completely because you have to hit a commercial break, but thank you for joining us with these insights. Really appreciate your time.
Thank you.
Well, it's time for a quick break, but as we leave you, as we take that break rather, an important word from Ashwini Agarwal, founder and partner at Demeter Advisors. Here's what he had to say about the prevalence of market uncertainty and how difficult it is to measure risk reward. Listen in, we'll be right back.
There are a lot of events which are shaping up the market. So on the downside, you have a very weak earnings season playing through. You have, all the noise on the tariffs that is roiling the market sentiment. And lastly, you have a huge amount of paper supply via the IPO and offers for sale that are going on a day-to-day basis. So, there's really all the three factors hitting the market. And on the upside, I mean, one hopes that, what RBI has done by way of improving the liquidity, and there is surplus liquidity of 4 lakh crores in the banking system, what they've done on interest rates, and apparently another 25 basis points might be on the annual. That might help demand with a lag as the year progresses, but that's just a hope. I mean, as of now, there are no signs that consumer demand is anything to write home about. So yes, it's a very, very challenging situation, both on the downside and on the upside. My sense is that, the correction that we have seen in the last 3 to 4 weeks probably limits downside to not more than 5% from here, but I'm just kind of sticking my neck out, and it could be a lot more. Who knows? Depends a lot on how the US does from here.
So Ashwini, okay, that's an interesting one. So are you saying that if the US, you're saying the US as a nation, what it does to tariffs, yes, or what do US markets do per se?
How do the US economic data points read out, and how does the US market react to that? Because we are starting to see some weakness in the US economy. The markets have been very, very strong till now, but will this continue or not is the real question.
Ashwini, hi, Tamanna here.
Morning, Tamanna.
Do you think that there is a bit of a thick skin that Indian markets now have to all of the Trumpness coming out every morning? Sorry, I'm trying to find more words to describe what we're seeing. Or do you think that we're underplaying the impact of what he's saying? When we had a commentary this morning from one of our experts saying that his bark is worse than his bite. I mean, can we really safely say that?
I have no idea. I mean, I wouldn't want to hazard a guess as to what happens on the policy front, whether in the US or here. But what I would say is that, exports to the US at the end of the day are 2% of the GDP. Even if you take a big haircut there, I mean, does it really sink India or Indian GDP? The answer is probably not. Yes, from a headline perspective and from an export earnings perspective, it could be a little bit of a challenging period. But, we'll have to weather the storm. I mean, it's up to the Indian policymakers to decide, and for the US to decide what each country will do. We as market participants will have to just kind of muddle through. That's how I see it at this point. So the policy front, I'm not so bothered about, to be honest with you. I think the real question which I'm struggling with is that, why is demand in India so weak? I mean, we've had now, 6 months of concerted push from the government on government capex. We've had better liquidity. We've had better rates. If you read through the commentaries from the banks and from the lenders, they seem to be positive about asset quality, especially in the microfinance space. In a quarter or two, they expect things to turn around quite smartly, but the market doesn't seem to buy that narrative. And all indications of demand are very soft. And to me, that is a real worry.
The world has changed. since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Back with India Market Close right here on NDTV Profit. It's slightly beyond the time of the show when we do this, but I'm sure a lot of you are waiting for that. So let's get that. Actually, just before I get in sorry, I know. Be quiet. Before we talk about what's being heard on the street, I just need to mark MTAR Tech simply because the numbers are looking very, very robust. So just look at those numbers. EBITDA up 71% at 28.3 crores. Margins at 18.1 versus 12.9. So something's gone right for MTAR Tech. In fact, a lot of things seem to have gone right for that stock because it's really doing well. It's really done well in the quarter as well. 10.8 versus 4.4. Maybe we'll try and get the management as well in a bit. But let's now get in Somit to talk about what is it that he's hearing in the dealing rooms. Somit, what's the chatter today?
Well, multiple stocks actually are in focus. Firstly, it's Pidilite and Godrej Consumer, where dealers are indicating that there are large sell flows on large HNI desk ahead of the Q1 numbers. For Oracle Finance and SRF, dealers are indicating that there are buy flows on FI desk at lower levels in trade today. For Cummins, dealers indicate that there are buy flows at lower levels. Now, do remember that Cummins, a parent company, the global company, will be reporting its numbers today post-market, and Cummins India will report its numbers on August 7th. So keep an eye out for Cummins as well. For Onum India, there are buy flows on DI desk in trade today, and dealers are also indicating that the Q1 numbers are expected to be strong for Onum India. That stock is up around 3.5% in trade. And lastly, multiple cash stocks that remain in focus: TVZ, Sheela Foam and EPAC Durables. All these three stocks in cash segment dealers are indicating that there are buy flows on HNI and PMS desk in trade today. So keep an eye out for these three counters as well.
Sorry, did you mention PI Industries or did you mention Pidilite?
PI Industries.
PI Industries.
Yes.
Okay, so that's the one name to keep an eye out for. Certainly. Okay, down about 0.74% and sell flows on large HNI desks ahead of the Q1 numbers on both PI as well as Godrej Consumer. Sumit, thanks so much for that. So those are some names to keep an eye out for. Actually, Kush Bora and Nirav Ashar are with us, and let me ask Kush about some of the stocks that Sumit pointed out before we talk about the market-wide performance. Kush, sell flows being seen on PI Industries for sure, a few other names as well, GCPL too maybe, but PI in particular, or any of the other stocks that you heard Somit speak about?
Hi, Neeraj. First, very good afternoon. Hi, Neeraj. No, very clearly, PI Industries, was actually showing an uptrend. There was a breakout that was attempted, but that's given way. Volumes aren't particularly high, so I'll take heart from that. Stock also taking support near the 4050-4000 zone, also the 50-day moving average. So I might not create fresh positions until 4050, that support zone is broken. But yes, I mean, if you had a position, you might want to book, take profits off, or at least, if you initiated at those levels, you might want to exit at a trailing stop loss. Godrej Industries fairly muted sideways, so nothing to write home about. What I'm excited about are two stocks, from what Somit mentioned. One of them is Cummins. We have a call on this. This is seeing a very positive consolidation, 20-day moving average being respected, although intraday a couple of times we tipped below that, but for the most part that's being respected. And the other one is TBZ. Good volumes, good price action for the last 3 sessions, relative strength apparent. So I think, this is a good stock, could see a higher level of 221 and 230 as well. Support zones near about 206 levels of risk reward ratio. Despite the kind of up move, still favorable.
Before we go to Nirav, Kush, your market view, and could you also give us your stock recommendations now that you want to point out?
Sure. So I think what's apparent in the very near term is that the ongoing pressure on the upside, that's apparent. We'll have rebounds along the way, like we did yesterday. But even then, if you see, that wasn't able to take out the previous day's high, which is the Friday's high in that case. So momentum really is missing. I think, despite the kind of weak structure that the market is in right now, consolidating with a negative bias, I don't think short position makes risk reward ratio sense right now, because a strong support zone near the 24,400 to 24,500. But on the upside, you could have levels of 24,800 and 25,000 being tested. So yes, wait for rebounds rather than creating any fresh short positions, or maybe if it's just far too volatile, not a bad idea to just sit out for some days and see what the market does. So that's the broad view on the Nifty. Bank Nifty is relatively weak. 55,000 support should be held. If not, then you could see another 400 to 500 points of downside on Bank Nifty. As far as stock specific action goes, 2 calls, both of them on the long side. One of them is Fortis Healthcare. We did discuss this a couple of sessions ago for the first target of 861. That's been hit. So, someone can hold or maybe even enter a fresh, given the kind of price and volume action you're seeing, for targets of 886 and 905. Keep a stop loss or trailing stop loss, as the case may be, around the 855 mark. In the cash segment, a positional bet, more of a reiteration, is Sham Metallics, something that we discussed, I think, about 4 sessions ago. The stock is doing very well. It's consolidating. But if you see, the volume action on the downside has been very limited. So yes, that consolidation continues. As and when the market stabilizes, this could see a big pop on the upside. So 1018 and 1069 are your targets on the upside. 920 is where you place that stop loss.
Okay. So Sham Metallics, again, set of numbers which the street has not minded too much. Also on Kush's list. Neerav, very good afternoon to you. How are you looking at some of the defense pack and MTAR specifically, since the numbers have just come in?
Yeah, good afternoon, and thank you for the invite. The defense stocks, I think the initial pack was some amount of disappointment as far as the PSU ship makers, etc. were concerned. But I think the focus has been more on companies like say Solar Industries, Bharat Forge, and today, of course, MTAR Technologies, which has declared a very strong set of numbers. We've seen stable numbers coming in from Bharat Electronics, but I think the stock has not reacted that much to the numbers because it's all there in the price at this point of time. So I think one will have to be very selective as far as the defense stocks are concerned. And I think we like in this particular space, we like Solar Industries, Bharat Forge, Data Patterns, MTAR Technologies, etc.
Okay. Let me just go across to Somit for a pack that has seen some underperformance today. Somit, OMC is under pressure, and this was bound to happen after all the rhetoric coming in from the United States on India's crude purchases from Russia, etc.
Well, yes, oil marketing companies have been under pressure not only today but at least for the last 15 trading sessions. If you see, Indian Oil Corporation, BPCL and HPCL have declined anywhere between 8 to 11%. Obviously, the potential ban on Russian crude is one of the reasons, but there are several other reasons as well. Firstly, if you look at the Singapore gross refining margin, they have come down from $5 average that we had seen in the first quarter to close to now $3.2 per barrel, and this is owing to uncertainty regarding the demand and rising global inventories, which have put pressure on the Singapore gross refining margin, which is the Asian benchmark for refining margin. Apart from that, if you look at the marketing segment, which is the other segment of oil marketing companies, there also the margins have been under pressure. For Q1, it averaged around 8 to 10 rupees per litre, and right now they're averaging around 5 rupees per litre, and this is owing to the adverse movement that we have seen in product prices and also because of the adverse movement that we have seen in the foreign exchange rate. Apart from that, the performance or the Q1 numbers from its peer companies have also been quite weak. Reliance Industries a 5% Q-on-Q drop in its O2C segment, that is the oil to chemical segment EBITDA. MRPL's GRMs declined by nearly 19%, while Chennai Petro's GRMs, that is gross refining margin, declined by around 49% on a YOY basis, and this has also been putting pressure on the share prices of the oil marketing companies. And lastly is the uncertainty around the Russian crude. Now there are renewed sanctions or potential sanctions that would come in from US side on Russian crude, and this could increase the cost of crude for the oil marketing companies by around $1 per barrel, and this could have an impact on the financials. So that is another reason why oil marketing companies have been under pressure. But what are the key triggers or key positives going forward for the oil marketing companies? Firstly is the LPG compensation. There are multiple reports which suggest that government could pay at least a part of this LPG subsidy soon. In fact, we spoke to the IOCL management and is expecting this part of subsidy to come in the second quarter of FY26. So that could be one of the key positives or key triggers for the oil marketing companies. Apart from that, if you look at the marketing margins, although they are lower on a sequential basis, but the current margin that the oil marketing companies are earning of around 5 rupees per litre, it's way higher than what they used to earn earlier over FY18 to FY25. If you look at the average, it stood at close to 1.9 rupees per litre, and currently they are earning around 5 rupees per litre on the marketing side. And even if you look at the Russian ban, it's quite ambiguous. There's no clarity on this because the government statement yesterday clearly hinted that there is no curb on the oil marketing companies to procure any crude from Russia. So even if they go ahead and procure the crude, the discount could continue for the oil marketing companies. Now if you look at the valuations of them, they're largely at par or at discount. For Indian Oil Corporation, BPCL, they are trading at par with their 2-year average valuations, while HPCL is trading at a discount to this 2-year average valuation of around 7.2 times. And from the current levels, if you look at the return potential for these oil marketing companies, for Indian Oil Corporation it stands at around 13%, for BPCL at 17%, and for HPCL at around 12% from current levels.
Okay. Thank you for that, Somit. OMCs to watch out for. Meanwhile, so are earnings, and Berger Paints, interesting to see because crude prices does impact profitability for Berger Paints as well. Their numbers are out right now. Profits down 11% for the quarter at 315 crores. Meanwhile, revenues have gone up 3.6% in this quarter. EBITDA up 1.1%. Margins have come down slightly from 16.9 to 16.5%. You saw a bit of a drop in that stock, but then some recovery coming in there as well. You've seen numbers from Tega in the last few minutes, and Castrol has also reported, so keep an eye on all of those as well. Tega doesn't seem to be a very strong set of numbers at all from the initial kind of response that we've seen. Revenues up 4.7% for the quarter. For Tega Industries is what we can see. Profits down about 4%. Castrol as well, if I could just quickly address Castrol and look at what's happening there, because the stock seems to have responded quite positively to Castrol numbers. And we'll try and get that on the screen for you. There you have on your screen, actually, Tega's margins have dropped a fair bit from 18.9 to 15.6%. That's why the pain point there. But here you have Castrol with 4.5% up on the net profit figure. That's why you saw a spike on that stock at 244 crores. Revenues up 5.3% at 1497 for the quarter. So that stock about 1% up. But even as we're talking about numbers, in Keystone has just dropped 35.3% drop in revenues for Keystone. Profits down 43.8%. When reality is having a tough day, especially ahead of the monetary policy outcome tomorrow. It's not expected to be anything but a pause, but you're seeing some pressure there in all interest rate sensitives, and Anyway, Keystone's numbers don't seem to have helped the cause. Stock about 3% down. Now, in a press statement, Adani Port's whole-time director Ashwini Gupta has talked about the company's first quarter earnings and what worked for the company. Listening to what he had to say.
APSEZ's stellar performance in Q1 FY26 underscores our commitment to reinforce our integrated transport utility proposition. APSEZ revenue grew by 21% to rupees 9,126 crore, driven by over twofold growth in our logistics and marine businesses, which are both core to our integrated offering. We also delivered record high EBITDA and PAT at rupees 5,495 crore and rupees 3,311 crore respectively. S&P Global has revised APSEZ ratings outlook to positive from negative. Ports business played a crucial role with 11% growth in overall cargo volume. The domestic ports handled 6% higher cargo and increased market share to 27.8% compared to 27.2% in Q1 FY25. Our international ports also contributed significantly with 22% revenue growth and an improvement in EBITDA margin to 21% from 13% last year. Logistics doubled its revenue to rupees 1,169 crore, driven by accelerated customer onboarding and volume ramp-up in trucking and recently launched international freight network services. Marine business saw a strong 2.9 times increase in revenue to rupees 541 crore, propelled by our diverse fleet of 118 vessels. Our focus on expanding port capacity continues to be unwavering. We commence operations at Colombo Port and a new export berth at Dhamra. We keep our financial discipline with net debt to EBITDA ratio of 1.8x. In addition, as part of our long-term capital management plan, we successfully increased the average debt maturity from 4.3 years to 5.2 years and reduced the yield across all bond issuances by up to 116 points. Technology, talent, and sustainability are the backbone of our business. We have integrated advanced technology across our operations, including the fully automated port in Vizhinjam and Colombo. The AI-driven strategic command center and digitized trucking management solution is enabling our business to perform better and better. Our commitment to nurturing talent is evident with the commencement of skill building centers at Mundra and Krishnapatnam, aimed at recruiting the youth and equipping them with industry-relevant skills tailored to our requirements. Our sustainability initiatives are reflected in our best-in-class ESG ratings. We have implemented multiple green initiatives, including deployment of electric-powered mobile harbor cranes and zero base to landfill in 12 ports. The remarkable growth across the three engines of our integrated transport utility proposition, ports, logistics, and marine, positions us strongly for sustainable growth and ensures we remain within our FY26 guidance range. I extend my heartfelt gratitude to all our stakeholders, especially our customers and employees, whose unwavering support has been instrumental in the journey. Thank you.
Okay, that was a statement coming in from Adani Ports. And let's talk about the stock of the day. Godfrey Phillips undoubtedly is the stock in focus following a quarter where revenue from cigarettes and tobacco served as key growth drivers. Anushi coming in for what has worked for Godfrey Phillips.
Well, thank you for that, Tamanna. So strong kind of moves that we are looking at for Godfrey Phillips in trade today, and this is on account of its first quarter results. Let us first walk through the key highlights as to why it deserves that place of stock of the day. Firstly, if you are looking at PAT, that is not comparable YOY because of the exceptional losses, but adjusted PAT did see about a 25% of an uptick which is there. In fact, if you look at the numbers, it's the volume which has led to this kind of an uptick in terms of the growth that we are looking at this in the top line. There were some exceptional losses also the first quarter, and this is the closure of the retail business that we are looking at. In fact, if you talk about the verticals, it's the cigarette and the tobacco revenue, which saw about a 33% of an increase on a year-on-year basis. While if you look at the profit of these two verticals, of these two segments, which are the cigarette and tobacco, that's about a 28% of an uptick on a year-on-year basis. Other than that, they have also approved a 2:1 of a bonus issue, and this will be on the record date for the same would be on September of 16. But quickly walking through the numbers, if we are seeing revenue, firstly, we are looking at a growth of about 36.5% to 1,486 crore in the quarter. Margins also, if we see EBITDA and the margins, both of these numbers, now EBITDA was up over 25.1% to 338 crore. Margins have they've contracted to 22.7% as compared to 24.8%, and net profit, however, did see about a 56% of an increase. In terms of stock performance also, if you look at the company now in the last 1 month or so, it has seen about 15% of gain so far, while for the 6-month period, it has recorded about more than 100% of an uptick in terms of where the share price is concerned. So strong up moves that we've seen in the last 6 months or so, and this is why the stock is in focus on the back of its first quarter results. Stock of the day.
Okay, Godfrey Phillips, stock of the day and going strong. Nirav, do you see the momentum in this sustaining, or do you think that the numbers were so good to get this kind of a response?
Well, yes, because I think both, I think ITC as well as Godfrey Phillips, both have declared good numbers as far as the cigarette business is concerned and tobacco volumes are concerned. And I think they should continue to perform better going forward.
What about you, Kush? Godfrey Phillips, is it something that you would look at? And let me throw in an ITC while we're at it.
ITC, I would avoid for now. Lack of momentum, consolidation on for last 8 weeks or so, not going anywhere. On the upside, 425 is a resistance. On the downside, 405 thereabouts, support. So this is something that I would avoid for now, at least from a trading perspective. Godfrey Phillips, on the other hand, very, very beautiful structure. And the journey for this one started way before the market, which is March, April thereabouts, where the entire market rebounded. This one has a rising trend line support. Right from this calendar year start, which is January. Even now, if you see, for the last few weeks when the market is volatile, this one's actually held on to that, rebounded quite smartly, had a minor resistance around the 9,600 mark. That's been taken out on the back of good volumes. I think more upsides on the card. So if I did have a position, I would hold. If not, I wouldn't really mind creating fresh positions, even now for upsides of 10,200 and 10,500. Keep a stop loss near the 9,500 mark. So good moves on this one and have been ongoing for the last 6 to 7 months.
Okay, we'll take a very quick break. Thank you so much, Kush, for joining us on this leg of the show. Nirav Asher stays on. We'll take a short break. We come back with all the buzzing stocks, including the BTST ideas for this afternoon. Stay tuned.
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
All right, welcome back. Statement coming in from Mr. Ashok Hinduja, Chairman of IndusInd International Holdings Limited. Remember when all the mess was happening with IndusInd Bank, we had heard from Mr. Hinduja. He has now put out a statement saying, on behalf of the IIHL board and global shareholders, I compliment the regulator for the expeditious approval of the appointment of Rajiv Anand as the MD and CEO of IndusInd Bank. As a promoter of the bank, we offer full support and wish him all the success. We trust that with his vast experience, he will be able to realize the full potential of this strong private bank franchise. We greatly appreciate the role that the board and the executive committee played in steering the bank through this challenging period. I just want to pull up the stock for a second. So, very different approach this time round from the promoters compared to when the whole crisis actually blew up. And if you recall that, Neeraj, because we were on top of that story, Mr. Hinduja had a press conference, fielded a lot of questions over there, and then came back and said that, listen, I'm hands off. We're the promoters, but there are the shareholders, and this is under RBI's oversight. And I think that's what's given confidence as well, that it's under RBI's oversight at the end of the day.
Yes, it is. And well, they've gotten a gentleman who's got a stellar track record, great reputation, and arguably a gentleman who can steer the bank back to its, if you can call them glory days. And a lot of people that we've spoken to through the day, Tamanna, and from different walks of the BFSI sphere, have expressed confidence in this move for IndusInd Bank.
Yeah, including former colleagues who are saying he's a people's person. One stock which has been hit quite badly because of the news coming in is BSE. Now here is why BSE is in pain today, and you're seeing that stock 5.5% down nearly. SEBI is mulling ways to reduce volumes in options trading is what we're learning. The SEBI committee meet on August 19th, will discuss key details on reducing volumes. One of those ways could be to remove weekly expiries from the equation. Charu joining us with more details.
Hi, so the market regulator, Securities and Exchange Board of India, is currently weighing, what they can do to basically reduce the volume in the option trading segment. And currently they think that the weekly expiries are one of the reasons that the volatility and the volumes in this segment is so high. So in order to reduce this volume, they are thinking about doing away with weekly expiries and, replacing them with monthly or fortnightly expiries. Apart from that, they are also considering encouraging activity in the cash market segment, which would eventually, hopefully lead to reduction in the volumes in the option trading segment. And in order to do that, they are going to be suggesting ways to Finance Ministry. Firstly, they are going to be, recommending a reduction in the security transaction tax. Apart from that, they are also mulling if they can reduce the margin requirements in this segment. So these developments are not set in stone. They are also going to be discussed within the regulator and outside in a consultative process. And a SMAC committee meeting is also slated to take place on August 19th. SMAC is the Secondary Marketary Advisory Committee, and let's see what is finalized and how the developments roll out further.
And certainly, Charu, thanks for that, but it certainly had its impact today on BSE for sure. And Nirav, just the trend that we're seeing, right, that there is a move, a concerted move, and Gaurav Bisa Johnson, of course, welcome Gaurav, good having you as well. I wonder if the stressful days for you go down because of this, but Nirav, first to you fundamentally, right, just the trend of trying to reduce this large trading days, I'm not saying that's the goal or that's the motive, but that's the impact, right? Large trading days get reduced. Does this take the sheen off the earnings trajectory for companies in this space? It could be a BSE or an NSE, it could be brokers as well, which have this a large trading model. What do you think? And what's your view there, therefore, on those stocks?
Yes, well, on the face of it, it does seem that it does take away the shine and the sparkle which is there, and the thrills which come with this all this volatility in the markets. But I think SEBI's intent is to very clear to curb this volatility, and I think it is more kind of a transition phase. Because if you are going to eliminate the weekly expiries, naturally you will be still continuing with the fortnightly, monthly expiries, etc. So I think all the action is likely to shift over there. So I think whatever happens in the near term, it's going to be a negative, but hopefully things should settle.
Okay, want to quickly get Gaurav's view on this. Gaurav, view on BSE, what happens if weekly expiries go, and then of course we'll get your take on the markets.
See, a lot of the aura around expiries, that has increased manifolds in last, I would say, a couple of years at least, and people have been shifting, between, or rather juggling between the expiries on the Nifty and NSE and BSE. And we have seen incremental activity happening on our desk as well. So yes, there's going to be, as Niro pointed out, there's going to be some lost shine over there. But at the end of the day, I think maturity is what even our regulators are planning to have in markets, and I think that is going to be taking a step in the right direction. Ultimately, I think at the end of the day, the lesser the amount of volatility is, it is good for all the stakeholders, as a broker, as an analyst, or as a trader. At the end of the day, I think it's the right step in the right direction.
And what about the BSE stock?
So if you look at the structure, we have seen the stock correcting continuously. It had a small triangle breakdown happening, and since then it has been consistently making lower tops, lower bottom. The next set of supports would be around 2,360, right at these same levels. But close below these levels can result in fresh swing breakdowns. The last swing breakdown resulted in a 5 to 7% fall. So let us see if that happens. If that happens, I think at the current juncture, we are seeing RSI divergence. If we have a 4-5% fall coming in BSE, but the RSI does not fall, I think then it will be a case of a bottomer process being started, and then stock again starts upward trajectory. So I think it's more to do with time correction going forward. I don't envisage a very significant price correction in BSE at the current juncture.
Okay, let's get your take on the indices, Gaurav, and we'll just pull up the Nifty intraday as we're asking Gaurav that question, and he brings in his details as well. Strength is just not being seen. I mean, in a range today for the Nifty, but not managing to hold out. What is the position that you would take right now?
See, at the end of the day, structure is what matters the most. I'm not denying the fact that it's a positive development. But if you look at for major part of 2025, the stock has been trading in a range. And till that time, we don't see the stock coming out of range. The positive as well as the negative factors will have very little strength to hold on to. So in my opinion, I would not be too keen in trading the stock. There are multiple hurdles ahead, and the most immediate would be around 895. So if I were to buy, I would to bet my money, I would buy only once it goes above 895, in which case one can play for 15-20% upside in a jiffy. Till the time when it does not happen, I think it's got to do more with time correction. I would skip the stock at the current levels.
Okay. Okay. Now, Gaurav, let's get your stock recommendations as well before we move further.
So the first stock would be buy on TVS Motors. So a very nice structural breakout has been seen coming out of consolidation, a couple handle pattern formation. In my opinion, stocks which have been outperformers, once the market finds its legs, they are the ones that will move up faster and quicker. So on that premise, TVS Motor can be bought for 3,100. The targets can be much higher than the ones that mentioned. But on a very immediate basis, 3,100 can be the target, stop loss of 2,900. Second would be buy on JSW Energy. Again, a stock which has been trading in a range. So if you plot Donchian channels or other even Bollinger Bands, you will see that there's an expansion of the band, meaning that the breakout has been seen. Volume participation is on the positive side. One can play for 570, keeping the stop loss at 520.
Okay, stay on with us, Gaurav. You talked about TVS Motors. Let's talk a bit about Tata Motors. Tata Motors is our candidate for bull versus bear. It's named PB Balaji as the new JLR CEO after Adrian Martel stepped down, and you saw a bit of a spike in the stock in the morning. Hasn't been able to stay on though. Giving us both sides of the story is Puneet.
Well, thank you for that. That's definitely the bull case for today. PB Balaji, veteran at Tata Motors, as well as within the automotive space as well, and hence this is not just a key appointment, but he's also the first Indian CEO of the Jaguar and Land Rover brand, and it's going to be one of the key ones to watch out for, how the turnaround finally happens with the business. While financially, over the last 5 to 6 years, they have been going strength to strength. EBITDA margins are now 16% for Jaguar and Land Rover, from roughly about 6 to 8% that the company used to do about 6 years ago. Debt has also come down, but the growth has largely been absent, and with new models, that will be one of the key ones to watch out for. The biggest criticism of the brand has come in from a recent news flow what the company has been doing of rebranding of the Jaguar brand. It's not been taken well at all across mediums. We also saw on Truth Social a post coming in from Donald Trump on mentioning his views on this as well. So it's definitely not been taken well in terms of the new image of the Jaguar brand, and that will be one of the key ones as a key first task itself for PB Balaji when he joins in November. The second bull and bear case is, of course, the stability and the continuation into a smoother transition for Jaguar and Land Rover brand. It's been marred by geopolitical issues amongst others. So PB Balaji, being a veteran at both Tata Motors and the auto industry for the last 3 decades, will definitely put some solace there as well. Global uncertainties both in the US and the Europe has been hampering volumes. For Jaguar and Land Rover, the volumes have stayed stagnant at 4 lakh units a year for the last 7 financial years now. So, and that's including FY25, and FY26 is expected to be even lower than the last year. So the volume ramp up will be gradual opposed the revamp of both the brands. But definitely the uncertainty is hampering there because of geopolitical tensions. The third key case, he's also, I mentioned the first Indian CEO, but policies in the US have been changing rather rapidly, with current scenario being that the trade deals might help JLR, and we'll get some more perspective on the 8th of August when the company release their results. Finally, the valuations. For JLR specifically, they do trade on EV to EBITDA basis, and it's down 40% over the last couple of years. It's now roughly trading between 1.5 to 2 times EV EBITDA. used to trade at 3.5 to 4 times EV EBITDA. So definitely the valuations for the JLR business specifically is what we're talking about is favorable compared to the historical averages. But the growth outlook as well as the new EV for the Range Rover next year will be one of the key ones to watch out for. So overall, a huge appointment, a big win for shareholders definitely, and I think that's the trajectory for Tata Motors at least going forward with the JLR brand.
Yeah, you know, I think today's been a day when shareholders have been cheering management positions and key management hires and announcements, and PB Balaji there. But in terms of Tata Motors, and if you compare to the rest of the four-wheeler pack, Neerav, Ashar, I want to get your view on this. Where do you think a Tata Motors stands?
I think this new leadership is definitely welcome at this point of time. It seems to be a challenging phase for the company at this point of time. There are a lot of global headwinds, and as you rightly pointed out, growth has been stagnating as far as JLR is concerned. The valuations have been under pressure, and of course this new acquisition which is being considered, that is the Iveco, that is also putting pressure as far as the stock is concerned. So I think we expect the stock to face challenges in the near term. I think it is better to stay away from the stock at this point of time till we see some meaningful recovery and some visibility with respect to the tariffs.
Neerav, we'll leave it at that. Thank you so much for taking the time out and being with us, though, and giving us your thoughts. Really appreciate your time. Gaurav, the trading in some of these auto names has been rather insipid. Tata Motors is off the highs of the day. Escort surprised on the margin front, but still the stock not doing anything. What do you make of some of the movers?
So, Neeraj, when we talk about these stocks, let us first go a little back towards the index itself. If you look at Nifty Auto Index, that has been trying very hard to witness a 12-18-month breakout, but it has been failing to do so. And a lot of that is getting translated to individual names as well. That is one of the reasons why we are not seeing that much of active trading interest in many of these names. So, same is the story with Tata Motors. If you see, it's been trading in time correction, whether you look at the daily charts or the weekly charts. I don't see on a very immediate basis, I don't see any spike sort of coming in. There are no days when the volumes are picked up or the stock has tried its full might to come out of the range. So on that premise, I think this is an avoid. On the other hand, if you look at the daily, weekly charts or you look at the monthly charts on a larger time frame, Tata Motors has witnessed a very strong breakout retest, multi-year breakout retest. So I am extremely bullish on Tata Motors for long-term perspective. But when it comes to trading perspective, then I think it is always best in the current scenario. You go for the stocks that are giving breakouts. You make 4-5%, 10%. You take the money out. That is the only way that one can approach trading in these markets.
Okay. Stay on with us, Gaurav. You know, the other story that we're tracking this afternoon on NDTV Profit is the questioning of Anil Ambani at the ED headquarters in Mumbai. Now, he went in at around 11ish. So the questioning has been now on for several hours, at least 4-5 hours and counting. Shrimi Chaudhary joins in with more details. Shrimi, what's the latest that you're hearing? Yeah, can't quite hear Shrimi. Okay, we seem to, Shrimi, sorry, we can't hear you. We can't hear you, so we're going to try and get your audio. And I think you can hear us, but we can't hear you. But we do know that there was a lunch break which lasted for some time, and then that questioning then continues. So it's a grueling questioning that we have seen, and of course you're seeing the stocks react. R Power, etc. is all down at this point. Shrimi?
Can you hear me?
Yes, we can. Go ahead.
Yeah, so what I was telling and what we are picking at this point that, interrogation is underway, and after a, brief lunch break of 30 to 40 minutes between 1 and 1:30, and in fact, a couple of question is what ED officials asking at this point, and some of them is actually, his involvement in this entire case, and I would like to just underline those questions here because those are important, that whether Anil Ambani, or senior executive aware of the financial irregularity which ED flagged during the investigation and the search operation, etc., and the evidences which they collected indicating towards 17,000 crore of illegal loan fraud. And the second important question they are asking on whether he personally influenced or authorized anybody to sign any document on the loan approvals is what ED is trying to collate information on. Also, they are asking the fact that whether any deliberate attempt were made to default on payments of all these loans when companies were have capacity to pay back to banks. And of course, on the point that the quid pro quo which has emerged during the probe between Yes Bank and ADAG group of companies, that how the Yes Bank loans gone to Reliance and come back again to the Rana Kapoor family offices. So that kind of kickback, not just with the Yes Bank and the number of bankers now under radar, we have been reporting about 12 to 13 banks ED is going to question and summon, that whether the credit due diligence were followed or not, the timeline of default, etc., and the recovery action taken by those lenders when actually the default happened. All those questions are currently being asked by the Enforcement Directorate, and in fact all these statements are getting recorded, both audio and video, and it is very important here because under PMLA all those statements are permissible in court, so you can't really alter or make changes in those statements unlike any regular police complaint.
Right.
So that is going to be very crucial, that whatever statement he is giving is going to be clearly go in the court. So we are tracking this story as the questioning progressing.
Okay, we'll stay with those updates with you, Shumi, and this can be long drawn. So let's, keep an eye on how many hours this takes, and what happens at the end of it also becomes very important. Could be more than one day of questioning. So all of these details have to pan out. Shumi Chaudhary there with the latest. But meanwhile, we have Gurmeet Chadda joining in, Managing Partner and CIO at Complete Circle, on our conversation this afternoon. Gurmeet, always a pleasure to have you on, and thank you so much for coming in. What do you think is the main concern for markets right now?
I think obviously today's reaction is more to do with the social media interaction President Trump had, and I think we'll have to probably start living with it. Assuming we were to also get a good FTA, even then on a ad hoc basis, you can keep expecting tariff as an instrument for negotiation, and I think at some point of time market will start discounting it as well. I think to me the bigger concern is the earnings not picking up the way it should, and I think once the earning picks up and comes into double digit, all of these issues automatically will be put to rest. Reason is once that happens, even the FI sell-off will at least stop, if not flows come back, because if you see it's persistent selling, and it's been, if you remove couple of weeks in April and May, other than that last year or so, this is almost like a systematic withdrawal plan. Without any trigger, 2,000 odd crores, and with trigger maybe 5,000-6,000 crores per day. So I think the earnings need to come back, and I think the government also need to get urban consumption back. I'm a little disappointed in terms of measures not being taken in terms of GST cuts and some fiscal stimulus, because RBI alone cannot do the heavy lifting. I think they've largely done what they could. Perhaps they'll do something more tomorrow, but some fiscal stimulus has to come from the government. Through large ordering, through some GST cuts. I think that is what is missing in the market.
Yeah, I don't know if there is a worry on the FIS situation as well before agreeing the dole outs, because I think a large defense capex announced as well. So could that be interesting? Now, Gurmeet, just a follow up before we take in the closing strategy from Gaurav, and which is around this earnings piece that you spoke about. Do you think the markets are pricing in a 5-6% earnings growth currently, or if it were to be a 5-6% earning growth year, then do you reckon that the market should be lower from 24,500 odd to maybe 24 or 23,500 or 23?
I think it's more, Neeraj, around high single digit, like 8% types, maybe 8.5%, 9%. Anything less than that, maybe another 2-3% can correct or time correct, which has been the case now for at least for this quarter. Also, if you see, Neeraj, if you divide that, you're at 21 times, let's say, and if you divide the earning at 7, you're at 3 peg. And historically, FIs haven't come at 3 peg. They've always come more closer to 2. And even price book, if you see, it's more closer to 2.5, 2.7 is when we see FI flows. So either earning needs to pick up or market needs to correct 10%, or the third scenario is time correction, which is what is playing out. But I think on technicals, for example, and I'm not a technical guy, I see a lot of pockets getting oversold. I see a lot of banks being oversold. I see a lot of defense stocks getting oversold because the lumpiness of the business. I also see even IT, to me, IT services looks way oversold to me. So there are few pockets in the market, and this will be a very grinding market. This is that fifth day of the test match, Neeraj. You need to preserve more right now and keep looking at opportunities. I've been saying this for a while. Have some long duration bonds, have some more gold also in the portfolio. This is a year, if you survive and even get high single digit or maybe early double digit, I think it's a job well done.
So how do you get a high single digit at the very least? From viewers' point of view and from investors' point of view, they've been asked to manage expectations, I think, for a second year in a row now, pretty much. Almost a year, about 18 months odd. So now as the expectations are being even further managed, how do you even make that mark of a single high digit? What do you pick?
So I think, as I said, good stock selection in some part of the portfolio. Maybe you can be like a 2/3, 1/3 between equity and fixed income and gold. If you see the 10-year right now, it's about 630, 640. My sense is the terminal repo rate would be closer to 5, which means about 50 to 75 bips softening of yield, which is there, which translates to almost 4-5% mark-to-market gain. So you can actually make double digit also in the long duration bond. I also think gold will find more favor with central banks with the way all these trade negotiations and bullying tactics are happening. I think US Treasuries, once you see sub 4 yields, there's a lot of unwinding which will happen from the non-US investors as well, because a lot of them are sitting on accumulated losses on long duration US Treasuries. That money can flow back to gold and emerging market bonds. So I think if you be a little more balanced this year, I think you can still make that high single digit, or maybe if you're lucky, early double digit.
Okay. Gurmeet, I want your take on fertilizers as well, but let me just get this report in from Varsha first. Fertilizer stocks have seen a sharp up move in today's trade, with counters such as Chambal, Coromandel and RCF buzzing. Varsha is joining in to tell us why.
Well, thank you for that. So yes, all the many of the fertilizer stocks are buzzing. Now this is on the back of volume, good volume we have seen in these stocks. Then we start with Chambal fertilizers, wherein if you see the 30-day average volume stand at around 4x. Now this is followed by RCF, Fact and Coromandel International. And let's talk about the how were the Q1 FY26 earnings for these fertilizer companies. Now we all know that we had a good monsoon this year, and these all fertilizer companies benefited from good monsoon in Q1. Starting with Chambal fertilizers, if you see, they've seen an improved top line and healthy operating performance, and there was a better sales volume and price realizations. And if you see, the revenue was up 15%, margins were at 13% versus 15% last year, and net profit was up 22%. On the Coromandel International, if you see, the quarter for the company was very good. Now they did beat expectations. Strong operating leverage was seen from manufactured phosphatics. If you see, revenue was up almost 50%, EBITDA was up 55%, net profit was up 62%, while margins were at 11% versus 10% last year. So overall, all these fertilizer stocks are actually buzzing based on volumes as of today.
Okay, thanks for that, Varsha. So, interesting movers there. I couldn't find too many reasons, but Gaurav Bisa, any thoughts here on fertilizer stocks? I mean, if you like anything on the charts at all?
Many of the stocks had moved up already, and one of our favorites, have always been Chambal fertilizer. for the simple reason that it has been an outperformer throughout. So if somebody want to probably nibble into that, I think Chambal Fertilizer is one that can be focused on. Look at the volumes for the last 3-4 days, above average volumes, and on the cusp of giving a consolidation breakout. The moment it sustains 570, I think the next hurdle would be at least 70% higher. So that will be one stock that would be on my radar.
Okay. And Gaurav, any sorry, okay, I'll come to you for your closing strategy, but Gurmeet, any thoughts on fertilizer stocks?
So Neeraj, we like Coromandel, and for a while now, almost 500 crore PAT in Q1. First time probably I saw 7,000 crore kind of a top line. Also continues to do strategic acquisitions. They increased their stake through the overseas subsidiary in the BMCC almost to 71%. They're also signing the DAP deal with Madden in terms of supplies from Saudi on diammonium phosphate basically. And a lot of backward integration also happening, and the company is really spending a lot of money in even R&D there. And I think the rural economy is showing very early signs of recovery. So a lot of the crop protection names, even some of the two-wheeler names, ancillary names, farm equipment names, water pumps, etc., I think will surprise in next couple of quarters.
Okay, Gurmeet, thanks a lot for joining in today. Gaurav, quick 20 seconds. Any BTST or STBT calls? Quick 20 seconds.
So HL would be on my radar. A good breakout on hourly charts. One can probably play for 4670, keeping the stop loss at 4520.
All right, thank you so much, Gaurav, Gurmeet, for joining us today. You're ending, I would say, with a whimper. At the very least, it's not a big push or a push down. It's a very range bound kind of trade. Pull up the intraday actually, because you're going to end about 65 odd points down in the green. You stayed in that entire range. A bit of a peak during closing, but nothing really to look like the markets were in honestly any kind of recovery mode. So it has been a dismal kind of day. Let's pull up the heat map very quickly just as we go into closing in that last minute or so. IndusInd has held up. Titan coming to the fore as well in trade today. So is Trend. You've seen Tata Group stocks performing quite consistently on the Nifty recently, and that is coming in as well. SBI Life doing fine. Maruti not bad at all. Bharti Airtel was firing through the day but has come off its highs. Adani Ports, RIL, Infosys, so a lot of heavyweights here at the bottom rung, and which is why you're seeing a bit of a drag. Let's pull up Nifty contributors, in fact, while we're at it, and see how that stacks up overall. You're seeing the private banks and Reliance Industries pulling the index down. ICICI Bank, HDFC Bank, RIL, a day before the interest rates are paused, as is being widely expected. We don't know if there's another surprise. Remember, there was one last time. You're seeing banks doing not that great. In fact, pull up the sectoral indices, and my guess is you'll see Nifty Realty there as well with some amount of pain. Oil and gas stocks have taken a bit of a tumble, and this was bound to happen with this pressure and this intense scrutiny of India's crude imports, how much is coming from Russia, etc., etc. Big announcement on more investments on the BrahMos, which has kept defense stocks going up. Nifty Auto coming up because of what we've seen with Maruti. But as we wrap up, let's see the advanced decline ratio as well, if we can, and see how that paired out. So you see that widening towards the end. Not the greatest of close, and no real sight for a sharp recovery of any kind tomorrow. Tomorrow is going to be another day that we'll have to wait and watch. In fact, let's take a look at some of the cues that you should watch in tomorrow's trade. The biggest one, of course, is the RBI monetary policy outcome. Is everything now going to be left to Governor Malhotra to lift the market moods like last time? Might be too much to expect. He's already front-loaded all of the action that you can expect. Canada's balance of trade number will be out. US balance of trade number will be out. But make no mistake, our monetary policy and what he says about growth becomes key. You have dividend action as well, some of those companies on your screen that will take place. Earnings which are going to come from now on till tomorrow. Bharti Airtel, watch out for that. And that stock was up in pre-earnings in trade as well. Britannia, Lupin, Torrent Power, those are some of the companies that will actually come in this evening. As far as tomorrow is concerned, there are some big numbers out there. Divi's Lab, Bharat Forge, Bajaj Auto, Trent. Watch out for all of them as well in tomorrow's trade. So should you for Hero Moto, Raymond as the other one to watch out for in trade today. I just want to pull up the broader markets, the gainers and losers, before we wrap up the show. We've talked about earnings for tomorrow already, but on the BSE 500, if we can look at what the top gainers and losers were, and you'll see a clear pattern there. A lot of impact because of results, but fertilizer stocks coming up towards the end of trade. That was up there. Godfrey Phillips continued to be the star performer right from the get-go, thanks to numbers and a lot of action over there. Triveni Turbine has been suffering since the start of trade as well. You might be seeing some tariff impact on a well-spun living, and that's the reason this has been under pressure. So a mixed sort of bag there. This is now turning into a market for the smart pickers. And there doesn't seem to be any indication right now that you'll see major action, at least till the RBI governor's speech starts at 10 a.m. tomorrow. But do join us back tomorrow morning on what your setup for the trade should be. We'll be back here with the entire team. Till then, thank you so much for watching India Market Close.
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and
Good afternoon, viewers. You're watching Market Express and I'm Malika Mishra. Let's dive straight into the show.
It was a largely tepid Tuesday on Dalal Street. Benchmarks ended the day in the red. The Nifty shut shop below 24,700, recovering just a tad bit in the last 30 minutes of the session. Sensex closed in the red, shedding over 200 points. Most sectors ended the day in the red, with oil and gas and pharma leading losses. FMCG and realty were also on the back foot. Meanwhile, defense and auto remained resilient. The rupee also closed 14 paise weaker against the US dollar, closing at 87.66 a dollar. Siemens Energy delivered a robust Q1 FY26 with consolidated net profit surging 84% YOY, driven by a 20% revenue increase. EBITDA rose 59% to 340 crore, with margins expanding to 19%, fueled by the power transmission segment's strength. New orders nearly doubled, reflecting strong domestic and export demand. The company announced a 280 crore capex for high voltage switchgear expansion at Aurangabad, boosting capacity. The order book stands at 15,100 crore, ensuring revenue visibility. Azad Engineering reported a strong Q1 FY26 with consolidated net profit surging 78% YOY, driven by a 40% revenue increase to 137 crore. EBITDA rose 46% with margins expanding to 36%, aided by lower material costs. The energy and oil and gas segment grew 42% and exports, comprising 88% of revenue, rose 39%. The order book exceeds 6,000 crore, bolstered by deals with GE, Vernova and Rolls-Royce, ensuring strong growth visibility. Godfrey Phillips India reported a 56% YOY increase in Q1 FY26 consolidated net profit to 356 crore rupees, despite a 26 crore exceptional loss from closing its 24/7 retail business. Revenue rose 36%, driven by a surge in cigarette and tobacco revenue. EBITDA grew 25%, though margins dipped to 23% due to higher raw material costs. The board approved a 2:1 bonus issue with a record date of September 16, 2025. IndusInd Bank gets a new boss as Rajiv Anand steps in as MD and CEO from 25th August. His appointment comes amid a governance crisis and leadership vacuum. Anand brings 35 plus years of banking experience, including a long stint at Axis Bank. His top priorities include rebuilding trust, fixing microfinance issues, and driving growth. Citi maintains a sell rating on IndusInd Bank with a target price of 765 rupees. Rajiv Anand's appointment as CEO adds credibility amid leadership churn. His 35 plus years of banking experience is seen as a stabilizing force. Key focus areas include restoring stability and improving return on assets. NK maintains a reduced rating on IndusInd Bank with a target price of 700 rupees. Rajiv Anand's appointment is seen as a positive shift, but near-term risks remain. Challenges include asset quality, margins, and rebuilding leadership credibility. Clarity on long-term strategy may take time as Anand steers the bank's turnaround. Kaynes Technologies subsidiary, Kaynes Circuits India, signed a non-binding MOU with the Tamil Nadu government on August 4, 2025 for a 4,995 crore investment over 6 years. The investment will fund new manufacturing facilities, including greenfield projects and capacity expansions in Thoothukudi, producing advanced components like 74-layer PCBs, HDI PCBs, flexible PCBs, and wire harness assemblies. The state, via guidance, will provide financial incentives, subsidies, and regulatory support. The move, creating 4,700 jobs, aims to establish Thoothukudi as a high-tech electronics hub alongside VinFast's EV plant. BEML, a leading defense PSU, has secured a 282 crore order from the Ministry of Defense for supplying indigenously designed HMV 8x8 vehicles, enhancing India's military mobility. Additionally, BEML signed a non-binding MOU with TUTR Hyperloop, an IIT Madras incubated startup, to co-develop India's first indigenous Hyperloop system. BEML will serve as the manufacturing partner, while TUTR leads design, focusing on high-speed pods using maglev and LIM propulsion. The order book stands at 14,610 crore rupees. Bosch reported a stellar Q1 FY26 with standalone net profit soaring more than 1,110 crore, far exceeding the 509 crore estimate, driven by a 556 crore exceptional gain from selling its video solutions, access intrusion and communication systems business to Keyunity India. Now, revenue rose 11% YOY, EBITDA grew 23%, with margins expanding to 14% from 12% earlier. The mobility solutions segment up 14% to 4,024 crore, led growth fueled by power solutions and two-wheeler demand, while consumer goods grew 9%. Marico's Q1 FY26 results with 24% revenue growth and 9% volume growth drew bullish brokerage reactions. Goldman Sachs raised its buy target to 800 rupees, citing industry-leading volume growth and a value-added hair oil turnaround, though copra inflation delays margin recovery to FY27. Jefferies also lifted its target to 850 rupees, emphasizing sustained growth over margins. Morgan Stanley, cautious with an equal weight rating and 674 rupees target, noted short-term margin pressures but an intact growth strategy. Antfin has fully exited Paytm, selling its remaining 5.8% stake via a $454 million block deal. Now, the exit marks a steep $2 billion loss for Antfin, which once held nearly 28% in Paytm. Paytm's shareholding pattern shows rising DII interest and falling FII ownership. Retail investor count has dropped while institutional reshuffling continues. Sona BLW posts a weak Q1 FY26 with revenue and profit falling YOY. Rare earth magnet supply issues delay order ramp up, impacting EV segment. Brokerages maintain buy rating, citing long-term potential and stock correction. Family dispute remains a background overhang amid operational challenges. And Godfrey Phillips posts a strong Q1 with net profit up 56% YOY to 356 crore rupees. Robust volume growth drives top line. Cigarette and tobacco segments shine. EBITDA rises 25%, though margins dip slightly to 22.7%. Board approves 2:1 bonus issue. Record date set for 16 September. Aurobindo Pharma posts a mixed Q1 with revenue up 4% YOY, but missing street estimates. Lower US and API sales dragged margins and EBITDA, which fell 1% YOY to 1,603 crore rupees. Net profit declined to 10.3% YOY to 825 crore rupees, impacted by weak gross margins and higher tax. Despite muted earnings, the company declared a 4 rupee interim dividend. Record date is the 8th of August. Yatharth Hospital delivers a robust Q1 FY26 with consolidated net profit soaring 38.3% to 42 crore rupees from 30.4 crore rupees year on year. Revenue rose 21.7% to 258 crore rupees, driven by a 9% increase in average revenue per occupied bed and 61% bed occupancy. EBITDA grew 20.2% to 64.5 crore rupees, though margins dipped slightly to 25% from 25.3% due to costs from new facilities in Delhi and Faridabad. The stock climbed 2% today, reflecting confidence in Yatharth's expansion and super specialty focus in North India. Adani Ports delivered a robust Q1 FY26 with consolidated net profit up 7% YOY, surpassing the 2,985 crore estimate. Revenue grew 21%, beating the 8,768 crore forecast, driven by logistics 2 times growth and margin segments 3 times growth. EBITDA rose 13%, though margins dipped to 60%. Cargo volume increased 11%, boosting domestic market share to 28%. Net debt to EBITDA improved by 1.8 times, aligning with FY26 guidance. And SEBI is expected to take more action on the Jane Street case before issuing its final order. Indian exchanges have shared ongoing trading data related to Jane Street's activity, suggesting the investigation is widening beyond bank Nifty trades. The US firm has requested more time to respond, while SEBI may carry forward additional directions. Jane Street remains cautious, holding off on high volume trades until the final verdict unfolds. And India's market regulator, SEBI, has created a special task force to crack down on potential market manipulation by high-frequency trading firms following the controversy involving Jane Street. This move marks SEBI's new walk-the-talk movement. It signals tougher oversight of expiry day trading and advanced algo strategies in a market share where retail losses skyrocket despite booming volumes. And SEBI is gearing up to reopen regional offices in 8 cities to tackle localized frauds and boost investor awareness. Sources tell NDTV Profit this move will help SEBI carry out faster searches and inspections on the ground, especially in smaller cities where frauds often go unchecked. The new offices will come up in Chandigarh, Jaipur, Guwahati, Lucknow, Bhubaneswar, Hyderabad and Visakhapatnam as well as Bengaluru. The plan is to increase SEBI's reach and act more swiftly in protecting retail investors across India. And Reliance Group Chairman Anil Ambani is being questioned by the Enforcement Directorate at its New Delhi office. The questioning is linked to alleged bank loan frauds worth 17,000 crore rupees. The ED issued summons to Mr. Ambani on August 1st after going through records of 50 companies and speaking to more than 25 people over the last 3 days. Sources say that Ambani is not allowed to have a lawyer present during the questioning, which is being recorded on camera. And Jaguar Land Rover has appointed PB Balaji as its new CEO effective November 17, 2025. Balaji, currently the group CFO of Tata Motors, becomes the first Indian to lead the iconic British luxury car maker. He will succeed Adrian Mardell, who is retiring after more than 35 years with JLR. His elevation signals a shift which is part of Tata's strategy to bring more homegrown leadership to its global subsidiaries while steering JLR through its EV pivot and renewed branding efforts. BSNL has signed a landmark MOU with Numaligarh Refinery Limited in Assam to deploy India's first 5G captive non-public network in the refinery sector. The private network delivers ultra-secure, high-speed connectivity exclusively for NRL's operations. It will enable the use of advanced tech like industrial IoT, augmented and virtual reality, real-time analytics and digital twins. Officials say this initiative showcases industrial sector digitization in India, supporting the nation's Atmanirbhar Bharat and Digital Assam goals. A new report from the Pehle India Foundation shows that Diageo India added nearly 49,000 crore rupees to the Indian economy in the last year. It also supported around 6.5 lakh jobs across sectors spanning agriculture, logistics, tourism, packaging and more. The study highlights strong social and environmental efforts too. 97% employee satisfaction, nearly 99% renewable energy use in operations and CSR programs reaching over 1 lakh people. BP announces its largest oil and gas discovery in 25 years off Brazil's east coast, a game changer for the energy giant. Now, this field, spanning 300 square kilometers, could anchor a major production hub, boosting BP's crude output. This follows BP's strategic pivot from renewables, with billions redirected to fossil fuels to restore investor confidence. India's Ministry of Defence is set to approve a major acquisition of BrahMos supersonic cruise missiles, bolstering the Indian Air Force and Navy. The order includes BrahMos air-launched missiles for the Tamil Nadu-based Tiger Shark Squadron and ship-launched versions for frontline destroyers and frigates, following their proven impact in Operation Sindoor against Pakistani air bases. With extended range variants nearing 800 km and the hypersonic BrahMos 2 in development, this marks one of India's largest single orders of the Indo-Russian missile fully built in India. Kher Ganga in Uttarkashi's Ganga Valley faces catastrophic flooding after a cloudburst submerging the Dharali market and surrounding areas. Rising waters in Dharali Kher Ghat have caused widespread damage, with 50 to 60 people reported missing. Army, police and SDRF teams are deployed to Bhatwadi for urgent rescue operations as the region braces for more heavy rainfall. NSUI's massive protest in Jaipur at Shaheed Smarak, backed by Congress leader Sachin Pilot, demanded the revival of student union elections in Rajasthan. Tensions flared as police used water cannons to block the march to the Chief Minister's residence, with Pilot among those sprayed. Now, minor clashes erupted between NSUI workers and police, highlighting the growing interest over delayed elections. On the eve of the 6th anniversary of Article 3 370's abrogation, Jammu and Kashmir Chief Minister Omar Abdullah downplayed speculation about statehood restoration. He said he expects nothing major to happen. Abdullah clarified that his comments come from a gut feeling and not from any official communication from Delhi. In a 12-minute virtual meeting, Mamata Banerjee reshuffled her party's Lok Sabha leadership. She removed Kalyan Bandyopadhyay as chief whip and replaced veteran Sudeep Bandyopadhyay with her nephew Abhishek Banerjee as the party's Lok Sabha leader. The meeting spiraled when spirited criticism targeted coordination issues, prompting quick resignations and a broader leadership revamp. Despite tension between party MPs, she emphasized unity and reaffirmed the party's commitment to strategy ahead of upcoming elections. M&S workers unleashed chaos at Yes Bank's Mount Road branch in Nagpur, slapping an employee and blackening his face over a loan dispute. The uproar stems from the bank's seizure of a JCB owned by Indrajit Baliram Mole, who defaulted on loan installments. Furious M&S activists stormed the branch, escalating tensions in a protest against the bank's actions. And India has issued a sharply worded response to US President Donald Trump's warning of increased tariffs over Russian oil imports. The Ministry of External Affairs defended its energy strategy, calling the targeting by the US and EU unjustified and unreasonable. And tensions between the US and Russia have escalated again. Russia has officially pulled out of a key nuclear test ban treaty with the US, blaming recent moves by President Donald Trump and NATO's growing pressure. Moscow says the decision to exit the pact was forced by Washington's actions, especially the deployment of nuclear submarines. The US is launching a 12-month visa bond pilot that could require business and tourist visa applicants from certain countries to pay refundable bonds up to $15,000 before getting entry clearance. That includes nationals from countries with high visa overstay rates or weak vetting systems. The bond set at $5,000, $10,000 or $15,000 is refundable if visa holders follow the rules. The program starts around August 20th and applies only to B1 or B2 visa seekers. A chikungunya outbreak has swept China with over 7,000 cases since July, hitting Foshan city hardest. The mosquito-borne virus causing fever and crippling joint pain has prompted COVID-style measures. In Foshan, patients are confined to hospitals under mosquito nets, discharged only after testing negative or a week-long stay. Authorities have released 5,000 larva-eating fish and imposed fines for stagnant water. Common in South Asia and Africa, chikungunya is a rare disease in China, but the CDC's Level 2 alert warns travelers to take precautions. Hong Kong reels from its heaviest August rainfall since 1884, with over 350 millimeter of rain by Tuesday afternoon, flooding hospitals, schools and courts. The deluge, linked to a stalled monsoon, crippled the Pearl River Delta's high-tech cities, with 20% of flights cancelled and rivers at risk of bursting. Videos showed torrents turning Hong Kong staircases into waterfalls as authorities urged residents to seek shelter amid ongoing severe weather. And Brazil's Supreme Court defies US pressure, orders Bolsonaro's house arrest. Brazil's Supreme Court orders house arrest for ex-President Jair Bolsonaro, accused of plotting a 2022 coup despite US sanctions and tariffs. Justice Alexandre de Moraes, sanctioned by the US Treasury, cites Bolsonaro's violation of court orders, including seeking Trump's interference. The move escalates tensions as Trump imposes 50% tariffs, calling the trial a witch hunt. And what a finish at the Oval. India scripted a dramatic 6-run victory over England in the 5th test, levelling the Anderson Tendulkar Trophy at 2-draw. Mohammad Siraj was the hero, delivering a fiery 5-wicket haul, including a match-winning Yorker to dismiss Chris Woakes. England, needing just 35 runs on day 5, crumbled under Siraj's spell, with Prasidh Krishna's 4 wickets sealing the collapse. Shubman Gill's gritty leadership ensured a historic series draw. And in a shocking move, Bengaluru FC, one of India's top football clubs, has indefinitely suspended salaries for its first team players and staff, including legend Sunil Chhetri, due to uncertainty around the Indian Super League's 2025-26 season. The club cites an ongoing deadlock between the All India Football Federation and Football Sports Development over the league's future. And Mohit Suri's Sayyara, starring Ahan Pandey and Aneet Padda, soars past 302 crore rupees in India, but hits its lowest daily collection of 2.5 crore rupees on its third Monday. The romantic drama, which earned 172.75 crore in just a week and 107.75 crore in the next week, faces stiff competition from Mahavtar Narsimha, son of Sardar 2 and Dhadak 2. Despite the dip, Sayyara remains a blockbuster with projections of 325 to 350 crore rupees by the end of its run, proving newcomers can dominate Bollywood's box office. And with that, viewers, it's a wrap on Market Express, but do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and
Market closes lower after Trump intensifies his tariff threat. Nifty closes below 24,700 with Reliance as a top dragger for the Nifty. Sensex loses more than 300 points. Most sectors end lower. Rupee closes at 87.8 against the dollar, 14 paise lower compared to its Monday close. Enforcement Directorate grills Anil Ambani in the 17,000 crore loan fraud case, asks him if he or his senior executives were aware of or involved in any irregularities and if the loan defaults were deliberate. IndusInd Bank gains close to 2% after appointing Rajiv Anand Managing Director and CEO for 3 years, resolving accounting concerns with regards to derivatives and the bank's microfinance book are the key responsibilities that lie ahead for him. SEBI likely to form a specific division to look into manipulation by high-frequency trading firms like Jane Street. Meanwhile, exchanges submitting regular data on Jane Street activity across indices to SEBI as the trading firm prepares its reply to regulators' notice. SEBI mulls ways to reduce volumes and volatility in options trading. Sources say the market regulator aims to bring fortnightly or monthly expiries instead of weekly. Cloudburst in Uttarkashi leads to flash floods in Dharali village. At least 50 people missing with several houses swept away. Hello and welcome viewers. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest updates on markets as well as national and international news, so stay tuned. Trump's fresh salvo on tariffs weighed on the market sentiment as the benchmarks closed lower. Nifty ended below 24,700 and Reliance contributed the most to its fall. Most sectors finished in the red. Let's go across to my colleague Harsh to wrap up the day's market action.
Well, it's a tough day for markets, frankly, and we've given up all of the gains we've made on Monday, or nearly all of it that we actually made on Monday, and that's what's really standing out, that this market is not going anywhere at this point. We were 1/3% lower where the Nifty is concerned, and not too bad, given that some of the heavyweights, especially on the Bank Nifty, you talk about an HDFC and ICICI, all of which closed in the red, and they pressured markets to some extent because they are heavyweights. Reliance also was the other one which closed in the red and which kind of pressured the index. So when you pull out the contributors, that's what you'll likely see. That's the tilt you'll see with regard to where contributors is concerned. And now let's talk sectors, and even within sectors, plenty of pockets there which were facing some bit of pressure today. And auto, the Nifty Bank, I did speak about 0.5% lower on the Nifty Bank. You also saw pressure coming in pharma. So some of those names did see some bit of pressure today, which kind of overall pressured the markets as well. The breadth too wasn't exactly favorable. 5:9. We had just about 5 advances for 9 declines. So nearly 1:2 the advance decline, and that too kind of built pressure on the broader markets. The broader markets largely closed in line with the Nifty, 1/3% lower on the Nifty small cap, around 1/5% lower on the Nifty mid cap as well. So broadly we tilted towards the negative. The one key positive from all of this is, if you look at the range on the Nifty, it was a very, very tight range, narrow band in which we've traded in all through the day after that initial spike where we fell. So apart from that, it's been a fairly range bound day, and we see a marginal recovery right at the end. So maybe that's just the silver lining in all the grey that we saw today. But broadly, that's how it's played out. Even within broader markets, there was pressure. I did speak about the advance decline, and a lot of the tilt is towards stocks which are declaring numbers, especially disappointing numbers, where stocks are really being beaten, and where the numbers are okay, we're seeing good traction on some of those counters.
Right, Harsh. Thank you so much for wrapping the market action for us. But given the prevalence of market uncertainty and global disturbance, how difficult is it to measure risk-reward and execute profitable trades at this time? Let's hear in from Ashwini Agarwal, founder and partner at Demeter Advisors, on this and more.
There are a lot of events which are shaping up the market. So on the downside, I mean, you have a very weak earnings season playing through. You have, all the noise on the tariffs that is roiling the market sentiment. And lastly, you have a huge amount of paper supply via the IPO and offers for sale that are going on a day-to-day basis. So, there's really all the three factors hitting the market. And on the upside, I mean, one hopes that, what RBI has done by way of improving the liquidity, and there is surplus liquidity of 4 lakh crores in the banking system, what they've done on interest rates, and apparently another 25 basis points might be on the anvil. That might help demand with a lag as the year progresses, but that's just a hope. I mean, as of now, there are no signs that consumer demand is anything to write home about. So yes, it's a very, very challenging situation, both on the downside and on the upside. My sense is that, the correction that we have seen in the last 3 to 4 weeks probably limits downside to not more than 5% from here, but I'm just kind of sticking my neck out, and it could be a lot more. Who knows? Depends a lot on how the US does from here.
And the Enforcement Directorate is currently questioning Reliance Group Chairman Anil Ambani at its office in New Delhi in connection with an alleged 17,000 crore worth bank loan fraud linked money laundering case. Sources say he will not be allowed to have a lawyer present with him during questioning, and the entire questioning session will be recorded on camera. Statements recorded under Prevention of Money Laundering Act are admissible in court. My colleague Shrimi is now standing by at the office with more details. Shrimi, what do we know so far about this case?
Yeah, so, it's been 5 hours, Enforcement Directorate grilling Anil Ambani, and in fact, this is after a brief lunch break of around 30 to 40 minutes, and the ED officials resumed the questioning again around 2 is what indication we are getting. And the key question ED asking at this point, the major questions include that whether he has been or his senior executive aware about any of the financial irregularities which flagged by Enforcement Directorate during its finding, the search operation, etc. The other question he's been asked on whether any personal influence is there related to its decision to loan the ADAG group of companies getting loan, and that is what ED also pointed out. ED is probing here 17,000 odd crore of illegal loan fraud. And the third important point is being asked from the Anil Ambani on the kickbacks, the allegation of the quid pro quo, where the Yes Bank has sanctioned and disbursed loan to Reliance, and it came back to the Rana Kapoor's family offices, and that is what the kickback and the quid pro angle ED is questioning on those lines. And in fact, other than the bank guarantee and the arrest which has been made in the Orissa-based entity, the businessmen who actually kind of executed and facilitated the entire fake bank guarantee to secure that government tender for Reliance is also something being asked. But the important aspect is that all these statements are getting recorded, both audio and video. That will be straight presented to court. There won't be any alteration or any changes, because whatever you state under PMLA, that will permissible in the court, unlike any usual police complaints. So but the crucial point which is also emerging, that so far Anil Ambani has said that he is not aware of the many transactions which ED is talking about. In fact, he is saying that he is not aware about the documents ED is presenting in front of him. He is also talking about that the key executives of his is actually taking care of the entire operations, financial operations. So he is not really kind of aware about many facts. But ED is countering those claims and presenting the papers and the evidences in front of him, saying that this is the paper you signed. So what you have to say on that? So the cross-questioning is underway, and as things progress, as the questioning progress, because it will go on for some more time, is what sense we are getting. So clearly we are watching out that, and we keep updating you.
Shrimi, thank you so much for that. As Anil Ambani and the ED are sort of in a cross-questioning session. We will continue to get you a lot more updates. Thank you so much for joining us from the ground. And moving on, viewers, the leadership at IndusInd Bank enters a new era with seasoned banker Rajiv Anand set to take over as MD and CEO from August 25 for a 3-year term. An asset management veteran and former deputy managing director at Axis Bank. We bring in Vishwanath Nair to give us more perspective about this one.
Yeah, I mean, Rajiv Anand does have his work cut out for him. There's a lot that he has to do once he jumps in to the chair on the 25th of August. But let's take a sort of a broader look at who Rajiv Anand is and what his job is looking like. So Rajiv Anand, of course, he's an asset manager who turned full-time banker a few years ago, and now he's going to lead IndusInd Bank from the 25th of August. His appointment is effective for 3 years, so 2028, after which we'll know whether that appointment is working or not, and the RBI will then extend his appointment at the bank. He also retired early, just this week actually, the 3rd of August. He retired early from Axis Bank. At that point in time, it was not clear whether this was for this IndusInd role or not, but now we're finding out that is the case. Now, I was looking at his professional journey between 2009 and 2013. He was the CEO of Axis Asset Management. In 2013, then he became the president of the retail banking division at Axis Bank, after which he was elevated to executive director role for the retail business. This is the first time he enters the board at Axis Bank. And then in 2021, he was elevated to the deputy managing director role, which he held till he quit only in August of 2025. His career started at HSBC. At that point in time, he was a currency trader. Since then, he's worked at ANC, Grindlays, IDFC, and Standard Chartered. All of these roles were linked to asset management businesses of these banks. Now, looking at the challenges that face him, right, once he takes over at IndusInd Bank. The bank is currently facing a lot of challenges, and these are on multiple fronts. The first of which is, of course, the derivatives accounting, which is what came out back in March when the then CEO of IndusInd Bank came to the public and said that there was an issue at the bank. After that, more disclosures came in, and then microfinance business also came into the picture. There as well, there were a lot of issues as far as IndusInd Bank is concerned. Governance concerns have been repeatedly happening there because SEBI in its investigation found out that both Sumant Katpalia as well as his deputy CEO Arun Khurana at the time were dumping their stock before disclosing this information to the public. Sumant Katpalia and deputy CEO Arun Khurana both quit in April after these disclosures came out. The bank is currently, SEBI of course found the evidence of insider trading at the bank. Currently the bank is being run by 2 senior executives who are on the board, and they are running the bank as executing the CEO's role. What are Rajiv Anand's first tasks? Now that is the important bit. Currently, his first task is to ensure that there is a credible and trustworthy management team. Remember, the bank doesn't have a CFO, the bank doesn't have a treasury head, an internal audit head just quit last week. So all of these positions are very, very important for a bank. They need to be appointed. Secondly, he has to rebuild trust in the bank's microfinance business, which is the big sore point for IndusInd Bank. He also has to reorient the growth strategies at IndusInd Bank, because those are key to ensure that the bank continues business as usual and becomes a stock favorite again. He has to ensure that commercial vehicles and gems and jewelry lending, which are core businesses of IndusInd Bank, are reinvigorated, and those businesses can focus on delivering growth. And finally, he has to ensure that there are new areas of growth that he needs to focus on, which is housing finance, a fairly new business that IndusInd Bank started only about a year and a half ago, and they need to deliver. Rajiv Anand and his team have to deliver growth on that front.
Right. Thank you so much for bringing us a snapshot of who Rajiv Anand is, what challenges lies ahead for him, and a lot more, Vishy. But it's time for an NDTV Profit exclusive. In the wake of the Jane Street controversy, SEBI will create a specialized division to investigate potential manipulation by high-frequency trading firms. We have my colleague Charu now joining us with more details on this.
The Securities and Exchange Board of India is mulling to sort of create a group or a division of one of their most qualified employees or officials to look into the manipulations caused by high frequency trading firms. Now this is going to be a department or a division in itself, and it is going to look into Jane Street issue at first or any other related party issues at first, but it is going to be having a more permanent position where they will be looking at such manipulations by foreign foreign entities or HFT firms later on. This is going to be a group of people who are highly qualified and are going to be from different other departments of the regulator. Currently, we also know that due to the enhanced scrutiny that is on Jane Street, it is sitting on major trades, holding back from doing any major trades for now, and has also sought more time from the regulator to give their reply or response to the proceedings that are going on.
Right, Charu, stay with us. SEBI is also mulling ways to reduce volumes in options trading. Sources say SEBI committee is to meet on the 19th of August to discuss key details on reducing volumes. What do you have on this one?
So the market regulator, Securities and Exchange Board of India, is currently looking at ways to reduce volume in option trading segment. Now, one of the ways in which they are trying to do it is to encourage activity in the cash market instead. Now, again, coming on to how they are planning on doing it is recommending to the Finance Ministry about how to, they can go about reducing the STT on cash market transactions. Apart from that, they are also, suggesting that the fortnightly or monthly expiries instead of weekly expiries can be brought in, which is leading to some of the impact on stock exchanges as we are seeing right now. Apart from this, there has also been recommendations to reduce margin requirement in cash market segment. Now, these are some of the changes that are being explored right now. Nothing is set in stone, but we also know that the SEBI committee, the Secondary Market Advisory Committee, SMAC, is also going to be meeting on August 19 to deliberate further on this issue and come out with some concrete details. So we'll keep the developments flowing. That's all we know for now.
Right, Charu, thank you so much for bringing us those details. But as far as the Indian economy is concerned, will RBI cut rates again, or will Sanjay Malhotra hold rates steady? All eyes now will be on the RBI MPC meet tomorrow. Poll of economists say that rates are most likely to be held steady. Vishwanath Nair joins in with more details on this.
Right. So what we do know at this point in time about the monetary policy is that there is a majority economist sort of viewpoint that the RBI and the MPC are going to hold rates. That is true. However, what you need to also understand is that the voices on the other side, which are expecting a rate cut, are not that silent. Actually, the breakup is quite strong. If you were to look at 10 economists that NDTV Profit has polled, 6 of them believe that there is going to be a rate pause. There's going to be a pause by the MPC. 4, however, still expect a 25 basis point rate cut. So the 60-40 ratio is not that small if you were to look at what historically these breakups have been like. If you were to look at the stance change, now remember that the RBI about 2 policies ago had come up with a neutral stance, and it is expected, however, majority of the economists once again are expecting that the status quo will remain, that neutral stance will remain. However, 4 of them still believe that there is likely going to be a change. The RBI might become more easing in its approach. Monetary easing might make a comeback on as far as the monetary policy stance is concerned. Just taking a look at where the macro indicators are at this point in time. Just look at where the June CPI inflation is. The retail inflation is about 2.1%. That's a historic low. And it's at the lower end of the RBI's tolerance band. Remember, 4% is a target, but plus or minus 2% is a tolerance band. So at 2.1%, it's at that lower end. And the July CPI is further expected to moderate. So that is going to put some amount of easing as far as the Monetary Policy Committee's discussions are concerned. Bank credit growth. There again, the June credit growth is at 10.2%. June is when the RBI made that 50 basis point massive rate cut, and since then a lot of banks have been cutting down their credit growth, have been cutting down their interest rates to boost that credit growth. However, that's still not showing in the numbers. A year ago it was about 13.8%, so that's 10.2% is still quite low. If you were to look at where the GDP numbers are, the Q4 GDP number coming in at 7.4%, that showed that growth in Q4 was still strong. However, for the full year FY25, that GDP growth is estimated at about 6.5%. So below normal, however, still strong. As far as IIP is concerned, that the index of industrial production is at a 10-month low already. And that's an important indicator because that shows that growth is slowing down, inflation is low, room for rate cut has improved, and that is why you're seeing that breakup when you look at the economist expectations. 4 of them out of 10 still believing that there's going to be a rate cut.
Right, Rishi, thanks for that. Meanwhile, let's take a look at the currency market. Tariff tensions weighed on the rupee as it weakened to 87.8% against the US dollar. The Indian currency came under pressure after US President Trump attacked India yet again for its oil trade with Russia. And Tata Motors announced that PB Balaji will become the CEO of Jaguar Land Rover starting November 2025. He will replace Adrian Mardell, who is retiring after serving as CEO for 3 years and working with the company for 35 years. Balaji has been the group CFO of Tata Motors since 2017 and has experience in finance and supply chain functions in the automotive and consumer goods industries. The board approved his appointment and Mardell will assist with the transition until his contract ends. He has also expressed his commitment to leading the company in the coming years. Balaji, with this, will be the first Indian CEO of Jaguar Land Rover. And Ather Energy announced its first quarter results for FY26, logging a net loss of 178 crore rupees. This marks a slight improvement from the 183 crore net loss the electric two-wheeler manufacturer reported in the same quarter last year. Earlier today, we spoke to Ather Energy's CEO Tarun Mehta, shared that the company's strategy for the future, including plans for capacity utilization and regional expansion. Let's listen in.
We've already acquired roughly under 100 acres in Chhatrapati Sambhajinagar in Maharashtra, which is where installation of a new factory will commence very shortly with the IP proceeds. Currently, we intend to continue our production out of the Hosur facility in Tamil Nadu and also the new facility in Aurangabad. Utilization of a current factory is rising up really fast. As you saw in last quarter's performance, sales grew almost 100% over previous quarter. And at that time, we were at about 30-35% utilization. So you can see the trajectory. In fact, my number one worry right now is that would we hit peak capacity even before Aurangabad goes live? So team is running full steam ahead to make sure Aurangabad, Chhatrapati Sambhajinagar comes live by next year, so that we manage the demand really well.
And Vietnamese electric car major VinFast, that has opened its EV making plant in Tamil Nadu's Thoothukudi, has opened its first Indian showroom in Chennai. NDTV's Sam Daniel sent us this report. Let's take a look.
This is the first Indian showroom of VinFast at Chennai's Tenampet. It's a 4,000 square feet area one, where they have displayed two models, the VF6 and VF7. In fact, the VF6 is a 4.2 meter long vehicle with a battery capacity of 60 kilowatt, and the VF7 is the 4.5 meter long vehicle category with two battery options, 70 kilowatt and 75, with an option to have a four-wheel drive. The price of these vehicles have not been officially announced yet, but VinFast has launched its pre-bookings, and the CEO Asia of VinFast has said the bookings are quite encouraging. In fact, the Thoothukudi plant inaugurated yesterday is the first plant for VinFast outside its home turf, Vietnam. So the company is quite excited. I'm going to get into this VF7 to give you a sense of how the vehicle looks inside. In fact, the Thoothukudi plant plans to roll out at least 50,000 premium SUVs this year, and it has a capacity of 1.5 lakh vehicles every year. In fact, the company plans to turn this Thoothukudi plant into a hub for its exports to the South Asian market.
A cloudburst has triggered flash floods and landslides in Uttarakhand's Uttarkashi district, causing severe damage and leaving 50 to 60 people missing. So far, 15 to 20 individuals have been successfully evacuated by the Indian Army. The flash flood occurred near Dharali village, close to the popular tourist destination of Harshil, with several homes, hotels and shops swept away by the raging waters. And with that, viewers, it's a wrap on this edition of Profit 360. But do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the action.
Hello and welcome. You're watching KYC, and today is going to be interesting if you like turnarounds, because this one could well be a very, very large turnaround if it were to play out. They are penciling in a top line which will likely double in 2 years. It's an established company. We're talking about Balaji Amines, and this could well be the play if all of this plays out in terms of what they are gunning for. Let me first start off with what I want to know. The first thing, what's been tepid and what's keeping a lid with regard to stock price action today is the fact that volume growth hasn't been seen even in Q1 FY26. So can volume start to pick up going forward is the first and foremost thing I'd want to know. And if not going forward, what is the visibility like with regard to volume uptick? Second piece, new capacity. They have put out 2 new plants over the last 3 months, and how and when does it start impacting the top line of the company is what I want to know. Third one, Chinese dumping and destocking. One is Chinese dumping, the other one is destocking from global players. This is where the pressure on Balaji Amines is coming from. How are they dealing with this, and how far are we from a revival on both of these metrics, or on each of these metrics? FY26, what are pricing trends and expectations that we are looking for? FY26, is there a scope for margin recovery? Are input prices looking better, likely, and therefore even if there is no top line tailwind, could there be a margin tailwind we could see? And how confident is the 3,000 crore top line and the 19% margin guidance for FY27 looking at the back of everything that's played out? I'm Harsh Saita. Joining me today is Varsha Chandnani, as always is the case when it relates to chemicals or pharmaceuticals, and therefore I'll hand it in her capable hands to drive us through what the company does. Balaji Amines, Varsha.
Thank you for that. So, before speaking about what Balaji Amines does, let's just focus on what are amines. So amines are chemicals used primarily as solvents in pharma and agrochemicals, and the applications include your solvents, which derives almost 44%. You have pesticides, your animal and feed additives. So these amines are used in solvents, pesticides, and feed additives. Now if I want to talk, so nothing but they are basically solvents, that's it. Now let's talk about the market size. If you see the global...
But sorry Varsha, I am interrupting. What are solvents?
Nothing, you just binding...
It's a liquid. Which ensures that your formulation is derived correctly.
Correct.
If that is the correct explanation.
Yes.
But yes, for the viewer, that's what a solvent is.
Yes,
because
correct.
you say solvents in a very easy fashion. It's slightly difficult for some of us laymen to understand that. Anyway, please go ahead.
Okay. Now, talking about the market size, so a global amines market size, if you see, stands at around $4.9 billion, and top 6 companies control 50% of the global capacity, and we'll see why. And China leads with 60% of global production and consumption. Now, what is the moat and why there are only few players when it comes to amines industry? Number one is it's the amines itself is very hazardous when it comes to transport. It's very corrosive and highly flammable, making transport very, very risky. And so this is one of the reasons why you have only 4 to 5 players in the world. And in India you have alkyl amines and Balaji amines. Now technological expertise, if I were to talk about, limited company possesses technology to manufacture amines. For example, alkyl amines partnered with Western players for technology, but Balaji amines developed its own technology when it comes to amines technology. Now the other point why there are only few players in this industry is this amines require very high capex, and significant investment is being required to set up these facilities. Also when your amines or when your product is being used in pharma, in agro, all these MNCs, they require regulatory approval, or I would say customer validation, and this takes 2 to 3 years of customer validation. So if Balaji Amines were to supply amines to XYZ company, that XYZ company will require 2 to 3 years to check whether the amines produced by Balaji are good enough for them. So 2 to 3 years is the gestation period, I would say, when it comes to amines industries. Also now, so this is basically what amines are and why there are only few players in this industry and what is the moat behind this company. Now talking about Balaji amines, so they manufacture aliphatic amines and derivatives. So you have amines and then you go down, you derive products, you would say value added products or derivatives from those amines as well. So companies make amines and its derivatives. Now for example, talking about amines and specialty chemicals, what they make methyl amines, ethyl amino, ethanol, etc. Don't go by names, these are used in pharma, agrochemical, rubber, pesticides, rocket fuel. Who are the clients for these companies? When you say pharma, you have Cipla, you have Piramal, you have Thermax, you have Lupin, who uses amines from Balaji amines. Now talking about the amine derivatives, let's go one step down. From amines, they manufacture derivatives, and these are used in pesticides, performance chemicals, animal feed, your specialty chemicals, and these are used by who are the clients? You have Sun Pharma, you have Walk Hard, you have Ipca, you have Aarti drugs, using these amines derivatives. Now, a very useful piece of information. One of the challenges that this industry may have or this industry is going through is that customer is becoming a competitor. For example, Aarti drugs is coming out with its own amines facility or amines capex. Your customer is itself going into your product. So this is one of the challenges or one of the risks that the company has. Moving on, if I were to talk about the specialty and other chemicals, there are acetonitrile. You might have heard this number of times, anti-dumping duty on acetonitrile. So these are all the chemicals which are used in your water treatment, in your pesticides, in your pharma intermediates. And if I were to talk about who are the clients when it comes to specialty and other chemicals, you have Indian Oil, you have GAIL, you have Zydus Life Sciences. So overall, if you see, we have amines. What are amines and what are the products when it comes to Balaji amines? So pretty good company when it comes, because only 4 to 5 players, Harsh, in the globe. So, and this company has developed their own technology, the other good thing. Now the other thing is, because of the challenges that the industry is going through, Balaji amines is no exception to this. But also one more thing, very small portion of revenue comes from the hotel business that they cater to, and that's one of the reasons. We'll talk about this while valuations,
Okay.
Their hotel business.
But so they have a single hotel.
Yeah.
Right. And how much of a focus is that with regard to where the business is concerned?
So
Do they focus too much?
No.
Not
So the good thing is, not much capital has been employed towards hotel business, the good thing in the recent years. So that's the good thing. And also the specialty chemicals, we should, we might ask to management, they were expecting IPO for specialty chemicals. So let's see where they are when it comes to
that could be some value unlocking opportunity. But let's quickly look at the metrics that we will talk about when it comes to our Balaji amines. We'll start off with the income statement, the balance sheet, the cash flow, return ratios, shareholding, street cred. There's no street coverage, or rather just 2 analysts cover this counter, and therefore we've excluded that. And then there is outlook and valuation. So we'll speak about all of that. But let me have Varsha start off with the income statement. Varsha, can I request you 2 things? So when you are talking about the income statement, give us perspective. The numbers are already on the viewer's screen. What's happened? And what are the key drags that the business, or the headwinds that the business is facing, that we're seeing the kind of numbers that we are seeing? 2400 to 1400, and doesn't look pretty, right?
Yeah, exactly. So what we'll do is, first I'll just go through how the numbers have been, one thing, and we'll also focus on margins. Look at the margins from 26% to 19%. We'll talk about that also. But first thing is why the revenue numbers or the net profit numbers have gone down drastically. Now this is true across industry. You have global chemical downturn that you're seeing, which has been impacting every chemical company. Now this faced a significant slowdown post COVID-19. This impacted demand across various end user industries, like you have agrochemicals, you have pharma which consumes amines and specialty chemicals. Now the agrochemical sector, which is now the key focus over here, is the agrochemical sector, which is a key user of amines, experienced volatile demand due to inventory destocking, due to China dumping, due to erratic monsoons in certain regions, and due to the pricing pressure because of the dumping and because of the destocking. You had the end product price went down, and this affected the revenue for these companies. So overall, because of the pricing pressure in the overall chemical industry is one of the reasons why the numbers for the Balaji amines and even for alkyl amines doesn't look good. But talking about the margin, so this is where the interesting point is, why the margins have gone down significantly. Look at there. In FY22, the margin were like 27%, which has gone down to 15%. Now, the one thing is, this was clearly evident that 26% won't last even for alkyl amines. Alkyl amines showed margins of around 33-34%, which was not sustainable, as said by management of these companies. Now, why? Because the spike during FY21 and 22 that you are seeing is due to acetonitrile price surge. So the end product price, that is acetonitrile that we were speaking about, a chemical which is used in your pharma and agro, and in water chemical as well, the prices of that product surged. So it surged from 160 per kg to 280 per kg, and this is one of the reasons. And why it surged? Because of the high pharma demand, and this is one of the reasons your margins spiked up drastically. And when the end prices of acetonitrile gone down, the margins have also gone down, coupled with the pricing pressure across industry. So so overall, if you see, the company has not done good, and this is one of the reasons why we are giving thumbs down.
Very simply put, 3 factors: China dumping, some bit of stocking up which had already happened during COVID, the unwind of which hasn't yet happened, and higher raw material prices. Those are the 3 factors why you're seeing what you're seeing on your screen. The profit hit, as well as the top line being hit, as well as the expense line being hit. So all 3 have been hit adversely because of this. Okay, so broadly that's the take. Let's talk about the balance sheet, and now we'll move fairly quickly because we're now behind the most important part of this discussion. The balance sheet, around 1840 crore in terms of equity shareholders funds. We are sitting at around 5000 crore in terms of market cap. So that's the price to book. There's no borrowing on the balance sheet, fairly clean balance sheet per se on a standalone basis. There's no debt which is likely to be taken as well in the future. Maybe to fund some bit of capex, a subsidiary might take on 150 odd crore of debt, which is honestly very, very minimal. So really no concerns. You look at the cash and bank balance as well of 360 crore. There's enough room there as well. So broadly, that's how the balance sheet looks. But the cash flow, Varsha.
Yeah, so cash flow, Harsh, as you in starting you had pointed out that company is doing a lot of capex, and that's one of the reasons the net cash flow is negative, because they've done a lot of investments. So if I were to talk about in 2024 and 2025, the cash flow from investing activities in 24 was almost 274 crore. Then it came to 140 crore. So because companies doing a lot of investments, you're seeing the net cash flow either a negative or very minimal amount of net cash flow with the company. So overall on the cash flow statement, we would give a neutral stance because of the investments that the company has been doing.
And even when I'm talking return ratios, the headwinds you're seeing on the income statement is translating on the return ratio. So we had very, very good tailwind till FY23, numbers reflecting on your screen, 36% ROC. If I push it back to FY22, it was north of 45% ROC. So very, very strong, but it's fallen to 11%. The recovery completely depends on the 3 factors we spoke about on the income statement side. So you want to monitor that. Shareholding pattern, Varsha.
Overall, shareholding pattern, I mean, it's kind of thumbs up, nothing much dramatic there. Promoters' stake has been increased a little bit, that's a good thing. FIIs have maintained their stake at almost 5%, and even DIIs, if you see, has been maintaining that stake. So overall, it's a thumbs up when it comes to shareholding pattern.
Okay, let me take you through street cred. The last 1 month stock is down 20%, last 6 months 12% down, year to date 15% down, 1 year 33% down, but 5 years the stock is up 2.5x, and that's what's driving possible profitability, at least for the longer term investors who are likely to hold on better. So we've given this a neutral. Short term, of course, we've seen pressure. Varsha, both outlook and valuations.
Yeah, so starting about, outlook, so they're targeting 3,000 crores of revenue in 2 years, and with the expected volume growth was 10 to 12%, especially as the new capacities ramp up in FY26 I'm talking about. EBITDA margin expected are 19 to 20%, and the total capex that they're expecting standalone, not considering the specialty chemical, is 200 to 250 crore over the next 2 years, which is already in focus, in progress. Lastly, on the valuation side, if you see, now comparing with alkyl amines, the valuation is at a discount. Now there are many reasons for that, considering the management pedigree, and of course because of the investors' concern about the hotel business, and also the when it comes to the net profit, or when it comes to all the financials, the weak financial that the company has seen. So all these parameters, have led to, I would say, a discount valuations compared to alkyl amines.
Okay.
Now, so company has to prove, for that premium valuations for Balaji Amines, yeah.
Yeah, but the likely silver lining in all of this is the fact that if they do a 3,000 crore in FY27 with a 20% EBITDA margin, that will mean 600 crore in the kitty. That is phenomenal, because that will in itself mean that the company is flushed with 1,000 crore of cash. Not just that, enough to do the very small capex that they are expected to do, and further leverage on the opportunities available. So that's how the rating parameters stack up. We've given valuations a thumbs up only for that reason, with the potential turnaround opportunity which could come about. We'll get a better perspective as we're joined by management. 4.5 on 8 is what this one gets. We're joined by D. Rama Reddy, who's the Managing Director, Balaji Amines, joining us. It's a pleasure having you. So first, give us a perspective on how Q1 has gone for you, and what set up the context for us for FY26. Both in terms of volume, what price trends are you seeing? What should we expect in terms of top line, because you've added capacity? Just give us a quick color on those factors.
Thank you, Ash. See, actually, in spite of many hurdles, you know that the chemical industry and the pharma industry is going in very different windfalls. So we have done par with the last quarter, as well as if you compare with the last year also, the same margins, 19 to 20% we maintained. And actually, there's improvement has started. Last 1-2 months, we have seen that uptake has improved. But again, we have seen some of the volatility because of this tariff news. And second thing, because of the dumping from the China, we have applied for some of the products for the anti-dumping, and also we have learned to live with whatever is available if we are not getting the benefit of anti-dumping. So there's a reason, in spite of all these things, we have made same, and we expect in coming quarters there should be, because as you rightly said, there's some capacities will be coming into the stream. Actually, one capacity has just came about 2 weeks back, 2 to 3 weeks back. That is isopropylamines. That is doing well. And this dimethyl ether, which is plant is ready, but we are fighting for the, I can say the fighting word only, because when we make any product first time in the country, there are a lot of hurdles are there in the approval point of view. We are waiting for the PESO approvals for the storage and transportation of this product, dimethyl ether, because it's an alternate to the LPG. Actually, BAS has already given the go ahead for the blending of 15 to 20% blending of dimethyl ether into the LPG. So we are expecting these should come in this quarter. Then this plant will start. And after this, there are the 2 more plants in the pipeline. One is the N-methyl morphine, again with the new technology we are coming up. And another product which is an old product, acetonitrile, we have taken up the
Right.
dumping up. That is also coming up by end of the year. These two plants will come into the stream. So there will not be much up in this year, but definitely next year, as we said, the 27, there will be definitely, we will reach to the 3,000 crores, what we said in the earlier call.
So Mr. Reddy, hi, this is Varsha this side, pleasure to have you. So you are expecting 3,000 crores by FY26 with 19 to 20% of EBITDA margins, got that point. Also, Mr. Reddy, you were expecting 10 to 12% of volume growth in FY26, and now in Q1, year on year, the volume has decreased. So just wanted to have your view on overall outlook when it comes to volume and of course the pricing trends that you are seeing.
I'll tell you, see, if you look at the consolidated basis, at subsidiary level, we are having two activities. One is the brownfield modification of the plant. The other way is the greenfield expansions are going on. These both activities are taking place. That's the reason nothing is happening in the top line point of view at subsidiary. That has impacted on the total top line, even volume growth also. We have seen marginal last quarter, this quarter, there was about 800 to 1,000 tons increase in the volume growth. But going forward, because one plant we have started and other plants which are gearing up, so we will see as per the our guiding, about 10 to 12% volume growth should be there. And what we have seen in the last 1.5 months, there's an improvement in the margins and pricing. See, the in spite of all these hurdles, we have maintained the 20% of the EBITDAs. We should aim better than this, not if not less than this, we should go better than this in the margin point of view. And as I said, in 2027, not 26, I'm telling you 2027 end, you will see this 3,000 crores turnover definitely because all these plants will be coming to the stream, including the acetonitrile, and some part will come from the subsidiary also. The brownfield will finish by end of this year, and even greenfield also will start by the end of the year.
Trends are you seeing on the destocking side of things? Talk to us about that. We've been talking about this recovery in specialty chemicals for a while now, but that's not reflecting, sir. So give us that perspective.
Because of the volatility, you're well aware, you have seen what is happening every day. Yesterday, Trump said 25%, today is talking different. So this volatility is also giving some doubtful things for buyers. See, I'm selling almost 10 to 15 containers of my material every month to USA. People who bought few weeks back, they are in a puzzle. What will be its duty when it arrives at their doorstep? So these type of volatility is giving some pinch to the customer end. But definitely there is a good days coming for the specialty chemical, because Make in India, what we are talking for the several years, we are all, Harsh, I will be very clear with you, we are creating the capacities, just waiting for the opportunity.
So who bears the tariff? Give us that perspective. Who bears the tariff? What are your conversations with your clients suggesting? Are you expected to do a lower margin on your product, bear some bit of that tariff, or not at all?
No, it should not happen, because earlier there was 0 to it has already come to 10%. There also we have maintained these margins. In fact, the day before yesterday, we were talking to some of the customers, overseas customers in the USA. They were saying that in this 25%, we are not asking you to compensate everything. They are also ready to forego to some extent. And it should be win-win situation. We may go for some 2 to 3% reduction from our price, and they will also going to bear whatever the new tariffs have come.
Mr. Reddy, so talk to us about the greenfield project when it comes to Balaji Specialty Chemicals, number one, and number two. I mean, you were in talks when it comes to IPO of Balaji Specialty Chemicals. So any update on that?
IPO I cannot say right now, because that will be with the hands of the board of directors of Balaji Specialty Chemicals. That only can tell you, but we did not have any discussion on that. Once we finish, as we said earlier, these greenfield expansions, which will be finished by last quarter of this current year, then you will hear more good things about, because sodium cyanide, hydrogen cyanide, based on these two imported chemicals, there are many other products in the pipeline. So you will see, that's the reason I'm telling you 2027 will be much better. This 26 will be only, these products will be adding at the end of the year. But next year, definitely you will see the good. You are well aware that we don't have any standalone basis, any debt, even working capital also we do not have. Even after finishing this also, we don't see that anything will go for the debt in the current financial year for the parent.
Right.
There may be little in the subsidiary, because it depends upon the plant's commissioning. If we take some break in the plant's commissioning, then there also we will not have much of the debt.
Right. Sir, thank you. Actually, that's all the time we have. Unfortunately, would have loved to continue this conversation, but out of time. But very interesting, again, in terms of both guidance and perspective. Thanks so much for coming in and speaking with us. Out of time, from Varsha, myself, everyone who puts the show together, thanks so much for watching.
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the action.
Hi, thanks so much for joining in. You're watching Your Money Matters on NDTV Profit, and usually I attempt to make personal finance simple, easy to access for you. Now, I've decided to step out of the studio today because I'm here to meet the newest authors on the block in the personal finance space. They've recently written a book that makes things even simpler to understand. I know for a fact because I've read quite a few of the chapters. Not all of it. I'm yet to get through cover to cover. I will soon though. I'm talking about Mango Millionaires, and I'm here to speak to the authors that I mentioned, Radhika Gupta, Niranjan Awasthi. Thanks so much for agreeing to do this conversation with me. And I must say, a lot of the references give me ideas of how I need to talk about personal finance because you've made things so easy. But first, before we get into some of those chapters, and I've selected a few to talk about, where did the name come from?
Everyone's asking us where the name came from because I guess it's unique. Came from a movie. I mean, we've talked about it in the book, but it came from the word Aam Janta, Mango People, which I think Saif Ali Khan popularized when I told his wife this in Love Aajkal. Aam Janta, who doesn't want to become Buffett or Junjunwala in their life, but just wants money to work for them, and hence Mango Millionaire. And then Niranjan's younger than me. He's like, this is fun, this is different, and it's a little aspirational. So, Mango Millionaire.
I like that you've not gone with Mango Karodpati or whatever else because it's more achievable. Even a million is 10 lakh rupees. And people, when they're starting out with 5,000 rupees or less of savings per month, they have a realistic goal to work towards. And thankfully, mangoes are more affordable now. But let's talk about some of these aspects. And I have chosen, I will enumerate chapters 3, 4, 5, 6, and then a couple of chapters after. And very interestingly, as you've done quite a bit in this book, you've chosen to have Bollywood references because people understand Bollywood. There is Tararampam, which you're talking about. And first, set the context. Why did you choose Tararampam? Did I say an extra pump? But anyway, for people who haven't watched the movie as well, they should understand it.
So it's broadly a good movie, but also very relevant for a lot of people that we are living our lives today, and we call it YOLO, and everything is on EMI, loan, pay phone. You go for a movie also, you can pay it with a credit card today. So a conscious use of credit card or debt rather is very, very important. And that's a famous action in that movie. He says everything, and Rani Mukherjee asks kahan se aaya, and he says like this. So you don't need to live your money life that way.
Including her engagement ring,
Absolutely.
which was like the memory I had. Like the guy gave me an engagement ring and it's on a credit card.
Okay, so but this is the famous Saif Ali Khan Rani Mukherjee movie in which he's a race car driver and he's got everything on EMIs. And then suddenly he goes into this accident and he loses practically everything. And my producer was talking about this. Oh, the kid is eating from a garbage dump.
The kid is eating a donut from a garbage can.
Right?
It's such a heartbreaking reference of life goes from riches to rags, and then the children have to bear the consequences. And they don't openly, the sad thing about that movie, which we haven't covered in the book, they don't openly talk about money with the kids.
Yes. Okay.
Which is also true of us in India. We don't openly talk about money.
So several things to unpack from that, Radhika. What was the intention? Ultimately, debt is not necessarily a bad thing if you're using it in moderation. But then this is worrisome because in the most recent data, and I did a show last week on this, is that the overdue loans in the credit card space are rising very exponentially, right? So 90 plus days to 365 days, you're talking about a 44% rise in just the previous financial year, which is scary because ultimately people are turning this credit card or debt over. You've written about this in the book, haven't you?
Yeah, and we are, neither of us is anti-debt, I went to school, college on an education loan. I'm not sure if Nandan did. Both of us, I know, have had home loans. So we make the difference between what is good debt, which services your needs. Education is a need, housing, your building and assets, and things that service your wants. So we're not saying, in fact, we have very few extremes in the book. So we're not saying all debt is bad, but we're saying take debt for the right things.
Rate paradigm is something that you speak about. What does that stand for? It's an acronym, and this is easy to understand. So rate, what does it stand for?
So rate is basically it actually gives you an answer whether your debt is good or bad.
Okay.
And how to identify whether a debt is good or a bad? One is first rate of interest.
Right.
If it's high, it's bad probably, because probably you're not affording, or you can't afford that debt, but still someone is giving you, they will charge you a higher interest rate.
Secured versus unsecured.
Or secured versus unsecured. Is there an appreciation possibility for something that you are buying from that debt? So if you are buying a debt for probably education, as an education loan,
or
it helps your career, or a home which can appreciate, it's good debt. Tenure, T is for tenure, and if it's a short-term debt, then it's good. If it's a long-term debt without an asset which is appreciating, or rather it's depreciating, it's a bad debt. So that's broadly, it's a framework, very simple framework, which tells you whether it's a good debt or a bad debt. Anything which doesn't fit in is a bad debt.
Okay. And we're talking at a time when everybody's focusing less on the debt aspect and more on the points, particularly when we're talking about credit cards. People are consolidating expenses, buying stuff for the family, and then paying off that kind of debt. And a lot of times they're not necessarily paying attention to the fact that they don't have that much money in the bank. So that tied with how much do you set aside every month? And you speak about, this is very simple. I follow this myself. I think it's a very, very powerful concept, which is your savings deducted at source, right? So if you say tax deducted at source, as a salaried individual, you don't ever see that money. But why is savings deducted at source such a powerful thing?
So I love that word, because a lot of young people come to us and they say, I don't have any money to save because dinner pe bhi jana hai or iPhone bhi kharidna hai, and of course we have all these wants. And my argument to them is, well, you still pay tax, right? Because the taxman deducts it at source. And what if someone could just deduct your savings and investment at source using something like an RD, an SIP, of course, that's our word. But if you automate something, just like the taxman has, including your savings, then it just goes out before you've had the opportunity to touch it. And that's the whole idea of automating your savings, so you don't have to think every month, this time how much do I save? Because that's a hard thing to do.
It is a hard thing to do. And of course, there is no one benchmark about how much you should save. Ultimately, there is an idea that you should go, if you can, 25, 30, 35%. If you can push it up over the course of the next several years, then that's a good thing. But you start with the bare minimum. Is there something that you prescribe?
So we have put a framework which is 10, 30, 50. Early in your career, because you have very short-term goals, you want to buy a car, you want to go for a holiday, don't stretch too much to save every penny that you earn. Start with 10% in your 20s when you're just starting off, because a lot of your other goals will be taken care of that. Once you get into your 30s, you probably have all your short-term goals covered up. Go for probably 30%. That's bare minimum. You can increase. And once you are in 40s, where probably your ability to earn is highest in your entire career lifespan, go for 50% and plus. So a lot of people, youngsters, are fed a thought that if you're earning, entire money should go into savings, investing. That's not true. That's not practical enough. So we have given this framework, which is 10, 30, 50.
I've also
very
found,
simplistic.
and I get asked this a lot, a lot of people below the age of 27, 28, and saying that, look, it sounds impossible to achieve this, but I say, hey, you will eventually meet somebody, and that person will in all likelihood also be earning, and you can use both of those incomes, and it multiplies whatever you're doing. So but do you write about how you should share some of these responsibilities? You speak very passionately about how women should take charge of their own financial journeys. Do you write about that?
So we don't talk about the book from the lens of women, but we write a book that is accessible to men and women both. I mean, I was in Pune yesterday, and a mother was telling me, she's like, I have teenage children. My son has learned everything about personal finance, but my daughter is not interested, and have I failed as a mother? And it's like, maybe our examples just don't reach out to women. So with films, with food, with things that all of us understand, I don't think women need a pink small cap fund or a pink mid cap fund or a pink book. They just need it to be in the language they understand. My mother read the book cover to cover. And she's never read anything finance first. So I was actually quite happy, and she's giving my father advice which he doesn't like, but anyway. But we do talk about finance in the family at the end, how to integrate family into finance, because both of us believe, we have families, that it is a shared exercise. So how does a couple come together to do this? How do you think about legacy? How do you think about values imparted to your children? I think we talk about finance as a family unit.
Okay. Now, the mode of investment is important to understand, because I think a lot of my viewers are familiar with mutual funds, but beyond that, I'm not, how do I say, I don't have as much ego to say that this reaches out to the length and breadth of the country. I wish that it did. And so more people need to understand about mutual funds, but you've written about it as buying a car or choosing a car, right? What do you want to drive? Explain that concept to me.
So see, broadly today, a lot of people, a lot of new investors are coming in mutual fund. The expectation is that I want to make quick money. Also, the other myth around mutual fund is mutual funds are only equity oriented. Rather, the correct framework to buy a mutual fund is first understand what it is and what you want, right? Probably when you buy a car and you go through all the details, you see whether you want a driver, a chauffeur driven car, or maybe you want to go through Ola, or you want to have your own car. There are different needs of different people, right? Mutual funds, or rather selecting any financial product, is that way. So if you like driving your own car, you can go directly and invest in equities, but you need to spend a lot of time, especially in a city like Mumbai, you need to spend half an hour just to find a parking. So all this practicality, in investing also, you need to see how much time you can give to research. Can you spend half a day researching a stock? If you can't, that's not your job. That's
and the Mercedes
job.
Reference was what? So something or Mercedes, I remember
it's
that one.
Maruti or Mercedes.
Maruti or Mercedes.
So what is that reference? Is it the same reference?
So it's broadly, so Maruti is basically, or Maruti or rather Mercedes, I mean, it's not selecting to currently, I mean, what do you want to, or how do you select a mutual fund? That reference is more to do what do you want.
Sure.
Whether you want to save for a Maruti or a Mercedes, according to that, you plan it.
We also, I think, use it in the context of active versus passive funds. So your Maruti might be your passive option, your store-bought pizza, and your Mercedes might be your high-end option, but you pay more for a Mercedes. Absolutely. So it's not very passive. So it's in that context.
So it could also be a conversation with regard to mutual fund versus other products that you have in this space, right? So you go up the value chain, and ultimately they're there to serve a purpose. And we're talking at a time when you are waiting for your approval for SIF.
SIF, yes.
Right? And we have spoken about it. In fact, Money-wise, the last time we spoke was about that.
It was about SIF.
But it's not for everybody.
Yes.
Like, for example, I would today say that I don't necessarily need a Mercedes.
And which is okay, because if you buy a luxury car, there is a cost of maintaining it. And if it gets a dent, then there's an issue with it. And there are a whole bunch of issues around that ecosystem. So when you buy a SIF, there's a cost of understanding it. And the chapter's title, Choose Your Own Ride, right? Even within mutual funds, there's a myth that it's all equity, it's all simple. We have the range. We run from overnight funds to small cap funds in SIF. You choose your ride.
So speaking of ride, the risk and the ride. This is probably one of my favorite chapters. Are you taking risk for the wrong ride, basically, right? So explain this concept, and I think this is the most important thing for somebody to understand before they venture out into the capital markets, because the expectations and what they eventually get sometimes is completely dislocated.
In fact, we put the risk, I just realized, we put the risk chapter before the return chapter. And I think it's my favorite chapter and analogy too, because I feel we've been taught that risk is a bad thing. Now, if you didn't take risk, you should be sitting in a bank account, right? So investing is about taking risk. It's about taking the risk that's right for you. And what we say is everybody goes to an amusement park. Like my father is a roller coaster guy. He goes to an amusement park and he wants the roller coasters, otherwise he gets bored. My mother is a carousel person, right? She just can't handle the risk of roller coasters. And I think the key in investing on amusement parks is you should take enough risk so that you don't get bored, but you should not take so much risk that you throw up and get dizzy at the end of the day. And that answer could be different for different people. And That's what we try to, and then we give frameworks for taking this.
And this is fascinating because if you think about it, from a physiological standpoint, when you were younger, because of, and you can research it, you're fluid, right? Ultimately, you are able to go on roller coasters that you won't be able to go on 20 years hence. You wish you could, but you just can't. So therefore, your risk-taking ability over the course of the lifetime that you have is definitely going to diminish. It's such a powerful concept. It's getting me thinking right now.
I didn't think of that angle. I don't know if you did, but now Alex has given us a new angle.
It's a very different angle.
It's a good angle. It's an actually good angle.
But tie that to return expectations, because ultimately you delve into products that don't necessarily match with your own risk-taking ability, only because you have not married the two, you have not thought about the two. Is that the biggest problem that mutual fund investors currently face?
Yeah, absolutely, because everyone wants a return what his or her friend has made in maybe some XYZ stock, which he doesn't have any clue about. So hence we've also put a framework, we've called it RRR. Right?
Okay.
You while choosing a financial product, you first look at the runway, what period you want to invest. The second R is risk, how much risk you can take. And third is return. The return comes last. How much return you want? How much is enough for you? Like if you want to save for maybe your child's education over the next 10 years, even a 10-12% return can take care of everything. You don't need to invest probably or expect a return of 20-25%, because in that expectation you will lose your patience, you will take wrong decisions. So probably RRR framework we have put it, and it works well while choosing any financial product, or rather what your expectations are. Setting that expectations are very, very important.
You've spoken about asset allocation and diversify. You can't say it enough times. I wish I could say it more times, but then talk about why this is an issue, because, and you've given a pretty simple example what happened in 2008. 100% equity portfolio.
Mine.
Oh, it was yours?
It was mine. I don't know if you mentioned that was mine. It was mine.
So and you lose a significantly more amount of money compared with a diversified portfolio. Tell me about your story.
No, it's my public, and it's my greatest investment mistake. I got a lot of bonuses on Wall Street in 5, 6 and 7. And I was lazy for a couple of years to invest. And I invested everything at the peak of 2007, 100% equities.
Oh, wow.
And you know what happened in 2008. And then coincidentally, and this tells you the importance of asset allocation, we had to come back to India we wanted to come back to India in 2009 to start Forefront Capital, for which we needed net worth to meet the regulatory requirements. Markets hadn't bounced back. So we actually withdrew capital because we had no fixed income at serious haircuts.
Oh my God.
And that's why I think this whole, and I think in the last few years people have forgotten fixed income, unfortunately. I heard a saying today that large cap is the new fixed income for people, and private markets are the new equity. So people have, just...
No, this is very true.
People have forgotten fixed income.
So, but I think it's more to do with the problem that people are watching large investors. And I will say that we interviewed Vijay Kedia yesterday, and he was saying that I have more cash and liquid equity than I have at any point of time in my history. He was saying 25 to 30% of his portfolio is now in large cap stocks and in cash. So he was talking about it from his perspective, but his manner of equity portfolio creation is going to be incredibly different from the average Indian Aam Aadmi, right? Or Aam Janta, as you point out. But talk about this, right? So why do you say that fixed income absolutely must be a part of your portfolio? I think the reason that a lot of people have been disenchanted by it is purely the tax side of things. And I keep saying it, you shouldn't make investment decisions based on tax.
Yeah, see, absolutely what has happened in last 5 years, people haven't seen negative returns in equity. And I was just looking at data on a 1 year rolling basis. In last 5 years, there have been only 40 days in last 5 years where 1 year return has been negative, which is just 3% of the entire observations. If you go back 20 years, this number from 3% increases to 30%. Now imagine the expectations that people have from equity is very, very high. वो नई बहू आती है उससे जो expectations होता है, it's like that. So it's very, very different. The beauty is market always teaches us the lesson, but in a hard way. People are today talking, okay, people who have invested in last 1 year, their returns are negative, just bracing कि मेरा capital वापस आ जाए. People who have made maybe 10, 20, 12% returns in last 2 years, they are saying, oh, I could have made 20% returns. So the expectations will always be higher. And I think so over the next 1 year or so, or whenever this normalizes, people will start looking at debt. Debt is basically a cushion to your portfolio. It is needed. And tax comes later. Of course, there are efficient way to invest in debt as an asset class as well, in a much more tax efficient way. There are hybrid products which are tax efficient. There are arbitrage funds. 100%. So how do you take that exposure? You should think about it. But just not taking exposure because taxation has changed is a wrong call.
Okay. I mean, no matter how good protein is, and we use the thali analogy, and we've done a thali interview. No matter how good protein is, nobody goes on a 100% protein diet, right?
Very
you
difficult
still have some fat and you still have some other stuff, right? You can be on a high protein diet, so you can be on a high equity diet, that's okay. But on a 100% protein diet, right? And
and speaking of expectations, suddenly I got struck by this conversation that I had with somebody waiting for appraisals, right?
Oh God.
And she said, look, I'm keeping my expectations low. And then when the letter actually came, she was incredibly happy.
Incredibly happy.
Because she kept her expectations low. She's a top performer. She got a good number. And I said, see, there you go. That's a learning lesson. No, I'm not saying that you shouldn't have expectations, but I'm saying that have reasonable expectations. You are a top performer, you're likely going to be paid based on the bell curve, and then India has not done 20% growth, right? So you set your expectations. Okay, closing comments now. When it comes to life lessons that each of you have taken from, you've already spoken about your portfolio and your learning from 2008. What is your individual brand that you've brought to this book? Can you recall things that have influenced the way that you've explained a particular concept, something that has hit you hard beyond what you've just spoken about? Niranjan, can you speak?
It's largely about money because we've seen great days, we have seen bad days. In India, if you have lived through 80s, 90s and 2000, things have changed. I think so. What is most important to while managing money is you should know what is enough. There is a need and there is a greed, but the right thing is somewhere in the between. You can't live a very frugal life. Well, you have to enjoy things as well, but you can't also live life on your debt, right? Everything on debt. So there's a middle way, and I think so that is what we wanted to put out in this book. We wanted to teach people that, or rather, make them aware that there is a middle path. There are no two extreme paths. There is a middle path in managing your money.
One final thought, Radhika, because you've seen how even over the last 5 years, this industry has changed, right? And more people are going direct. More people are choosing to construct their own portfolios. I think a lot of those are listening to you right now. But do you think that more needs to be done on the distribution side as well? Because ultimately, and I was speaking to somebody on the way here, they have 6 hybrid funds, 4 mutual fund schemes of the same mutual fund house in equity, and so it's a completely lopsided, haphazard portfolio. How do we fix that?
I think India has 1 lakh odd registered ARNs. You actually need 10 plus lakh MFDs if you are to cater to the width and length of India. In the book, we talk about the importance of advice, because all of us hear these stories. People doing a 30,000 rupee SIP with 40 schemes. I mean, people buying all the products of the same AMC. And smart people not knowing what the difference between a mutual fund SIP and equity is. So we desperately need people to provide frameworks and simplify. And if I can say this, I was at the, one of the distributors, one of Pune's best MFDs, actually did a gifting of this book to his clients. And one client asked that if we have you, why do we need a book? And he said, despite the book and everything, and I agree completely, you need me.
You should read the book.
You should read the book so that you can ask me better questions.
Yes.
But you still need me, and I agree.
Absolutely. On that note, thank you so much to the both of you for taking the time.
Thank you.
Radhika, Niranjan. And viewers, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in, and do stay tuned. This is NDTV Profit.
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Hello and welcome. Good evening to this special broadcast. We are here to dissect Bharti Airtel's Q1 earnings. Let me take you through the numbers very quickly. On a consolidated basis and on a sequential consolidated basis, the net profit of Bharti Airtel has fallen down by 46%, as you can see on your screen, at 5,948 crore rupees. Revenue has increased slightly by 3.3%, coming in at 49,463 crore rupees versus 47,876 crore earlier. EBITDA also has seen a slight uptick around the same levels, coming in at by increase of about 3.1% at 27,839 crore, and margins have actually slipped very slightly at 56.3% versus 56.4% earlier, and the ARPU currently stands at 250 rupees, which according to industry standards is decent enough. If I had to give you the key takeaways from the earnings, the numbers mostly are in line with estimates. The strong performance was seen in India and Africa on reported currency. Indian business saw a 2.3% jump on a quarter-on-quarter basis on the back of improved realizations and momentum in homes business. Also, net customer additions were at an all-time high at 939,000 in Q1 of FY26 for home business, and smartphone data customers also climbed up at 3.9 million on a quarter-on-quarter basis. To discuss this further, I am being joined by Piyush Pandey, telecom analyst, Centrum Broking. Hello, Mr. Pandey. Thank you so much for joining us on the phone line here. What is your first reaction to Airtel's Q1 earnings? Does it look good? Does it look strong, or is there a backstory?
I would say broadly in line set of numbers. ARPU growth of around 2%, plus they added close to 4 million 4G customers, and postpaid customers also grew by roughly close to 0.7 million. So in line set of numbers, broadly I would say the total customer addition for the India wireless business was slightly below. Maybe they added close to 1.2 million for the India wireless business. That could have been slightly higher. But apart from that, strong set of numbers even in the broadband business, where they added close to 1 million in this home segment. Plus Africa also did well, growing by roughly 9% in number of customer base, with a flattest EBITDA margin. So I would say in line set of numbers, strong ARPU growth, strong addition in terms of postpaid and 4G addition, plus but only India wireless total addition could have been slightly higher, which they reported at close to 1.2 million Q1Q.
Right. Mr. Pandey, I'd actually like to get in your take on the kind of difficulties it is facing when it comes to its Africa operations. While India business of Bharti Airtel looks relatively resilient, what's your take on how it is doing in Africa? Because there's some kind of pressure seen from there as well.
In Africa, generally it has been a currency-led pressures. But if you see in terms of volume growth, so this quarter, the total number of customers grew by almost 9% YoY. So they are seeing good amount of customer growth in Africa business, and ARPU has been sort of flattish. But mostly I would say Africa is something which can be a good driver in the medium to long term, because they still have a growing population with low smartphone penetration. So it can be good medium to long term growth driver. But only in terms of currencies, there have been pressures sometimes. But I think this quarter also they did very well in Africa segment.
Right. Okay. So, Mr. Pandey, let's actually go back and see the net profit, right? The net profit this time on a quarter-on-quarter basis has slipped by about 46%, coming in at 5,948 crore rupees versus 11,022 crore rupees. And to be honest, this kind of dramatic drop was observed because of the one-time exceptional gain that the company had absorbed the previous quarter, and this has been a trend that has been observed with Airtel. So this makes a quarter-on-quarter analysis for a company like Bharti Airtel a little volatile. What do you think would be the right measurement or the right timeline to compare these earnings with, to be fair?
I would say key metrics would be revenue growth and EBITDA margin, because profits have been volatile because of one-off items. So I would say a better would be to focus on revenue growth, EBITDA margin, and some of the key metrics like customer addition, ARPU growth, 4G additions, and basically waste metrics so. So PAT has been fluctuating due to one-off gains or cost. But I think better way to look at it is how they have been doing in terms of customer addition plus in terms of operating margin and growth.
Right. So, Mr. Pandey, because you very closely track the space, I'd like to ask you, with increasing penetration of smartphones in India and with the addition of competition, with the intensity of competition increasing in the telecom space, where do you see Bharti Airtel as a telecom operator standing? What does its position look like to you?
See, if you look at the entire wireless telecom space in India, Bharti continues to gain subscriber market share as well as revenue market share. So Bharti has close to 40% revenue market share in wireless business, and I would say, I think their focus has been more on the ARPU growth. And this quarter also they did the 2% sequential growth in ARPU, which is in fact higher than the growth in ARPU for Reliance Jio. So I would say that strategy has been paying off well, and so they are gaining market share, and in fact led by both growth in ARPU and customer base. So I think for other players, I would say Vodafone Idea it has been just recently launched its 5G based network services, and so in a way I would say with just 3+1 players, the two bigger players are gaining market share and becoming stronger and stronger with every quarter.
Yes, I agree with that. But from an investor perspective, I'd like to ask you, Mr. Pandey, Bharti Airtel has seen cuts of about 5% in the past 1 month itself, and although it has been growing on the charts, I'd like to ask you the valuation that it is currently trading on. Do you think it is justifiable to the kind of financial performance the company has been reporting in the last couple of quarters?
See, valuations might look strict, but I would say for Bharti Airtel, in terms of metrics which we are seeing quarter on quarter, those visibility remains strong. And now I think even Africa are doing well. So Africa was sometimes a drag on the performance. Now with Africa doing well, and their broadband business is doing well. So I would say visibility remains strong in terms of growth and margin. Only thing is valuation remains stressed. But I would say it's a very unique play in terms of sort of like a player which has a dominant presence in the sector, plus digital play as they are expanding into say data centers and all those things, cloud, Airtel Cloud which they just launched. So I would say it might see some time correction, but in terms of growth, the story looks good.
Okay, so according to you, then the growth story of Bharti Airtel looks good from the kind of financial metrics it has reported in the past couple of quarters. However, I'd like to ask you that we have observed a growth in its ARPU as well, where, and ARPU, which is basically the average revenue per user, is a very key metric that is used to analyze the company's standing, especially a telecom company standing in the space. Now that it is up at 250 from 245 in Q4 of FY25, do you think there could be some price hikes in the offing?
See, I do expect another tariff hike maybe by end of this financial year. So probably even with this ARPUs, the ROC profile of these telcos, I would say remains subdued. And just to improve the return ratios in terms of return on capital, these players need one more tariff hike, which we expect maybe by the end of this financial year. It can be something close to 10 to 50% tariff hike, but should be primarily for these higher priced plans. And this time we do expect that lower priced plans might very little increase.
Okay. So then I'd also like to then take a question on its capex intensity. In the past couple of quarters, we've seen Bharti Airtel put in thousands of crores in expanding its network and especially its 5G telecom infrastructure. And given how momentum is currently speeding up in the telecom market, where we have 5G and 6G network, according to you, how would you define the strength of Bharti Airtel as a telecom operator? Do you think it is competitive enough as compared to the other players in the market? And what does the future growth of Bharti Airtel look like to you, especially when it comes to network expansion in India?
See, Bharti has completed most of its 5G related capex, and we do expect that its capex intensity should decline in the coming quarters and also for the next financial year. And I would say in terms of networks coverage, Bharti has close to 3 lakh towers, and that is second to Jio only. So probably I would say they continue to gain market share. It's sort of like a duopoly market in the telecom space, and where I would say stronger players have the advantage of scale, and plus they also have a very strong balance sheet. So they don't have much of debt, and with most of capex behind, I think they are much better placed compared to the bottom two players. Yeah.
Okay. Now, the Indian business of Bharti Airtel was up about 2.3% on a quarter-on-quarter basis on the back of improved realizations and as well as momentum in home business, which means DTH and broadband basically in India. What is driving this growth exactly for Bharti Airtel according to you?
DTH business has mostly stagnated, with very less customer addition. And also, say for this enterprise business, they decided to go away from the low margin segment. So this enterprise business also has seen decline on YoY basis. And apart from that, I would say other two businesses broadband and India Wireless continues to do well. So 2.3% also takes into account your growth from this